going? Can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Woo. Hola.
Sorry, I'm doing a do-si-do over here.
We all matched today. You're blue on bottom.
Yes, I have a blue skirt on.
That's right.
Yes.
That's right. That's right.
It's a blue headband.
Uncanny how that happens. Yeah, blue headband. There you go. There you go. Very nice. Very nice. Well, how are you this morning?
I'm good. I'm good. It's Thursday. We're almost there. We're almost done. We're so close.
I don't want this week to end, to be honest with you. We finally got volatility percolating a little bit.
Oh, we got the Super Bowl this weekend. This week
We do have the Super Bowl. So Monday, who's taking off?
Yeah, it's not like I'm gonna go to bed early. Like it's not like a must watch. Like if it were a Bears Super Bowl, then like, we would all be off on Monday. But
I heard people talking, not here in the office, but outside, how they were taking off on Monday or, going in late on
Good idea.
I mean, it should be a national holiday. Like for no matter what you're doing, like it just should just.
I agree with that.
Yeah,
Why
or have it on Saturday or something. I don't know.
Yeah. Something.
Well, Super Bowl, then it wouldn't be Super Bowl Sunday if they have
It'd be Super Bowl Saturday.
Next year it's on Valentine's Day.
It is on Valentine's Day next year. So.
Ooh, that's going to cause some trouble. That's going to cause some turmoil.
Yeah.
In the relationships with people.
But that's kind of crazy, like how it's gotten so late in February.
Is it just based on it's the first weekend?
Well, because there's more games now than they used to have too. Like there were.
It used to be in January. I don't know. The season's gotten longer.
Yeah.
I don't understand.
I think the season's gotten long. When there was a real Pro Bowl, we didn't have as many games as we have now.
Yeah, they added the 17th game.
Yeah,
so there's that extra game.
Mm-hmm.
Yeah, but I'm like trying to do the math in my head because it's not. Because then, the 14th, that's not the first weekend in February.
No.
So, but I was like, could I get
Even I can do that math.
Could I get a Super Bowl on my birthday?
It could be.
It's 2 days after Valentine's Day, so like in like a couple. I don't even know.
Yeah. I would think so.
We'll be having them in July soon. My birthday. Yes. Yeah.
Sure. Yeah. Back to you. Of
yes.
course.
Thank you. Thank you.
Right back to you.
I am the star-ish of the show. Yes, that's correct. That is
okay.
Correct.
Cool. What'd you get up to last night, Nikki?
Nothing much. We're starting the dive into the weekend activities.
Oh.
Meaning.
Are you going to have people over or are you going to someone's Super Bowl party?
Haven't totally figured that out yet. I have a couple.
Sweetie, it's Thursday.
Is this going to be a couple's Halloween? Halloween.
No.
It's a late night for me. We'll get to that in a minute. I know, more back to me. Is it going to be a couple's Super Bowl?
No. I mean, the couples will be.
Oh, I'm just saying, like, just
35 years old.
No, just the two of you.
Mostly,
I meant just the two of you.
No. So, we're getting the squares going. So I've acquired some fairly large squares. So
okay.
The exposure is getting bigger. If you remember what I told you yesterday.
Yes.
The exposure is getting a little bit bigger. We're starting to dive into how I will be playing this from a showdown slate. So we're looking at captains like maybe a Mac Hollins, maybe a Trayvon Henderson, maybe going into Cooper Kupp. We'll see. We'll see what we're doing there. Some of the bets are starting to get laid out. These are just like.
Are you a prop bet guy?
Oh, of course. Just
okay.
A little taste here and there.
Okay.
You have to really know the game to be a prop bettor. I mean.
No, you don't. You don't have to know like the color of the Gatorade. No, you don't.
I like to do
the heads or tails one is the best odds. Probably
tails never fails.
Yeah, no, they usually do it at like minus 104 or 5 on either side.
Yeah.
Right. They just take the rate.
Yeah. Well, my favorite used to be national anthem overs.
Oh, for the amount of time. Like I think at 2 minutes 30 seconds is like what you're supposed to sing it in.
But that's one of the most fun things to dig into because when you know who they don't really offer it anymore. Like this is back in illegal sportsbook days, but used to look into if they had ever done it before and get like some average times from them.
Sure.
So that was always.
I don't even know who's singing the national anthem.
I don't know either. If there was a bet, I would know who would be singing it, but there isn't.
There you go, because you would have researched it.
Yes.
And had a competitive edge.
Charlie Puth.
Who?
Charlie Puth. We decided Charlie Puth should be a bigger artist.
Yeah.
Line from him.
Don't know who that is.
He is
Pretty
singing the national anthem, and Brandy Carlisle will be singing "America the Beautiful."
Sweet.
I'm going to see if I can quickly get his average.
He makes a bunch of TikToks. Like he's funny.
Oh, you know him.
Yeah.
Oh, okay, cool. Very nice.
Like I can't name one of his songs, but if
That's
you heard
okay.
it.
I have the same type of memory. It's okay. I know you. Go ahead.
Oh, so the over-under is actually at 2 minutes. That's pretty light.
Oh, 2? I thought it was 2. Oh, I have no idea how long the national anthem's supposed
What's
to be.
the average?
Here's a great stat.
Okay.
Some commentary notes a YouTube piano instrumental version of the anthem by Puth that runs approximately 1 minute and 2 seconds. That's pretty.
He's speed singing
That's
it.
pretty fast.
And the rock is regular, the walls were singing air, and then
That
through
average-
the night that the flag was still there.
The average Super Bowl national anthem time has been around 1 minute and 55 seconds.
I have
That's what
no
I just saw,
context
too.
for how long the
Oh.
national anthem's supposed to be. I thought it was like 2.5 minutes.
Well, the
long.
historical average for Super Bowls is closer to 143. So the Super Bowls, they usually
They go
a little
quicker
bit
because,
plus money,
well, no, because like you get the, like you're kind of like,
adrenaline going.
adrenaline going, you're a little nervous.
I'm going to blow your mind. They're not singing live.
Oh, it's not?
They record it. They record the national anthem, and then
Have
they
they done
sing.
that always?
So Whitney
is this world coming to?
Houston.
This is
so
horrible.
Whitney Houston, the most iconic national anthem for a Super Bowl ever. Fight me.
No fight.
She's not singing live like that. She's obviously singing, but they record it beforehand, and she's singing to her track. So yeah.
That sounds fishy.
Does sound good.
There's insider info on that one now. I didn't know
No,
that.
but they've always. But there was like they weren't. I mean, that was what year was that? 92 when she's. I don't know when she sang it, but like it's going
I'm not
back
gonna ask
forever.
Kevin
Like
Costner.
just they always have just recorded it. So
Okay.
okay.
Well, I
Well,
guess
I've got a
I'm
Whitney
shy away
Houston
from that.
reference this morning. If you would like to hear it.
No, back to you. You have some news. What's going on? You can't hold. You even your
So
son
happy. You're
speaking.
so happy. I got a Bobby Brown news.
Okay.
Well, Whitney Houston, Bobby Brown, right? Yeah. Okay. Okay. Saw him last night.
You saw Bobby Brown last night?
And all his friends on New Edition.
Why were you at a New Edition concert in this
to a
year of our Lord
Went to a concert
2026?
last night?
New Edition, Boys to Men, and Tony Braxton
Where?
at the United Center. Me and 20,000 of my closest friends.
I'm so confused right now.
Go underneath your desk to the left there. I brought you a little surprise.
I'm
all the way
so-
down at the bottom in the
I'm
corner.
so confused. Wait, why were you? You were not a middle-aged black lady.
But my wife apparently thinks she is. This was her height. There's two. There's another one underneath there. So
Thank you.
You're welcome. So
Yes.
well, that's the one that I got outside.
I'm so confused.
I'll get to why you're confused. That's the one I got outside
hold
the
this
United
up so you
Center.
can see it,
I got
okay.
it on discount. If you turn it around,
Yes, it has all the dates.
Tony is spelled with a Y instead of an I.
That makes it even more valuable.
So you bought that from the guy on the side.
That's the guy I bought from outside. That's what
Timu Tony strikes again.
That's amazing. That's amazing.
So I thought that one I got on discount, but the one on the bottom there, that one I paid full retail for.
That one's the official
What
merch.
is happening?
Yeah.
How was the
That's the
show? Did you
official.
know any of the songs?
So I knew some of the beats.
Okay.
I knew some of the beats, but you asked how I got there.
Oh, this is cool. I will actually wear that. I love
Of course
this.
you will,
I
yeah.
love Boys to Men. Oh,
Yeah,
that's-
see?
I actually
See?
did see them in
I thought they
concert.
were the best,
Yes.
better than New Edition,
Yes,
to be honest with you. If I had, and Toni Braxton was amazing. I thought she was great too. But you asked, my wife apparently thinks she's a middle-aged black woman.
Sure, sure.
She knew every song. She sang every song. You gotta remember.
You know what? Chrissy is invited to the cookout.
Yeah.
I will invite Chrissy. Chrissy can jam.
She was making friends
Chrissy
with
can do
all
the
of her-
wobble with us, like in the electric slide. Like Chrissy, I
Well,
sing
she
to
was
that.
she was a sophomore in high school when those songs
Sure,
were,
sure.
I was getting married for the first time when those songs were popular. So I didn't know them as much. Like, I mean, like, telephone man. Like, I remember that one.
Yeah.
I remember that one, but I don't remember the rest.
So this is what you mean by where you were like priming the pump for Valentine's Day.
Yes.
Now it all
It all comes full
coming
circle now,
together.
doesn't it?
Yeah.
You didn't have that in your square pool. There's no way.
This was definitely
Literally, like you at a Boys to Men concert. Like, no,
Right.
I did not have you at a Bobby Brown. Like,
Right.
Were you doing the dances too?
Oh, they did
Like,
the
were you
dances
just,
and they had
like,
the pictures.
Doing
which was-
all the.
Yeah, he did that. Yeah, he did that on the microphone. Yeah, that's like, what in bejesus
Is
the name?
my prerogative.
Yeah, no, I don't think he. Yeah, I don't know if they sang that one.
Yeah.
I
I have so many questions.
I know. Me too.
Is there video footage of you?
Had great seats, 8th row or something like that. It was really nice, really nice.
This is the greatest thing that's ever happened on this morning show.
It wasn't the greatest thing for me. It was really hard getting into the United States, but I got very close, which was good.
Yeah.
It started great. I was on the side where my seats were. I walked in. We were right there. The bar was right there. To get the stuff was right there. I mean, it couldn't have been easier.
Yeah.
That was good.
Yeah.
Music was a little 3-hour concert.
Yeah.
So, you know.
Yeah. And sometimes they don't start on time. I will tell
Yeah,
you
they
a
started
story.
ish on time.
I was going to tell you a story about my people. Sometimes.
Oh, you don't have to. I'm
not
familiar with them
start
now. Yeah.
But that's great. That's a late night for you.
I know, it blows your mind, doesn't it? Like,
yeah. I just.
of all the things in 15 years.
I know. Why didn't you wear like a bow tie and like a Philly hat to like?
My wife wears silver shoes, silver gym shoes or something like that. I got to glitz it up a little bit. So,
Okay.
Yeah.
Yeah, there's some people asking if you also did the dance. Followed along with the dance. The YouTube chat is very.
There's just so many questions. Yeah, I didn't know you had this in you either.
Yeah.
You know what? People have been fading me forever. You see, I am the over on the national anthem. Okay, that's
Okay.
right.
That's a surprise.
Wow.
Wow.
That is
Something. It's something.
it is something.
Yeah.
It is something.
I put you on tilt this morning. You got to admit.
My world is rock. Like I am shooketh.
My world was rock last night because I watched my wife sing every song and sing it with her neighbor and dance with the person behind her.
Was she looking at you? She's like, he wasn't man enough for me. He wasn't man enough for me.
She's like, you don't understand these breakup songs were everything for me.
I mean, these are my jams. I have so many questions.
Yeah.
Did you know
me
that
too.
this
Me
concert
too. I told her she got a lot of explaining to do when we get home. What's that?
No.
Because would you have been? You would have gone.
I mean, probably, like, if it weren't, like, a school night, I would, me and Jessica, like, we would have been popping bottles, like,
Yeah. 2 doubles, drinks. How much?
$80.
83.
Yeah, problem.
Good tip. 83. Yeah.
Oh, my God.
Yeah.
2 doubles.
In this economy, the guy outside didn't have a flask that
Yeah,
you could buy.
Should have.
No, you can only sell the waters outside.
Oh, yeah.
Can't bring-
No, no waters this time. Just the T-shirts. With Tony spelled with a Y. I was like, Tony spelled with a Y here, right? He goes, I know.
Oh, you saw it before buying it?
Yeah. I mean, my name's
but I
Tony.
love
I
it.
mean, my
I
eyes
love it
are
even
found-
more. It makes it even more hilarious.
Yeah.
So.
Yeah.
That's amazing.
Yeah. He goes, well, they're normally 20, but I'm going to sell it to you for 15. I'm like, all right, I'll take it. And he goes, don't tell anybody. I go, I won't.
Well, we've come to the end of the road. And we just can't let go. We got a great show for you today. James, did you go? James
should have gone. Yeah, James, did you go?
Yes, I did.
You were there, James?
Yes, I
Oh!
was, and I saw those guys selling those same shirts too.
You thought it was what? What did
You
you say?
saw the guys selling the same shirt.
Oh, did
Wait, so James, you took your wife, I'm assuming, yes?
Oh yeah.
If you went alone, my mind was going to be blown. James, what'd you think?
Phenomenal. Loved it. It was worth every penny.
What did he say? It was
He says worth every penny. Loved
worth
it.
every penny.
Phenomenal.
Yeah, I agree. Watching my wife enjoy herself like that, it had to be amazing. It was great.
I have so many. First, I didn't even know this was like happening, and
I wonder how many other closeted Tony Braxton fans are in this office.
Let's go ask Marty on the trade desk.
Was this like a tasty
Clink,
outing?
Clink.
I know Clink is like
I can see Clink
Motown
going,
Philly
yeah.
back again.
That's right.
Clink is just like doing a little East Coast swing.
Yeah, they played that one.
Yeah.
They played that one.
Oh my God.
So many questions.
So
We have a
good.
great show for you today. My world has been rocked. It is a thrilling Thursday here on Tasty Live at the top of the 8 o'clock hour. Trades from the research team. Maybe the research team went. Maybe Baby Shark and God went together.
Maybe we'll find out when they come in.
But the world's greatest financial think tank is going to present their trade ideas to the bats. That's coming your way at 8 o'clock. And then at 8:40, the man, the myth, the legend, Nicky Bat comes in with
Yes,
the Johnny trades. How
yes,
many trades
yes.
you got today, Nicky?
We're going to do 3. We try to do 1 bullish, 1 bearish, 1 neutral trade every single session. Once a week.
Perfect. I love it.
Yeah, one of
Any
each.
earnings plays or maybe?
Maybe we'll look at Amazon.
Okay.
That's a good call.
Okay.
Maybe we'll look at Amazon. Yeah.
Then,
Amazon has earnings after the
Yep.
post.
Yep.
then 9 o'clock, we have a market measures why liquidity matters.
We know why.
We know why.
We know why, but we're going to talk a lot about it. We're going to look at similar products and just compare the bid-ask spreads and just kind of talk about slippage and just how, you can look at 2 exactly the same assets. Why would you do the less liquid one over the other?
Okay.
So we're just going to kind of talk through the bid-ask spreads, liquidity, cost, on each of your trades. That
Great.
sort of thing. Yeah.
Our research team's really been stepping it up lately. Check out our archives if you missed any of our research segments. But we also have live from the trade desk at around 9:30. Quentin in the house counting down the top trending tickers. And we got Glenn G Money. Was Glenn
do.
there last night?
We'll find out. If Glenn was there, my mind's going to be blown.
Yeah. So good.
It's just so many questions just all around. But that is our run of show for today. So let's get this show on the road. Do you want your daily dose?
Sure.
Give me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news. Coming across the wire. Our leading story. Top story. Just in.
In today's headlines,
Breaking news.
All right, everybody. Today is, my mind is still just like scrambled. No, today's a thrilling Thursday. It is February the 5th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
He just mentioned Amazon's going to be the one on everybody's lips today. There are a few others. I know you're going to talk about the ones we had last night and maybe even this morning, but Amazon.
Reddit, Roblox, Bloom.
Yes, yes. I have a
Affirm
Roblox
is in
position.
there. Barrick Gold.
Ooh,
Maybe with gold.
So maybe that's kind of in play right now.
I like gold.
Iron, which is another one of the data center energy plays that people kind of mess around with. Couple names.
There's stuff happening.
There's a
Stuff
few.
happening.
There's stuff
Yeah,
happening.
That's a good way to put it. Stuff.
Well, here's something interesting. These hot S&P 500 stocks show where investors are heading as they straight up run away from tech. I have a short list. It's not the full list. You can, of course, consult the full list online. But 92 of the S&P 500 stocks touched 52-week highs yesterday. Not saying that they closed at 52-week highs, so don't come at me. But some of the names, this is interesting. Caterpillar.
Yeah, that.
Chevron. So basically all the oil stocks, so like Chevron, ConocoPhillips, Exxon, they all touched 52-week highs. Ciena, which we'll talk about, CIEN, hit a 52-week high. Coca-Cola hit a 52-week high. John Deere, like I said, FedEx, General Motors, Johnson & Johnson, McDonald's, PNC, Verizon Wireless, U.S. Bancorp, Southwest Airlines hit a 52-week high.
Finally, your sister is outperforming us.
But it just shows
I
you.
got her at a half. She hates me.
It just shows you where the money is moving, and I didn't know if
Yeah.
you had thoughts. So kind of
It's-
Caterpillar and Deere and FedEx is weird, but like McDonald's and Coca-Cola, but also all the oil companies.
Yeah, I saw 2 things. Cat, I saw a great stat that it has averaged double-digit returns in both directions every year for the last 20 years, which is very random. I would not have expected that to be something that is kind of volatile.
Right.
Really. The other thing, and I mentioned this with Chris, I kind of talked with him a little bit about that. this RSP, which is something Chris and Ilya kind of talk about, which is an equal weighted S&P index. So instead of having like Apple and Google be like, 50%, it weights everything the same.
Oh, interesting.
It actually hit a high yesterday.
Oh, okay.
An all-time high on RSP, which is rare. I mean, rare for that to be
It's the
like
first time.
Well,
I'm just teasing. It's
to have that sort of spread of like RSP at highs and the Nasdaq down 5 or 6 or 7%. It tells you this story of like, it's everything but the big dogs that are like moving higher.
It's weird, wild stuff.
It's
Yes.
I just looked at this list and I was like, what is going on in the markets? But fun. So opportunity abound if you want to get in there. Oil prices fell last night as the U.S. and Iran agreed to talks easing conflict concerns. Brent crude futures fell $1, around 1.4% to 68.47. That seems like a lot. Still
seems like a lot. Oil is trading at just under 64, down $1.15. It was about 50 cents lower than that, but it is at its recent highs from January 9th till
oil volatility
February.
Relatively high.
Yes, 64.
You said you were going to do a trade in there yesterday, did you?
We did. We did an iron condor there. I have 2 iron condors, and we're in a decent spot here. We're, I guess, a little bit of short delta, which will help, but we are wrapped around the 75 handle on the upside and the 57, 58 on the downside. So just playing for the range that it's been in.
Right.
Really. No huge directional bet here. Just short vol.
Hey, it's Thursday, so let's check in on the ag sector. Soybeans rally on positive trade news. Soybeans were in rally mode following a mid-morning update from the president as contracts closed with front month gains of 25 to 27.5 cents. I believe corn was also up, maybe small yesterday. But let's talk about all the softs.
Small relative big moves in soybeans. I mean, soybeans a 1%, almost a 1% move on top of big move.
No, I was saying the move in corn was small, but the soybean move was pretty big.
Yes, it's been going sideways for forever. It's 1% today, which is 8.75, which is a big move in a product that probably has, I'll tell you exactly, has about a 3 cent expected move. I mean, it's not big. So
sure.
Good job on that. I didn't look at soybeans.
Yeah.
But the beans moved. I guess President Trump called President Xi, and they're.
Yes, I saw that.
It was an excellent, actually not good. It was an excellent
call. It was an excellent.
Yes, you updated that live on the show
call.
From one of your peeps in the YouTube chat.
Are you doing anything in the softs, Nikki? I know Liz and Jenny, I think, were doing something.
I don't
currently
yesterday have a position there. I'm actually relatively light on futures. I'm short natty gas, neutral oil. I got a little bit of long vol. I got short the Dow yesterday because it was up 0.6% versus everything else that was down. And then I've got some long crypto, which ouchie poo poo.
We'll talk about that. Well, let's talk about that right now. Bitcoin sinks yesterday after Treasury Secretary Scott Bessent says the U.S. government can't tell banks to bail out crypto. Man, we're not getting a Bitcoin bailout. Bitcoin broke below 73,000 per token Wednesday night, extending losses from the earlier session after, like I said, the Treasury Secretary suggested the government would not bail out crypto.
We've broken below the 69,420.
Welcome back, Diamond Hands. How was the moon?
How was the moon? You've crash landed back on Earth here. The crypto in general has looked awful.
It does not have. It's been a march stair step lower. If you're not hitting bids to get out, I don't know if you're getting shorted. I mean, I guess you could trade the futures, which are quite big to be getting short them at these levels, which we haven't seen in quite some time on the downside. I mean, this has just been like watching paint dry to the downside.
Yeah, and it's
no velocity.
And it's been so much quieter than like when we had the FTX kerfuffle, where everything was going to zero and it was bankrupt and it was fake, everything. So this has been a wild move.
Walk with me here, but Bitcoin headed to lows, but McDonald's at highs. Like,
Perfect.
it's like we got a new workforce now.
Yes,
So,
well, yeah. They must be good employees.
right? Yeah, they're like, okay, well, come on over to the Golden Arches.
Yeah.
We have something for you to do.
Always room for you at the Golden Arches.
Yeah, that's right.
324-ish, up around 50 cents, even with the market a little bit lower this morning.
What, McDonald's?
McDonald's, yeah, flirting with highs. Yeah.
That's what I'm saying. Like, someone should study that.
Yeah.
Let's get to the earnings from last night. Alphabet announced Wednesday that their CapEx is gonna double up. Yeah, they're gonna spend $180 billion on and the street lost its damn mind. But Google, the owner of Alphabet, Google, whatever you want to call it, did report earnings, and the earnings were actually good, but really all anyone cares about is just how much they are going to spend and just how much as a sector. They exceeded expectations on revenue, earnings per share, and cloud. And I learned, fun fact, the average person watches 20 YouTube shorts a day.
Wow. That's incredible.
Yeah.
Wow, that is incredible.
Yeah.
Wow.
Follow tastylive on YouTube.
Yeah. Check out our YouTube
So
channel.
our YouTube channel. What'd you do in Google?
We had no risk to the downside. I mean, we were thinking and trading for the idea that there was kind of a call option here, a short call, like that Google was, the upside was 1x, the downside was 2x. So
Okay.
if
Take the words right out of my mouth.
yeah,
I totally
so
agree.
that was kind of how we were playing and looking at this trade. And so I had a bunch of butterflies that were higher. We did a call ratio spread.
The stock has not had a downtick. I mean, it was a pretty bold-ish call.
And it was up. It got to 340-ish.
Right, it closed at 330 and change.
Yeah.
It got up to 340 and after the number. It got down to 310, I think I saw quickly. It's around 320, down around $14. But again, the numbers from my peeps who like to look at the numbers
Off the charts.
Off the charts to the upside. If you closed your eyes and you got these numbers, you would think this stock would be up a gazillion.
Sure.
But it kind of goes to what we were talking about of like, and NVIDIA has felt like it's kind of been in that realm where the market cap and the size of these companies, like how much bigger can it get now?
Right.
It might be bigger in 5 years or 10 years from now, or it probably will be. But right now, like how much more could you expect from this company? If Google's up, 10%, it's $400 billion.
Right.
I told you they're gonna build AI data centers in space.
It's happening.
Clock it. No, I'm saying,
Elon's moving on
Google Project Suncatcher.
They're all gonna do it.
They're all gonna do it.
Yeah.
I'm doing it.
Space. We're all going to space.
But yeah, it's I don't know if I blame Google for the down move today, but maybe that's some of it.
In other earnings news, Qualcomm reported fiscal first quarter earnings that beat expectations, but the company's forecast came up short because of the global memory shortage. The company's smartphone customers who buy their own memory chips and pair it with Qualcomm's processors and modems are closely watching inventory. They announced revenue of $12.25 billion versus $12.21 expected.
Numbers we haven't seen since April of 2025. Stocks are down about $14 or so, 134. That doesn't tell you the whole story. For the year, it's gone from 180 now down to 135. I mean, that's a big 50-point move.
There are a lot of stocks that have reversed an entire year of gains.
Yes.
Like they're going back to April, the tariff tantrum. That there are a lot of these stocks are back to those prices quietly while the market is basically at all-time highs.
Sure.
It's been a wild rotation.
I'll tell you just got to get into Caterpillar.
And
Caterpillar, John Deere, and Southwest Airlines.
Yeah.
ARM holding shares fall as their licensing sales miss estimates. ARM shares fell around 8%. They did forecast fourth quarter revenue below Wall Street estimates. What did you do in ARM?
We had a small upside play here. It's probably going to be okay.
ARM was down 8. It's down 3.
Yeah.
Right?
Oh, that's great then.
What a little bit of a bid here.
But ARM and Qualcomm, both of them, we didn't want the downside risk. We didn't want to sell the puts and have the tail risk to the
Because they've done the exact opposite of the stocks that we just previously mentioned, like the Googles of the world.
Yeah.
So, I mean, that was kind of like a little bit reversed, downside 1x, upside maybe 2x, you know what I mean? You get blowout numbers on ARM, but ARM down $3, well inside the expected move.
Yeah.
Again, numbers that you probably haven't seen since, not the 90s and $90 number, like $80, $90 number you had in April, but definitely the lowest end of the range. Started the year around 140 and it's 100. So on a percentage basis, just about the same kind of move, maybe even a little bit more.
They brought in revenue of $1.24 billion for the quarter, which was up 26% for the previous year. So there you go. Turn it around. Snap shares rose on fourth quarter earnings that beat on sales. The Snap's sales in the fourth quarter rose 10% year over year, while net income was $45.2 million, which was up 400% from the $9 million it reported a year ago. The social media company says that first quarter revenue will be in the range of $1.5 billion to $1.53 billion.
I'm not sure what this person was looking at who wrote this article. I got Snap basically unchanged.
Yeah, it's up like 10 cents.
Well, when I pulled it last night, it was higher.
Oh, maybe.
Got it to like 620-ish, something like that.
Yeah, well, it was. I won't go back to April on this one because it'll hurt your ears. But this was $8 a week ago.
Yeah,
and $6 today, up a dime.
I'd like to report I'm up $10 per 100 shares.
My man.
Sosnoff fashion.
Love it. I love that for you. That's nice. That's real nice.
Beautiful.
Hey, hedge funds made $24 billion shorting software stocks so far in 2026, and they are increasing their bets. Software companies, the market value of the industry as a whole has decreased by $1 trillion. It's not great, Bob. Hedge fund sources wouldn't comment on specific names where big short bets are being increased, but said the focus appears to be on companies that provide basic automation services for clients that can now easily be replicated by these agentic AI factors. I guess there's an ETF. The tech software ETF, IGV, down 8% this week, down 21% for the year.
Yeah, it's right back to where it was in April. I mean, like this is kind of the lows. It's reversed. I mean, it's gone from 115 to 80. One of the biggest holdings is Microsoft too. So I guess you consider that software too. But
Microsoft hasn't had an uptick.
No, Microsoft looks horrible.
Yeah, it started the year around 480. It's going to be 400 and change, 405, 406
but
down.
This is the time where you start to nibble on some longs. When you get these, because these headlines come out because now they're like taking the position off here.
So do you prefer the ETF for all this software annihilation? Or are you picking like individual like stocks like a Adobe or a Salesforce or Figma even, like the worst since their IPO? Look up FIG.
So Vecchio was asked that same question. I have done individual names in like some of the most liquid kind of biggest names of the group. I've done Microsoft. I went into Snowflake. I've got some ServiceNow. Palantir is kind of in that basket. So that's an interesting question. IGV is a little bit harder trade. It's a little bit less liquid. And I feel like Microsoft is probably your best bet for this if you were to pick one. But it'd
be the biggest animal.
Biggest animal. Rather than picking winners and losers, IGV probably the less volatile.
This FIG looks sick, though. I mean, this is
FIG looks horrible.
Yeah, I mean, it has not had an uptick. It has earnings February 18th, and markets are okay. 5-10 cents wide. It's only a $20 stock, so you could place your bets in there, but it has not had an uptick.
Okay, well, we will see what is going
on the horizon
to happen. I guess stocks, companies called TerraWolf and Asana in the ETF have the biggest short bets against them currently. So do with that what you will. Hey, one good piece of news is that Broadcom and NVIDIA shares seemingly rose last night on Google's CapEx announcement. Broadcom shares rallied after Google reported earnings, and then NVIDIA's stock also gained. I think Broadcom's, still holding on to those gains this morning. Broadcom shares up 6% in extended trading.
NVIDIA unchanged that I
It was
saw.
up a couple. They
Yeah, it was.
all rallied.
They all rallied big, and now they've kind of sold off a little
I think
bit.
Broadcom's holding their gains.
They're
though.
up like 6 or 7 here
Yeah.
pre-market. So they look strong. That'll help us because I have short puts and call diagonal spreads. So that'll work.
Yeah, AVGO up $6. You are correct, but I saw it up like 12 or 14.
Yeah, it was at
one
like
point.
it was at like 328.
Right, it's 316 right now.
So
Yeah.
it has
The market got a little bit weaker.
Right.
Volatility high too in the 20s. I mean, higher than where it was the last time we were.
When are their earnings?
AVGO doesn't have earnings till March 4th.
Yeah,
We got-
they-
Maybe for option trades today.
Maybe for option trades today, right? If you want to do a little bit of February option, we'll see. We'll see. Every
see.
Tuesday and Thursday, option trades today. I got to get my act together.
Yeah, get it together, man.
I'm going to do my best.
Get it together. Hey, in other news, Ciena, CIEN, is returning to the S&P 500 after getting booted 17 years ago. They sell optical networking equipment, and they will replace the human resources software company Dayforce in the S&P 500. Demand for hardware that can support generative AI has boosted Ciena's revenue growth. They're like, look, we said the magic word AI. They're like, you know
Yeah.
what? Come on into the club. You're getting into the S&P 500.
Okay, I completely missed this one. I mean, I'll go back to April because I've been doing that of 2025. This was a $75 stock. And you go back to September, it was still a $75 stock, basically $85 stock. It's 250-ish. I mean, it's gone straight up from September to now. You're talking about a few months, 3-4 months. It's gone from 90-ish to 250. This is a huge move. And
I would have thought you would have liked this because it has the name of like an OnlyFans girl.
I was gonna say it's like an old girlfriend who like really gets herself back together and hits it big, hits the lottery, opens a company that becomes a gazillionaire. And
these ones have been in the memory. It's not exactly the memory stocks, but this is I kind of mentioned this yesterday.
You're getting very macro on me, but go ahead.
But these stocks,
a little
like
disappointed.
GLW,
I didn't think my son was
Corning,
going to get like this.
Like
but okay.
Corning, remember when we talked about Corning?
Sure.
They're trying to be like Swiss Army, like
Army
stocks.
knife?
They're like, oh, we're AI.
Yeah.
Oh, we're memory. Oh, we're
we're
like
telecom.
right. Yeah, I don't know.
A little bit of everything.
It's a little bit of everything. It's a little weird.
Yeah.
Hey, this instantly went viral on social media yesterday.
these are the
Anthropic,
best.
the AI company, is going to release a series of Super Bowl ads. The 4 ads dropped on social media yesterday, and Sam Altman was super pissed over the ad, but it's so good. Here's one of Anthropic's Super Bowl ads because OpenAI announced they're going to show advertisements within ChatGPT. So that's the basis for this. Watch this.
These are so good.
How do I communicate better with my mom?
Great question. Improved communication with your mom can bring you closer. Here are some techniques you can try. Start by listening. Really hear what she's trying to say underneath her words. Build conversation from points of agreement. Find a connection through shared activity, perhaps a nature walk. Or if the relationship can't be fixed, find emotional connection with other older women on Golden Encounters, the mature dating site that connects sensitive cubs with roaring cougars.
What?
Would you like me to create your profile?
This
I want to find a sensitive cub.
somebody needs a raise for these.
And there's a bunch, and it's great.
It's awesome. I feel so vindicated.
Oh,
I was
the
a
Claude.
Claude.
You were a Claude
Yeah,
guy.
you're a Claude.
You were a Claude
Stan. You
fangirl.
did.
And
You
ever-
stood 10 toes down on
And
business for
everybody
Claude.
was like, what?
What?
Yeah.
You're weird.
Oh, take that.
Take that.
everybody. With your ads.
You're right.
Got no ads.
Altman took to social media and said that he did laugh at them, but he really didn't find it funny. He's like, first, the good part, he's like, they are funny, and I laughed. When you have to type out, I laughed. But I wonder why Anthropic would go for something so clearly dishonest. Our most important principle for ads say that we won't do exactly this. But I used ChatGPT yesterday, and there was like a pop-up ad at the bottom, and I did get annoyed. So we will see what happens, but Super Bowl ads for everybody. Hey, Amazon says set to report earnings after the bell today. They are rolling out Alexa Plus free for all U.S. Prime members, beating Apple's Siri to market. Apple kind of insulated because they're not good at AI, and so
Yeah,
it's kind
it's
of like
amazing.
saved them, which is amazing. But what is the play here for Amazon? Like, are they retail? Because then they close all their retail stores. Is Amazon an AI play? Like, what are you going to do for earnings?
It's just big.
Yeah, I
They
know.
are.
Yeah, but
They're
not as
actually
big.
like they're the new like they're UPS is what they are. They're the new mail. You can get everything you want delivered by.
I know, but
Yeah.
what's the future though of Amazon?
I've been leaning bullish Amazon, and
You gotten
like
paid?
Meta. I was looking at those two as ones where like Google is at its full value. I think.
Yeah, they haven't performed the way that the stocks you're going to mention right
Yeah,
now.
these stocks like in Amazon and Meta, there's a little bit of a catch up in the size of these companies. If you think that this is the market,
It's unchanged for the year.
Yeah.
It was down from 280 to about 250-ish or
Yeah.
so just about 10 days ago.
yeah. But the chart looks the same as like Nvidia. Or,
Yeah. If you zoom out. sure,
Yeah, like
sure.
it's kind of for the last 6 months been chopping in
Yep.
a 10-point range mostly. So but with the way the market looks today, I don't know.
Yeah.
I mean, it's gonna be interesting where vol opens, where the market opens. I know. I think there's some jolts or something that come out at 8
Yep.
today. So,
Jolts.
but yeah, I don't know. Amazon, I feel like my thinking was that it was going to have a meta type move. I played meta to the upside to that like spot.
Right.
I think that's kind of on deck, but
Baidu, speaking of, I don't know, just searching stuff. Baidu is authorizing a $5 billion share buyback and expects to pay a dividend this year. China's largest search engine operator says its board had approved the $5 billion share repurchase program running through December of 2028. What'd you do in Baidu?
the board being the CCP. But we do not have a position on in either Baidu or Baba. We did play it to the downside, took a couple bucks out of those. But I tend to avoid these stocks. Mostly.
Okay.
I agree with you. Baidu, well, it is up about $5 this morning. It closed at 137.
Street
started the
likes
year-
it.
Yeah.
Started the year right around here, went to 160, went to 137 the last 10 days, now back up to 142. So there's so many other things to trade with the as good or better liquidity right now. I think that disseminate their markets a lot better than Baidu and Baba. Just my opinion.
Good news. President Trump said in a new interview that he will not be involved in the fight between Netflix and Paramount Skydance over Warner Brothers Discovery. He says, I've been called by both sides. It's the two sides, but I've decided from the sides that I shouldn't be involved. The Justice Department will handle it. But it's good news for Netflix, though. So because he has his son-in-law,
Netflix could use the
his
good
son-in-law
news.
was like an investor on the Paramount side, and like it's
and
complicated.
didn't Trump buy like bonds or some sort of like debt of this deal.
Yeah, it
He's
gets
involved.
convoluted, right?
He got his taste.
Right.
Big
Well, the
dog
bonds
doesn't
don't have to act like the stock, right? Bondholders get paid first.
Yeah.
So
Yes.
$80 and change, maybe 81, maybe the first uptick we've seen since.
This is below where it was in the tariff tantrum.
Oh yeah, totally.
Oh, where Netflix was?
Yeah.
Yeah.
So I mean, I've been choking on this long for.
You go back to April and it was in the high to mid 80s. We're 80 right now,
Yeah.
81. Right
Yeah,
now.
been getting killed.
Roblox also reporting earnings after
Oh,
the
please
bell
be
today.
higher, Roblox. I need to get bailed out.
Launched an AI technology yesterday that can generate fully functioning in-game models using natural language prompts, to which then a man says, hey, little boy. Roblox, there's some issues there. But what are you doing in Roblox, the stock?
$63 hasn't had an uptick.
These stocks have looked awful too.
Awful.
Take-Two, Unity, all the
Yeah.
gaming stocks taken out to the woodshed quick.
Yeah, horrible. I have a Feb March trade that, relatively speaking, when I put it on, the stock was probably $15 higher than where it is right now. I'm only down about $3 on it or so. A nice diagonal spread to the upside. I need to be bailed out, please.
Yeah.
Please.
Somebody.
February volatility 117. I'm talking about 15 days away.
Wow.
Yeah, but March is is 90. So there's a lot of volatility here in Roblox. We'll see how it plays. I need an upside bailout.
We need your friends, Boys to Men, to come in and sing, "How do I say goodbye to what we had?" Yeah, no more Minute Maid frozen orange juice. After 80 years. Blame millennials? I don't know, but Minute Maid.
What are you, a Tropicana girl?
Minute Maid helped make orange juice a year-round morning staple in 1946 when it started shipping cans of frozen OJ around the U.S. But 80 years later, the brand's parent company says it is halting sales of frozen juice concentrates in the U.S. and Canada, saying it wants to focus on fresh juices that the customers prefer.
Damn.
This is fresh from concentrate. I mean,
I know.
I
remember making this as a kid. You pour it in and you stir it up. I know.
Sad.
80 years, man.
How are we going to make our voodoo punch or whatever it is to make? You
gotta use fresh.
Oh man.
Gotta use fresh.
Want to upcharge us.
In a wild story, I am not familiar with this young man, but I guess the prospect #1 NHL draft pick, Gavin McKenna. He's been considered the consensus first overall pick for the 2026 NHL draft. But I guess after the Penn State hockey game, which they played outside, he got into a fight with a patron at a bar. I guess the man allegedly called his mom a whore. But he broke the guy's jaw in multiple places.
Nice.
He's facing felony assault charges.
It'll happen.
You can't do that. He broke his
I know.
jaw.
Sticks and stones may break my bones, but names will never harm me.
Come on, these guys got to have the friend that's supposed to take that fall.
That's true. Well, he's not there yet.
I know.
He's got to get picked. Then
he's facing 4 charges, included felony aggravated assault, like I said.
You don't think Penn State is paying this guy $2 million a year?
Probably.
I mean,
they can now. Yeah, it's legal.
Yeah.
Yeah. Sad. Sad. You're right. You should never hit anybody, but the guy deserved it.
Yeah.
Okay. Well, it's so sad. Things can just shift.
They can escalate.
In an instant.
They can escalate, and they shouldn't escalate, but they can escalate.
No.
Yeah, especially when alcohol's involved. I mean,
No.
Hard.
But if he's 18, why was he in a bar? We're not in Canada.
I don't know. Is it what
He's
is
18. No, it was in Pennsylvania.
I don't know. When I was a kid, 18 was the drinking age. Is it no longer on the East Coast? I'm being serious. Is it 21 now?
Yeah, it's 21.
Oh, okay. Well, you can go to war when you're 18.
Okay. Vinny's not going to war. He's making beer in your
Vinny's
basement.
not going to war. No, he's going to come up lame. He's going to come up lame. He's going to drag that leg. He's going to learn from Tom.
Oh, he's got the Batista feet. He can't.
Bone spurs.
You're the only one with them.
Vinny has it too.
Vinny does.
Very flat feet.
Yeah,
flat, wide feet.
Yeah.
Yeah.
It's just one of the many deformities coming from his bloodline of misfits.
Mm-hmm.
Hey, here's a dog video.
Because we're complex.
Maybe. Watch this. This is so cute. Only one set of these dogs is related. They just look alike. Look how cute. They aren't related. They're not related. They just have mini-me's at the doggy daycare.
The one I've waited for.
Oh.
This will be the first time anyone has loved me.
These two are sisters.
They're sisters.
I'm so glad.
These two aren't related.
And I'm so glad that.
That's it.
Very cute. Very cute.
Oh my God.
Way to end with a smile. Nice job out of you. We're going to take a quick 90-second break. Don't forget your loot down there.
I won't. Thank you very much.
You're welcome. We'll be back in 90 seconds. We got more Tasty Live. Confirm and send this market, which is moving. We'll be back in 90 seconds with Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails that were submitted. But first, we would like to take a look at the market. Even the S&Ps down. Early ding. What are you doing?
I just took a little small scalp out of my Dow.
Dow futures. Dow was actually up at one point yesterday.
It was up like 150.
While even the S&Ps were down here where they are right now.
Yeah.
You take advantage of that. Just going back at 90, 49, 396.
Still got the runners, as you would say.
The runners. So good job out of you. Russell down 14. NASDAQ down 196. They're all down around the same. I think maybe the NASDAQ is the weakest here. It's been kind of a recurring theme the last couple of days. Even the S&Ps down 42, back down to 68, 60 and change, where if I zoom in here, we've gotten to numerous times this week, only to rally back up to almost 7,000, a little bit less yesterday, 69 and 50 and change, about 100 handles higher than that. We'll see if it do it today. Volatility, 2025, about as high as it's been. Volatility percolating and keeping its bid up almost 5% here, but you can see it too is up near that volatility range where we've fallen from before. Tight relative range in the even the S&Ps, big-ish move in volatility. I actually think /VX, if you're bullish, is a better sale than buying E-mini S&Ps. That's
volatility's gotten smashed from this level 5 times.
Yeah, if you get like a 21 print, you get a little bit of movement in the market going a little bit lower. We'll see how the rest of the market is acting. I mean, everything is subject to change, but I think that's a place where it might start to nibble a little bit. Bonds up 16, 115.01 and change like that.
To your point, I'll take off my last
volatility
long vol. I was buying those at like 1830, 1860-ish. I pulled them out at like 1960, 20-ish.
Very, very nice. Very nice. Yeah.
To your point, if you think there's a little bit of a bounce.
Very nice. Good job. Good job out of you. I think it's a lot harder to buy volatility as it goes down. 18, listen, that's a number where we've bounced off of numerous times to the upside.
It was just a trade.
Yeah, I find it harder to buy it for the rally than to sell it for the sell-off. In volatility, as volatility is more mean reverting, even if the market doesn't go anywhere, sometimes volatility will contract, but you won't get that if the market is going higher. Volatility usually contracts, doesn't go higher. Bitcoin, well, what do you have to say about this? Because I am at a loss of words.
I have long stock. I'm sitting. IBIT and ETH. Bag holding. I'm a bag holder. Diamond hands.
Yeah, IBIT is the Bitcoin future. I mean,
it's ETF.
ETF. It's going to act and be just like Bitcoin. And you can see here, it's been falling out of bed. Ethereum down $100 and change as equal 5% move to Bitcoin being down 3,700. Oil down $1.67 after catching quite a few bids since the beginning of the year. Starting the year around 58 or so, got up to around 66. Now taking just a small little breather, 63.5. Gold has been all over the place last night. It was over 5,000.
Crazy.
It was crazy. It was one time during the concert last night that I was watching, and it was down like 150 at one point. And as I was sitting there, it rallied to almost unchanged. It's sitting down $90, down about a little over 1.75%. GLD, for those who look to trade that, I saw it down below 442. I saw it up to 455.
Yeah, sorry, go on.
No, go ahead.
I was just thinking, so the gold-silver ratio, we've watched it go. It got killed down to 48. You had that huge, the first big move in metals. It got up to like this level was kind of the high. It settled at like 55.
Yes.
Chopped around 55 a little bit. Now we're at 63, 64-ish. It's up about 12% today. Do we take the other side of the gold-silver ratio?
Before you do that, it really does, that spread really does kind of live and die with how silver moves.
Yeah.
Like silver going lower, that is going to make the gold-silver ratio go higher.
Yeah.
You've got a big, almost 10% move here in silver back down to its lows from 3 days ago when gold was making its lows closer to 45, 44. I think it got as low as well. I'll look. It got as low as 44.25 or so. It's 48. So you've got silver on its lows from that big move down just about 3 days ago. It makes sense.
Just as a trade.
Trying it just as a trade. We've done well, really well, the other direction the last 2 days. The key to that gold-silver ratio is keeping the gold-silver ratio spread on. So it takes out about 80-ish% of the notional move of the two products.
Yeah. All right. Well,
not trying to scalp around it.
Yeah. We'll look at this.
Okay. Like I just mentioned, silver continuing to go lower, down 8 in the orders here, about $2 off its lows, and gold about 50 cents, $50 off of its lows. Net gas up 5 cents, a decent sized move, chopping around in net gas, a little higher than the middle of its most recent range. Soybeans, as Vanetta mentioned, up almost 1%. Taking a look at your currencies, you've got euro up small. They've been going sideways the last couple of days. British pound, I believe, is doing the same. I thought I saw it down. I did. 7 cents, which means the dollar is maybe maintaining a little bit of its bid here. For the earnings front, you've got Google down about 11, 10, 11. Qualcomm down around 17-ish or so. ARM down, it was down about 8. I saw it down a little bit less than that. It is down around 5 or 6 right now, just under 100. That's all I got, my friend.
Cool, let's do it.
Confirm and send Thursday, February 5th. I'd like to put on an Iron Condor SPX one day right at the close so I can close the next day without incurring a day trade. All right, so now this is, when I hear that, there's a person who has an account under $25,000 and you're trading a very large product in SPX. Let's keep that in mind. 10 times the size of all of your other trades that you might make. However, I'm worried about tail risk overnight. Is there a way I could protect myself overnight with something like a long VIX call or short /MES future?
I think you answered this, or at least referenced it.
Gesundheit.
Thank you. I thought that was going to keep me like in sneeze mode for like a minute, where I'd be like,
Yeah, don't you do like 3 or 4?
No, I'm usually like 1, maybe 2.
Oh, okay. Because your
usually
grandmother used to
1.
do 3 or 4. I think you took after her. Still trying to find a redeeming quality. Go ahead.
I think in the first sentence, you kind of answered the problem and the question here.
Yeah.
You don't have a ton of capital to trade this at one lot, sure, and you could do it every once in a while, but you're definitely seeing the issue here. Is
here. Forget about. Let's not. I think the person knows because they're trying to. You can't protect with a VIX call. No. You can't protect with MES
because the position's too small as it is.
Right, and you have defined the risk.
Yeah, you're kind of stuck in no man's land here. If you really wanted to, you could go into ES options.
Yes.
Or
which would there be no pattern day trading rule?
Yeah. ES options won't have the pattern day trading rule, and they're effectively it's the same.
Notional is different.
The notional is different. The tick size is different. The liquidity is not as great in those options at certain strikes, and on the open, it's going to be a little wider. You have risk overnight.
Sure.
So you could go into ES options, but again, it's like I think you should be doing do the weekly Iron Condor.
Yeah, I don't like the overnight risk that you're taking too. Like, look, you get a night like today, even the S&P is moving 50, it's going to blow you out of this. I'd rather you have control of it intraday, so you could move down the untested side, take on more risk if you just want to move the naked option, take on less risk, same risk if you don't want to move the whole spread together. I think you open yourself up to tail risk by doing it the night before.
Yeah.
That being said, I'm not your judge. If it's been working for you, stick with it. I think the way that you can mitigate your tail risk, our research shows a lot of $20 wide iron condors. Make it a $10 wide iron condor. Just get a little bit smaller with the width of your SPX spread. I don't think doing anything else is going to be able to do this. Personally, I think it's too big for your account. But
yes,
what do I know?
I agree.
Next one, please.
I have a deep in the money $5 wide put spread with 17 days till expiration. I'm able to roll it to the weekly expiration with 31 days for a couple of cents of credit. Is that a good move just to extend the duration a little, or am I walking into a corner as volume is really low and markets are very wide? What is the best choice in a situation like this?
If you can do it for a credit, I think it's worthwhile, and obviously I'm assuming that this is a losing trade and you're trying to extend duration. If you're trying to,
I would check because he says the bid-ask spreads are wide. So I would make sure you're actually getting it.
I was going to get him around that. So the bid-ask on deep in the money options is going to be wide because they're basically 100 shares of stock, each one of them individually, not the spread. Spread's going to have very little delta to it because it's so deep in the money. Again, can't look at it, and I'm going to assume that there's no dividend risk here either. So no dividend risk here. Here's how you price it. Look at the put spread. Same strikes. If that put spread is trading for $4.50, put spread is trading for 50 cents. The call spread, if it's $5 wide, is going to be fair value is going to be around $4.50. $4.52, $4.48. Then you can go to the other side and look at where you're rolling to. Look at the put spread again. It's just put call parity, same ones. If that put spread is trading for 75 cents, you probably can do that call spread, buying back yours that you're short, selling another one for around a quarter. The difference between the two put spreads, 50 and 75 cents. Now, it might be 22 cents, might be 20 cents, but at least you have an idea on what that credit should be, even though the markets are quite wide. So that's the way I would do this. And would I do it? Sure, of course, yeah. You need duration at this point.
Yeah.
Now, if it falls out of bed in 17 days, you're going to come back and say, why'd you make me roll for 5 or 7 or 10 cent credit? But we can't control that. You're still in a better place than you were before.
For sure.
Next one, please. Your spread is even better now. Your gold, silver, you're watching it. You want me to go?
Oh, yeah, go for it.
Sure. At the start of the market measure on Monday, Kai referred to closing out early the put side spread of his 0-day SPX iron condor this morning because the remaining call spread was already in the money. I take it that's not the standard approach that Kai's back-tested results are shown for. In the back-testing, I gather you just set to close 25% profit, be the whole spread calls and put. But otherwise, let it expire. Is closing the untested side early more profitable?
So there's a lot going on here.
There is a lot going on here.
I think people with backtesting and all this stuff, it's very easy to kind of pick at one thing and kind of as I
take it easy there, son.
I think you pigeonhole yourself, and you know, when you're trading and things are moving and somebody goes, you know, you have a big rally and the spread goes to zero, you take the trade off. In the back tests, you're not taking the trade off. That side.
Well, they don't want to pick and choose that either because
but it's happening. So you got to trade that.
Sure.
And you know, that I think is kind of the thing that you can't quantify in a back test. Like,
that's correct.
You're not looking at the fact that, okay, you know, one of the occurrences, the market rallies and the put spread goes to 10 cents and you peel that put spread off and then the market goes down.
Mm-hmm.
And then you make, you know, more on the call spread. Like that's trading. And you can't really quantify that in back testing. So I would just say that's, you know, one thing that I think people get caught up in. To that point, you know, you can certainly be mechanical based on the back testing, but I think it's good to incorporate this sort of thing of closing positions when possible.
Yeah, and everything is subject to change. You watched us 2 days ago, and we were looking at the 0-day SPX iron condor. And I said, you know what, volatility is way too low. I'm not going to put it on here. A lot of our research, you know, you put on at all times. I mean, that's what it shows. I mean, like, you know, we didn't do it. We did it the next day, and it worked out for us. I mean, better to be lucky than good. Maybe, I don't know, but everything is subject to change. I mean, that's why you're trading. If you're taking something off for pennies on the dollar, it's probably prudent.
Yeah, it's good. It's just a smart thing to do because you're taking risk off the table. Like,
it's logical. I mean,
you just do it. So, I mean, it's very hard to get hyper specific with a back test. I'm going to close this put spread if it gets to this. I'm going to close this call spread if it gets to this. I'm going to roll this one. I'm going to roll down just a short. Like that's why there's no. We can't really research this. This is so like this is in the moment that's the trading.
And markets get wide in SPX on the 0-day. You look at mid-price, a lot of times you're trading them. You can't get filled on the buy or sell at mid-price. You know what I mean? But on a back testing, it would hit there and you get filled, and then that spread goes to, you know, full profit. You know, it's
a good way to, the back test and back tests in general are a good way to
good things to know.
Good thing to know, give you an idea of what's happening, but it's different than really trading. And that doesn't even incorporate the risk and sentiment and feel, you know, in the middle of COVID, you're right. It was great to buy whatever. It felt really bad. You know, that's hard to quantify.
Yep.
So anyway.
Next and last one, please, I believe. I saw in an old, is this me or you?
I don't know. You want me to do it?
Go ahead.
I saw in an old video the idea of using the 20 delta strike in the classic tasty iron condor is really intended to be just inside the expected move. But is that where you'd be putting your short strikes for the 0 DTE iron condor just inside the expected move? Or would you stick to the closest strike to exactly 20 deltas?
Yeah. I mean, and here you go. Like this is up to you, right? Yeah. Like, I mean, when we make a statement around the 20-ish delta, that's on you. I mean, many times you've watched while we do the show, maybe you're a little bit more bullish or a little bit more bearish, and you tweak it by one strike. I mean, that's really what you're talking about here. You're talking about one strike, one way or the other. But sure, you can do either one. For me, I'm around the 20-ish delta. 18 works for me. 22 works for me. Around the 20-ish delta. When you put these on, you're going to have a little bit of bullish or bearish delta one way or the other on your assumption of what you're picking, the 18 delta or the 22 delta.
Yeah, it's...
If it works, they're both going to work.
Yeah.
I mean, 9 times out of 10.
Thing.
Yeah. So. Good job. Good job out of you. We got to take a quick 90-second break because we got trades from the research team coming up next. Even the S&P's down 45, volatility about a dime off its highs, up just about $1, about 5%. We'll be back in 90 seconds. Let's Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade, download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live with Trades and the research team.
My man.
This is a paid announcement.
Paid announcement.
You took your father down in OKLO.
Ooh. See, this is how they are, Shark. The hundreds of winners that you give
A message to my dad. These trades are just for education. No, sorry. These trades are just for amusement, entertainment purposes. They're not for
good
following advice.
Yes. He is not a financial advisor.
So has your DoorDash account being...
oh, dude, that's been axed already. That was axed a long.
That's being closed now because of this OKLO that you got him in? You got some explaining to do?
Ooh.
No.
All right. What's your? I get paid. I mean, and we all win on the betting app that I would mention.
I didn't lose any money, so I don't know what.
Oh, okay. All right. Good. What have you done for me lately? I love it. What do you got for us, Shark?
You know, I think if he was not mandated by the government for the 26 health insurance, that whole deal, he would have cut me off on that already too. That's like the last sliver he's holding on to because I'm asking him to. So,
what do you got for us, my friend? Sorry to put you on the spot.
Netflix. This is going to be a good one. Okay.
Is this going to be as good as the one you got your own family in?
Yeah. So just in case he wants to lose twice the amount of money.
Man who loves you with all his heart.
One, okay.
You gave him that. Okay.
So Netflix has been down for the past 10 weeks, right? So no, we don't have just one short put vertical. We have two short put.
I like it.
Laddering in 2 different expiration cycles because of the OJ that we did a week ago, saying that
was good.
if we move stuff into different expiration cycle, it's going to help with our P&L volatility. So why not double down on that bullish risk right there?
Would this be something? I want to know if it's going to be a winning trade or losing trade. Would this be something you'd put your own father in?
Yes, it's defined risk.
Yes,
and also yes,
defined risk. It can only go to 0. You mean?
And also, he needs to learn to be a little bit more bullish in life. We've had this argument in the past. Okay,
and you took down Joe Mama.
Oh, no.
I mean, you're getting rid of you're taking care of all family business. You're like the Godfather. Today we take care of all family business.
You take down Joe Mama, that's a problem. You know, that's
he needs to be taken down a peg a little bit. I think.
Yeah.
Both of them do.
Laddered puts, I agree with you.
I like it.
Decent IV rank. Certainly a stock that's on its butt. You can define the risk if you want to make them spreads if in a smaller account. Purely directional, but I like it. Good job out of you.
Thank you.
You're still shark in my mind.
That's all that matters to me, okay?
Who is our next researcher? Bring me back to last night with this kind of music. Yeah, my man Gad, how are you? Were you at the Boys to Men New Edition Tony Braxton concert last night?
No.
I
was like,
my mind was going to be blown.
No, that would have been crazy.
Okay. Yeah. You should have taken my wife. I think it would have been fun. It would have been good.
You didn't tell me.
Don't answer that, Gad. Yeah, don't answer that. Don't answer that. What do you got? What do you got for us tonight, Gad?
I got AMD. So, AMD.
AMD. All right.
Straight after the earnings.
200. It's trading at 200 here.
Yeah,
kind
200.
of in the low of where it's been trading.
So because the IV rank, the IV gonna go down, so gotta do some earning candle in that trade.
Yeah, IV rank high on a stock that's going down. Usually, as the stock goes lower, volatility seems to contract. Here's one that's catching a little bit over the last 5 days too. I mean, AMD definitely a candidate here. So, for a volatility play, good job out of you.
Yeah, thank you.
Yeah, you're welcome. You're doing this with an iron condor, right?
Earning
More like defined risk. Yeah,
Yeah.
Nikki, what do you think?
I like it. Yeah, I have long delta here with an at the money short put, but I think this if you don't have a position on it, I think we would look at this.
Very
the
nice.
next position is in March, so it's a good trade.
Yeah, you got some time. I like it.
Yeah, $10 wide,
the width,
$200 stock, 1/3 the width of stock. Yeah. Classic back testing research that we would do here at Tasty Live. So good job out of you. All right.
Not off the book.
No argument for you. You. Not like the other guy that was on here just a moment ago. He didn't get. Let me see how much he really did. He get you into OKLO?
No.
Yeah. You keep your friends close.
Yeah.
But your family a lot further away. All right. Awesome. All right. Who's our next researcher? Now you're talking. What's up, my man? How's Kai?
Not much. How are you?
Kai, did you see you made the confirm and send question?
I heard about it. And I like your comments. Realistically, if the put our call spread getting like a lower than 50 cents, there's
0-day iron condor. We're talking about SPX,
yeah.
just to put those who didn't catch the
as a trader, you watch like every minute. There's no reason you hold it for too much longer, right?
Yeah.
So many times, so many times I was like, oh, this iron condor, leave it there, and it's like the put our call spread has become 30 cents or 40 cents.
Take yesterday for example. If you had put on a spread, SPX iron condor, set it and forget it. Your put side was tested quickly yesterday. Your call spread probably went to
25 cents,
25 cents or whatever. You take it off. it may have closed out of the money for the day, but intraday, as we rallied back, you would have had to sit into that spread a lot longer. Now you had it on only one side.
Yeah.
It worked yesterday. It might cost you 25 cents.
It's hard to quantify that.
It's hard to quantify.
It's hard to do that in a research, like
I'm actually, actually while I was listening to you, I was thinking probably I can do something like that.
Good.
But we need to define where is the profit target you want to take it off.
Right.
Or then
50 cents,
50 cents, 40 cents, or whatever. So many times I leave the whole iron come.
Many times.
Yeah. I'm thinking, this is the whole strategy. We should not touch it. And it's just like I went to the bathroom and came back. 50 cents side become $2. Then it started at $2. I'll probably wait a little bit. Then becomes tested and in the money. It's like, whatever.
And listen, if you take it off at 25, 50 cents, whatever it is, and it goes to 75 cents,
it doesn't hurt you.
Well, maybe you could put it back on again if you want to. Like, you know what I mean? Like, if you're going to look to scalp a side, I'd rather do that than do the other side. Yeah. That's,
It's slightly different from the 45 DT trades. You probably want to roll it to keep balance because you have so many choices and time.
You have no choice with the zero.
Rolling. Zero DT rolling is very, very difficult.
Yep. Yeah. All right, well, what do you got for us? We beat that up. Oh, no, Roblox. Well, I'd rather put your trade on than the trade that I have on now. But go ahead. Earnings play here, right?
But this is this is earnings trade, but I use the February. I don't want to go into tomorrow's expiration.
Yep.
Give it a little bit of room for the time, but for strike wise, it's pretty close. At the money, I just checked the price like 30 minutes ago. It didn't change that much.
I'm dead in Roblox. I can tell now. Everybody who's talked, you, Kai, anybody else we've had on the show,
we're all bottom fishing.
All bottom fishing. This for earnings is going to be down. You're going to have to wait a week or two after earnings to get.
So this is like 2 weeks trade, and it's only $5 wide. I make it small.
Yeah. I like it.
Kind of a jump.
I like it too, but wait until tomorrow when the stock is lower after earnings because I need it higher and everybody else does too, and then put this on. But
that's another
good job out of you, my friend. Good work. Good work. All right, Kai, I got to let you go. Who is our next researcher? Dancing.
That was my little.
Oh, I thought you were on a pole or something. What's up, little lady? How's everything with you? We got Julia in the house.
I was waiting for some claws to come out. I know that we have a claw or two in the house, but no claws this morning.
No claws. You got claws in the E-mini S&Ps are down 58, making new lows.
Ouch!
Ooh. Volatility just off of its highs by about 5 cents. All right, what do you got for us, Julia?
That's a big oof.
That is a big oof.
I have never traded ServiceNow before. However, I noticed it was doing a whole lot of nothing this morning. And I'm like, that's kind of interesting. So I thought this would be interesting for a pre-market setup, potentially. Not in love with the spreads on this one. So went with defined risk, but it's still tradable in my opinion. And I might actually, I think I have like the 96 short strikes on the put side going $10 out. I might actually move that to 95.85. So it's a little more symmetric, but neutral on this one, 96, 130, $10 wide, collects 238 in credit for 762 in buying power. The spreads are a little not my favorite, but I've seen worse for sure.
Yeah. So, I agree with you. I'm looking at the disseminated prices, and a lot of times with a stock that's gotten beaten up like this, and they add those $1 strikes and $2 wide strikes below 100, they won't have the open interest that the other options have, like the 95, the 100, 105s, 110, just because they've been around a lot longer. Yeah. It doesn't have anything to do with that. But occasionally, and this I think is one of those examples, but we'll see during real time, occasionally those odd numbers, not odd in math like 96 or 92, they're even numbers, but those ones that are no longer the round numbers, the 90, 95, have a little bit wider market than the 95s. Like you're looking at the 96, you said I might go down to 95, 85. I would probably do that too, just because the markets will be a little disseminated a little bit tighter than I think the 96s and the 98s would be. Make sense, Julia?
Mm-hmm. No, it totally makes sense. Yeah.
Yeah.
It's also a little more symmetric, a little bit more open interest on those $5 strikes. And it did have a real big dump at the end of January. Around earnings, it had another pretty big dip a couple of days ago, and it's recovered a little bit since then. It's not doing much pre-market, which I was like, that's a little unique this morning. So, thought that'd be interesting because of that.
It's not going down as much as it normally does. Yes, you are right.
Yeah, exactly.
You are right. Let's take a quick 90-second break. We'll come back. We'll get this opening bell, this anticipated opening bell at the bottom of the hour. We'll be back in 90 seconds. Tasty Live. Can't wait.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Niggy, we are back, son, and we've got just about 2 minutes before the opening bell. Even the S&P is trading just about on their lows, down 55. Yesterday, we both talked about the ick, getting the ick. Selling rallies was the theme of the day yesterday. I think you did a great job of that. What's your theme of the day for today?
We're getting down to that 68, 50-ish
where we've been numerous times. We're going to go through that this morning, I think.
It would be, I'm interested to see the open here. I mean, you have volatility high. It still seems icky, but this has been a bounce spot. I don't have short delta. I don't have in futures-wise. I'm not like taking a stand here yet, other than the small short Dow position that I have here. But I think I'm more interested in what happens here on the open.
Well, we'll get to that opening in just a minute. The Nasdaq's the weakest of the group, down 220 and change, just about 1%. Everything else is down around 0.5%. Even the S&P is down 0.75%. Volatility hasn't made a new high yet. Key on that. That's what I like to look at. We'll watch if the S&Ps go lower. If volatility makes a new high and then comes off it, well, then maybe it's a time for a little bit of nibble. If it stays bid, and it's been bid all morning. If it stays bid, then maybe you got some more pressure to the downside. That's what I'm thinking. Bonds up 16 ticks, 115.01. Bitcoin over 70,000. Is that a good thing?
I don't know about that.
Traded down to 69 and change. Ethereum down around the same, 92. Gold down just about 100, a 2% move. Silver down big, almost 11.5%, a little bit more, down $9.79. Nat gas up small relative when you've got a big move like this in the rest of the market. Opening bell here in about 10 seconds. So I'll
turn
stop
on the machine.
Quoting everything. Google, Qualcomm, those were your earnings plays. ARM, Snap. If you did that today, you'll have Amazon. Roblox, BE is another one. There's your opening bell, my friend. / VX trading 2025. Even the S&P's down 59, making new lows here. Down 57 and change on everything. Let's take a look at what's moving this market. Click on this net change here. See who the buckers are today. Costco up $12, back to almost 1,000, $9.91. Who would have thunk? AVGO only up $2. I say that because it was up around $15. There's the E-mini S&P down 65. Baba up 2. Netflix coming for the pigs up $1.80 or so. Apple up 45 cents. Surprising there. On the downside, what's going on? Lilly down 38, big move there. Google for earnings down 23, bigger than what we were disseminating just a few moments ago on Google. SanDisk down 20 after trading over 600 and change, right? Would have flirted with 700 just 2 days ago. Big moves all around here. Qualcomm for earnings down 12, Carvana down 11, Amazon down 10. I mean, even S&Ps and NASDAQ down just about 1%. You would expect all of these to be down. Some down a lot more than you would have thought here.
Yeah.
What are you doing over there?
I closed out some gold strangles. Gold volatility has come in pretty significantly here. And
That was 1x2 you had on there, right?
Yeah, I just sold extra calls because I was taking advantage of the call skew that we had there.
You're just the boss. That's why you did that. And what'd you do in Google here? You closed your...
Google, I bought a call to turn my call ratio from yesterday into a butterfly. It's something I like to do. You got 40 some odd days to go till expiration. It costs you 80 cents. The ratio that we did, if you want to take it off right now, it's trading at a 15-cent debit.
Yeah.
So you can take the $200 and run here, or the almost $300 and run here. I'm putting 80 cents of risk on, which means I've locked in, $220, and I have a $15 wide, kind of lottery ticket on those.
Even the S&P's down 72, as foretold here.
Yes, a nice little move there.
Yes, nice little move indeed.
What else do I have here?
What else do you have here?
I mean, this ARM trade is kind of like a nothing. The markets look like crap.
Duty, as you like to say.
I might just leave this on as the markets are just awful there.
They are. They are.
See.
Even the S&P is down 62, volatility down 111. It moved about 25 cents off of its highs. Maybe short term, you get a little bit of a bounce here in the market. We'll see. Hard to make that call on such an early day here, 3 minutes into the move here. Even the S&P is down 68. Cancel rally.
That was quick.
Yeah. Subject to change, right? Subject to change. I'm just kidding. I think even the S&Ps are now down 59. They're going to be all over the place. Gold down 117 on the silver futures. They're down.
Netflix up $2.
Netflix down.
Oh
up
my
$2.
God!
What? That's like I said. They're coming for the pigs. Finally getting paid on those. Yes.
Yeah, I have those 95 strike puts. I was just going to take stock and sell calls into them.
Sure.
I mean, so at a certain point, so I'm short the 95 puts. They have 15 cents of extrinsic value. Rolling them out to March is going to net you, let's call it 60 cents. If you roll them to the same strike.
Right.
So you have 60 cents of extrinsic value. That's value that you take in. if the stock were to rally to 95, which is a low probability right now,
sure,
you're going to now have an at-the-money option that might have $2-3 of extrinsic value. That's value you're going to miss out on the delta move because that delta is dynamic. It's going to change. I'm basically 100 deltas here. It's 85.
Yeah.
I'm long the stock.
Yeah.
I would rather just take the stock, and I can even close the puts, buy the stock now, and just kind of eat it, and like be done, not wait.
Sure.
Because you have the 95 strike puts. They're going to be there's 15 cents left to make over the next 15 days.
Yes. Even the S&P down 55, NASDAQ down.
I'm going to do that right now.
Oh, you talked yourself into it. I love it.
Yeah. So
you're buying back the February 95 puts.
Yeah. And I'm going to buy the stock. I mean, I wish I did this yesterday because I would have made the $2 on the freaking up move. But I guess you get the same thing on the puts.
You get the same thing on the puts. The puts probably actually had a little bit of premium to it. Yeah. It's probably a wash, maybe even slightly better your way.
Yeah. So then I'm going to sell the March 190 or the March 90 strike calls. So I now have a covered call. It's this.
You worked your way into
extrinsic value position, and the delta move isn't going to hurt me to the ups. I'm not going to miss out on any value to the upside if there is a huge move to the upside.
Very good. Even the S&P is down 50.
In this
volatility 2015 only up 86 cents. It's moved about 50 cents off of it. That's what I was kind of talking about. Like volatility futures were probably a better sale than a buy of the E-mini S&Ps on a notional value. You would you pick up 7, 8, 10 points on the E-mini S&Ps. You pick up almost 40, 50 cents, $500 on the volatility futures. But a big product too.
Killed.
What's that?
Silver
is getting killed, down almost 13% now, but it's off of its lows by about $2. The gold-silver ratio spread is trading 65 and change. So good no trade out of you when it was trading around 64. You'd be out $1,000 already.
Yeah.
So good on you to wait. Gold down 100, about $40 off of its lows. GLD has had a decent range today. GLD, because it opens and gold futures are trading all day long. GLD closed $13, $12 higher than where it is right now, but it's had a very tight range today because so far gold futures haven't had that big of a move. It had a $3 move down to around 41.5, up to around 44 and change. Let's just do for giggles here. What is the expected move in E-mini S&Ps for 0 day? What do you think it is?
In the silver calls too. So now I just have puts in silver.
Okay.
I'm wrapped around the 70 strike.
Your short puts in silver?
Short puts in February and March.
Okay.
I'm wrapped around the 70 strike. I have sold like 3x the amount of calls against these puts. So the net, it's the same thing I was doing in gold, where I was selling upside calls, at 2 or 3x.
Good skew. You got a little bit. You start feeling a little bit bearish in it. You did a little too side with delta.
You're playing the vol.
Yeah, you're playing the vol.
Yep. And so I've taken those off, and now volatility has come in. It's still very, very high. I mean, SLV volatility at 91%. There's still some juice to squeeze. Even the 90, I'm short the 90 or the.
And it doesn't seem like it's going anywhere either. I mean, volatility.
Yes, I'm short the 70 puts in February with 14 days to go till expiration. They have $4, almost $5 of extrinsic value. So I'm going to sit here with the puts and just kind of, if we chop here, I'll actually make money on these in the money puts as time passes, vol contracts, hopefully. If we rally a little bit, I can sell out those calls again into what I would expect to be a pop in volatility.
Well said on this. Even the S&P is down 38. They've already had a $30 rally off of the lows there as volatility is trading just over 20, up around 4%. Bonds are up 14. They're back under 115. The high was 115.03. Let's take a look at the leaders and the ones that are getting killed and the ones that are.
Shark took me down in OKLO too.
The list grows, Shark. AVGO up 11 now after trading down at 309, about $10 lower than where it is right now. It's up at 319. Costco up at 11. SanDisk up 9. Look at these moves. I mean, $30-ish move. Too bad it has horrible markets. But MU has decent markets. Look at this. up $7 from under 370. Flirting with 390, got up to 387. AMD up, Netflix up. Let's see what's moving this market a little bit lower here. Lilly down 47.
They got vol coming in. They're doing the same thing they did on Sunday into Monday.
Yeah.
You kind of smack them into the open, and then they're going to rally this whole thing back.
You need volatility futures to get over 20. Under 20 to get that.
You're going to get that.
You're flirting with it right now. I think it was a good call. When volatility.
I just closed the last of my Dow short, which now is kind of the weakest of the group. It was the strongest of the group pre-market.
It's down 0.5%, where the Nasdaq was the weakest of the group, down almost 1%, down 0.5% now.
They're buying up. They're buying up the tech names,
which had a horrible day yesterday. Yeah.
I'm gonna do something in AVGO.
So you bought back your Dow futures. Good scalp out of you.
I sold the 350.
You sold.
So I have a
350 call in AVGO.
Yeah, I have a 350 long call in March left over from a diagonal spread. So I basically legged into a calendar spread here. So I'm short the 350 in February, long the 350 in March. I also have the short puts at 270.
Okay.
So those are basically a scratch into this move. They're obviously, kind of getting tested yesterday. But so I've got long delta, short a little bit short-term volatility, which is relatively high here. AVGO 69 IV rank.
Very nice. NASDAQ is catching a bid. Russell is only down 5, which is less than 0.25 percentage point. NASDAQ down 72. Even the S&P is down 35. Volatility flirting with 20, 20.05, 10 right now. You ready to take a quick 90-second break? We got Johnny trades. We got some more stuff to clean up in your account.
Yeah. What about, so you did this gold butterfly.
Yes.
I think it was for option trades today.
It was. In GLD. Do it.
You're up you did it at 44 cents, basically marked at 0.
Yes.
You could either buy in the risk. Let's see. You're long the 485, short 2 of the 495s. So if you could buy the 505.
Might as well.
So you can do it for 33 cents.
Put on a big free wide butterfly.
And this gives you a little bit of a lottery ticket. It takes off, $1,000 in buying power. Again, you could have, so the same thing we did in Google.
Could have taken the profit.
Take the position off, free up the buying power, take it 40 cents and run.
Yep.
Instead, you got this butterfly, which seems like it's really far out of the money. It was at the money yesterday.
Yes, to put it in perspective.
So you got a 30, you gave up 30 cents to have a $1,500 potential value at a price.
And you booked a little cash in your pocket.
Yeah, you got $10. Yeah, right. Cover commissions, you're all good.
Sure.
But it seems far out of the money.
Subject to change.
Subject to change. I like that.
Yep. Cool. Very good. Even the S&P is down 39. Volatility still 2010. Bonds up 12.
I think I nibble a little bit.
On?
MNQ.
MNQ. Oh. Which way?
Long.
Look at you.
I mean, they're gonna. I don't know. Maybe we're finally wrong on this, and this is the big vol move. But it feels like this is another one of the smash vols here.
So far, even though it's up 4%, 2010, I think it's got to go under 20.
20 to 21 range has been the ceiling.
That is correct.
And no matter how icky it feels, it's been the ceiling.
That is true. Even the S&P down 32. Russell just turned green. And on that note, what do you think the expected move is on the SPX 0 day? Don't look. I was asking you that, and then you got into your thing there. So
for the rest of the day?
Yeah, it's 0 day. What do you think?
35.
It was 64 about 5 minutes ago. It's 56 right now, just to show you about how vol
SPX.
On SPX, that is correct. That's what 2021 vol does to a product that usually has, the 18-ish vol. You get much wider. I don't know if it's a trade to put on today, but for those who play it, today is your day. We'll take a quick 90-second break and come back. We got more Tasty Live as volatility goes just under 20 right now. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
Oh, wow, arms up now.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nigga, we are back, son, and you know what that means. Time for a little bit more Tasty Live as even the S&Ps are down 30. NASDAQ, which was your leader in the clubhouse to the downside, now more in line with everything else, down 85. Russell's your leader in the clubhouse, up 5. And the Dow down 190. Volatility under 20, up 66 cents. Bonds are up 10, 114.27. Bitcoin still at 70,000 and change. Gold down $75, lower range for overnight action. Silver about $3 off of its lows, trading 75 and change, my friend. Couple of movers in the market today. Yes, to the downside, you've got many as we're lower today. Carvana I've named a bunch of times, but Qualcomm's really the one. Microsoft down 11, Qualcomm for earnings down 10 or so. Google down 9. Google traded down to 306. It's 323 right now.
Wow.
Wow
That's
is
a
right.
big bounce back.
Yeah, big bounce back. AVGO up 16. SanDisk, which traded 560 and change. I mean, I guess you could trade 5 lots of stock in there. It moves quicker than the futures a little bit. MU is really a tradable product. 388. It was under 370. You can see the rest here. The green side is getting a little bit better, but I think we're going to chop around right here, son, for some time here. At least that's what it looks like.
Cool.
All right, let's go.
Yeah, we got a couple things to clean up here. We have this
clean up on an aisle.
Yeah, we have this SLV butterfly that we legged into, we did a broken wing butterfly and then into the massive rally in silver. We bought in the risk. It's now marked at about 70 cents. Small, little, tiny Johnny trade that we're going to take off into this little bit of a rally here.
Okie dokie.
Or a little bit of a sell-off.
Sell-off, yeah.
Say. Let's see where we could get filled here. It's only $5 wide, 60 some odd cents. So that should net out to be 30 bucks.
Yeah.
On a trade, it was a butterfly that was basically worthless yesterday.
You're making
Came into 30
You're making chicken salad. Yeah. You know what I mean? You're trying.
Call me
here.
a Johnny?
No. But we do have. This is Johnny Trades.
You call me a Johnny?
Well, I'm trying to get in that zone. I'm trying to get in that zone. I mean, you're flinging futures over there. You're doing gold silver ratio spreads. You're doing multiple contracts of futures. I mean, you're doing Bitcoin shit coins and all kinds of other things over there. Let me bring you back to your beginning when you were just a Johnny trader, not the mocker that you are today.
Yeah, perfect.
You ready to do this?
Yes.
So when you're looking at Johnny trade, does it have to be?
Look at the Nasdaq.
Nasdaq down 50.
It just rallied 100 handles.
It did, and you bought some at 24.8.
No high fives, please.
24.880 and change. I mean, you can let those fly. You can let one fly and keep your runner.
Account here.
Oh, you said never mind. Even the S&P down 27.
I had some help.
Sure.
They might be able to do that for me. I don't know.
Sure. Would you like to get out of all of them, or you want to keep a runner? What do you want to do?
Let's just keep them both.
You want to keep it all?
Yeah, keep it all.
Okay.
Yeah.
Okay. All right.
Big mocker style.
Big mockers. I'm going to write down where I was going to sell them. 4, 9, 20.
You want to take one off?
Nope. I don't want to do nothing. I don't want to do.
Oh no! They just sold off again. God.
They're back. They're back.
Okay.
They're back.
All right.
All right. I will.
Good.
I will see if I can take off half for you.
Okay. So, what do you think about? I think AMD. Maybe we do the Iron Condor that Gad was looking at, or make kind of an adjustment to that. That'll be our neutral trade. I was trying to look at service now, but
I took off one like 30 handles higher than where they are right now. Is that
did you actually?
Yeah.
Oh, see, this is.
Yeah, I'm out. Listen.
Buy them back right now. You did 30 handles. They're back down to.
You have a runner, so I only did half.
Okay, but you just scalped it for 70 handles. They just sold off 70 handles. No, buy them back.
Yeah.
Or sell them. No, you sold one. Buy one back right now. Come on. Be a man.
Okay, son. Okay.
No, wait. now you missed it. You hesitated and you missed it.
Daddy doesn't hesitate. You'll be able to get this. Don't worry. Go ahead. What do you got here?
I'm thinking maybe we go into AMD. It's one we've traded a couple times. I think we could do this as like our neutral position in Iron Condor. Go somewhere around the 20-ish delta, $10 wide. All these trades, when we get asked about this, like I can't find 1/3 the width of the strikes.
I bought it back for you back at 75 because that's what you wanted.
Okay, perfect. All right, now you can blame me if they go lower. So
now it's all yours again. I booked a winner.
Yeah. You won. Yeah, you bought them. You're the one that's stuck you. Anyway, I like to go around the 20 delta for the short options. We usually go 10, maybe 15 points wide in this account if you want to get a little more risk on. Here you have $10 wide strikes to the upside, so I'm just going to stick with the $10 wide. But if you're looking for something that trades at 1/3 the width of the strikes, if you go somewhere around the 20 delta for the short options and go $10 wide or $15 wide, they're all going to be around this mark. If you're looking at a 16 delta put, it's going to be more towards, 20% of the width, 15% of the width. So this is a spot where you get your 60 to 70% pop. You collect 1/3 the width of the strikes. It's a risk 2 to make 1 type setup. This is just a cookie cutter Iron Condor, 38 IV rank. What say you?
I love it, especially in a Johnny account.
So we're gonna put this up on the mid price because it has been moving a little bit.
And you'll see this come out on the follow page.
The Johnny Trader account.
underneath the Johnny Trader account. You are correct. As soon as we get filled in there. Now you could trade any size stock. Here's a $200 stock that you're making it small enough for a Johnny size account, which is good on you.
Lets me get filled.
If you can get filled.
Markets are not bad, not great.
The disseminated markets.
And you got, the stock's kind of in play right here. So I just got filled on that at 335. It's kind of in play right now.
If you right-click on it, I can push it through for you.
Yeah, I just push it through.
Yep. Even the S&P's down 40, kind of chopping around here, like we talked about for a quick second there. Well, what's next on? So here you took a big stock, made it a small stock by the strategy that you use, which is paramount when you get to something like a Johnny size account where you're don't have as much buying power as you would like.
Yeah. In terms of a long position, do you have any interest in anything specifically, or?
Well, I mean,
long or short.
I know you're going to hate this, but what do you think?
I got one for long because I wanted to play Amazon to the upside.
Okay, go ahead. You want to play Amazon to the upside? I was going to look at Tesla down at under 400, 390 and change. Ivy rank is low in Tesla. I was going to look at
that too.
I was going to look at some sort of diagonal spread, or maybe just a March trade in there. 43 days to go. But you want to look at Amazon? Let's take a look at it.
So Amazon reports earnings after the close today. Stock's down $7. If you look at the chart, it's kind of back down to the lower end of where it's been trading. I don't necessarily love doing bullish trades on a day where the market, doesn't look great, especially, into the end of the week. It just doesn't give me the greatest vibes, but a cheap way to kind of play the upside and give yourself a little bit of a buffer. If you're looking at like March, Feb, the Feb options are going to be a little bit juicier than the weeklies. The weekly 250 here, I guess trades at $2. Want to do that?
Sure.
Let's do the 250.
Sure.
So we're going to sell the 250 in the weekly. This one will extrinsic value goes to zero tomorrow. So you're going to capture this $2. Obviously, the move in the stock is going to dictate whether you're profitable on this trade. But just to give everybody an idea, I like to use this risk profile to kind of give you an expectation here. So when we go to the analysis mode, you can move this to tomorrow. And then if you want to crush some vol in the back, you can do that as well. And I'm just going to zoom out here just to give you a better look.
Good.
Yeah. So your upside, if the stock is flat / up, you're going to be okay here. And by flat, I mean if the stock goes down a couple dollars, you'll probably be out $100, $200 at most. You'll be able to roll into a new short call in February, which will help reduce basis on this trade. But it's a high reward, relatively low risk position, especially with 43 days to go till expiration. If you think there's going to be a bounce at some point in the next month, you'd expect Amazon to kind of go that way as well. So I think this is our little earnings trade today.
Very nice. I like it.
Let's see if we can get
earnings trade in Amazon in a small sized account, making a Johnny sized trade. I love it.
And the reason the spread is actually going against us is because we have some long.
We haven't put it on yet. Now it is. Yeah.
$6. So we're in. So we got long delta in Amazon. What do you think we get short here?
Right click on there.
Yeah, I got that.
What do I think we get short here? Oh, okay, great question.
I've put diagonals in SPY and IWM.
I was going to say Apple, but it sold off. I thought it was going to be up right now. It was up 50 cents to $1 just a moment ago.
Volatility is relatively low there.
19. Yeah. But I mean, it is after earnings in Apple. I was just going to go with like a short call spread or something like that. Stock has sold off by $2 and change.
Yeah.
Hard to do a Feb March because it's 15 days, 43 days.
What about that Cisco trade that we looked at yesterday? So Cisco is right near highs. I forget how we got to this, but I think Vanetta had like kind of news article that it got back to the 08 high or something, or 2000 high, whatever the high was. It's a stock that's definitely bucked the trend here. What do you think about doing something there?
I love it. It's an $82 stock, so it's not going to be February 11th is earnings. That's the other caveat they have. So you really could do a Feb March if you wanted to in a Johnny size account.
Yeah, you want
almost
to do
like a pseudo earnings trade.
Put diagonal?
Sure. Stock's up today.
Yeah.
Up to 82, a 1% move to the upside.
I'm looking at the February weekly. Sorry. What do you think about this? A little, this is like almost like a calendar spread. But I'm thinking something like the 80 put in March, and then you can sell the February 20th 77.5, or you can move it to the 78. Markets are a little bit wider in this February monthly.
Yeah, that's a problem. It's definitely a problem.
You just do the call spread? You want to just do a March call spread?
Sure.
I was looking at the 85.90.
Yeah, I mean, the 85 has a 40 delta.
These markets kind of stink.
Yeah, they do kind of stink 20-ish cent wide. So 85.90, 138 is about the mid-price. The stock's going higher. Put in at 140, 142, and if it comes to you, it comes to you.
Which one are you looking at?
Oh, I was looking at March. I thought you said.
Yeah, I'm looking at March.
You
want to do the $5 wide or the $10 wide?
I think in a Johnny size account, you do the $5 wide, 85.90. Say put in 140, 142, let them come to you.
That rhymed.
That makes sense or no good?
No, I'm putting it in.
Okay.
Market's selling off though here.
Yeah. Even the S&P's down 66, volatility back up to 2045.
All right, 136. I'm in.
NASDAQ back down a full 1%. We're going to take you good?
Yeah, just to go over what we did. So AMD, we did the iron condor, delta neutral. We got long Amazon into earnings with a call diagonal spread. We sold a call spread in Cisco. So our net delta of all these positions is probably beta weighted long just because Amazon is the biggest position here, which I'm okay with because Amazon is at lows. Market's kind of sold off here. Tech has been out of favor here. You got some short volatility in Amazon in the short term. So an inside up move would be fantastic here. Got a little short delta in one of the hotter names to the upside. Cisco, AMD has high volatility, has been kind of choppy here around the 200, 220. So that's kind of what we're playing.
Very good. Good job out of you. A bullish, bearish, kind of neutralish trade, trying to do a little bit of everything. Oh, let's go over the market before we take a little break here. Even the S&P is back down to their lows, down 70 and change. NASDAQ down 300 and change. Russell, which turned green, is now red. Dow down just about 390. Volatility back to 2055, got up to 2065. Key on that volatility. If it starts to sell off, maybe you'll get that rally that we had just a moment ago. If it doesn't, then you're going to get a little bit more movement. But I think volatility is at the high end of its range for this move. That's the place I would be playing. What's that?
Buy another NASDAQ here.
Yeah, you didn't listen to Daddy on the way there,
How does Daddy do it?
We're going to take a quick...
Oh, my God.
90-second break and come back. We got more Tasty Live after this. What comes up next?
Market measure.
That's right, my friend. We'll be back in 90 seconds. You got more Tasty Live immediately following these messages.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, but the market is not back. Even the S&P is down 74, making new lows here as volatility makes new lows too, makes new highs too at 2065, got up to 2070 just a moment ago. Russell, you're strongest of the group with the Dow being down 0.75%, Russell being down just about 1/3%, NASDAQ down 300, and the E-mini S&P's down 71. What are you doing here?
We're gonna take another one. We're gonna get a little one there.
Buying MNQ, that is the NASDAQ futures, even though volatility is not selling off. That is a no.
I know. I agree. It looks horrible.
You're on
Market
tilt.
looks horrible.
You're on tilt here, yes.
Oh, come on. I've been banging them out all week to the short side.
You have been.
I've sold 7,000, 720, 50 times in the last 2 weeks.
Yes, you have, and rightfully so.
This is the first stab at the long side I've taken.
Totally agree
small
here.
Still.
And small. Bonds up 17, 115.02. All right, son. Oil down $1.76. Why? Hey, we talked about /VX/ES volume the last couple of days. Let's move out of yesterday. Just prior to that, volume had been very, very low, very weak. Yesterday we had 1 million E-mini S&Ps trading before like 11 o'clock and 11 o'clock. Today you've got almost 700 traded at 37 minutes into the day. You definitely have players on the future side again and in volume.
Yep.
So they're back.
Yep.
All right, my friend.
Let's do it.
Let's do it. I'm ready. Why liquidity matters? A market measure sponsored by the SIBO.
Very nice.
Very nice indeed.
Why does it matter? Does it matter to you?
What does it matter?
Does liquidity matter?
I think it's it's right up there with Delta. I mean, after you put on Delta, before you put on Delta, you have to make sure you have liquidity. So maybe it's the chicken egg kind of thing.
It was
here.
a trick question. I knew that you would know.
Thank you. Yes, I'm glad you had faith in me.
Liquidity is a fundamental requirement for efficient markets and is a reason why our assumption of efficient markets tends to hold in research. And so today we're going to take a look at two key characteristics of liquidity as well as the dangers of trading illiquid underlying. So, liquidity is one of the things that retail traders can control. You can control your entry, your prices, what you're trading, the duration. Those are all things that you can control. Liquidity is another thing where, when things are wide, you can choose not to trade them.
Yes.
That is a huge positive for us. Liquidity and being in liquid markets, being able to get in and get out at efficient prices is huge. And that's really what we're going to discuss here.
Let's do it.
So the study that we're going to look at is SPY versus IVV, which is a Vanguard ETF for basically the S&P 500. It's iShares. iShares core S&P 500 ETF. VGT
cancel crash. I mean, the S&P is down 73, but I'm going to cancel the crash right now.
Really? With all stay in bid? You can cancel it?
2070, 2065, 70.
I mean, this has been the low for NASDAQ. I mean, this is where we got
Hey,
November.
hey. Yeah, I'm allowed to make my call.
Okay, all right. Well, I put the risk on. You're just out there.
Never mind.
Never mind.
Subject to change.
VGT is the Vanguard Information Technology ETF. We're going to measure that to Qs. So these two products, as we'll see when we get further on, they're basically the same thing.
They got me. I bought them.
You did?
Yeah, but they got me.
We're going to look at the money put and at the money puts and strangles on March 20th, 2026. We're going to find the 60-month correlation of the price of these assets, which is going to be very, very highly correlated. We're going to look at daily volume, the bid-ask spreads, and then the cost over the theoretical mid-price. So the mid-price is typically where we trade or try to trade. When you have penny-wide bid-ask spreads, they're going to be very, very tight. In some of these products, you're going to see they're not very tight. And we're going to discuss the results by highlighting liquidity differences and explaining the risks of trading illiquid products. E-mini's down 80.
Making new lows. I said they got me.
Vol up
$1.50 and change to 20.80.85.
Might not buy this dip.
No, I said they got me, but I'm in now.
We might be back.
So now I sit.
It's okay.
Broken-hearted.
This next slide here, just to take a look at the correlations of these two products. And let's jump to the next slide, the correlation matrix here. You'll see that SPY and IVV, 100% correlation. QQQ, VGT, slightly tiny difference there, but basically the same thing. So these products are the same thing. In a lot of like 401ks or passive kind of funds like that, they're not buying SPY or QQQ. They're buying these Vanguard related products. A lot of places, like if you have a 401k, it could be held with Vanguard. They're going to buy their own products in SPY. And so just so we're clear here, they have basically the same correlation. When we get on to the next slide here, the two main characteristics of liquidity are high volume and low bid-ask spreads. That's what we talk about when we talk about liquidity. Those are the two things. You want to look at high volume in both shares and options. Those are two important things because they correlate the bid-ask spreads. You talked about this before, how if the bid-ask spread on the stock is $1 wide, the options are going to be at least $1 wide, if not more. Just because spreads get wide because the shares themselves are not even liquid. So below are two identical price underlyings. They're both basically the same price here. Same IV and near 100% correlation to each other. You can see SPY trades 28 times, 20 times the amount of IVV. QQQ, the same thing with VGT. They trade, a multiple here. And you can see the bid-ask spreads here on the at-the-money put, a penny wide on SPY versus $2.80 on IVV. It tells you that, these are the same thing.
Yeah.
And you're going to be losing out on value by trading the illiquid product. That's it. That's, the big thing here. Getting on to the next slide here. So, why does the volume and the bid-ask spread matter? In trading, liquidity is a measure of price efficiency. So where there's no price efficiency, you pay the difference between the mid price and the bid and the ask as a cost. So when something's a penny wide, it's going to trade at the mid price. You might have to give up a penny on either direction. If something is $1 wide or $2 wide, you might have to give up 25, 50 cents just to get in and out of that position. And so that is slippage. That is value that you are just giving away.
That is correct.
For not being in something liquid. And that means over time, your P&L will decrease by how wide the average bid-ask spread is on your trade. This is more substantial than commissions or anything else. Like, you're giving up dollars on bid-ask spreads on two products that are the same thing. It's why liquidity is king here.
You can't trade. It's not even my opinion. You cannot trade without liquidity. You can't be successful. You can trade anything you want without liquidity. But you can't be successful with the slippage. Why take the slippage if you don't? Don't have to. There's so many other products to trade that mirror each other that have liquidity. Mm-hmm. Just go there. It's it's really the simple thing.
Totally.
Even the S&P is down 94 and volatility up to 21.
Bonds rallying too.
What's that?
Bonds rallying.
Bonds are rallying 115.07.
Damn.
Oof. They got us hook, line, and sinker.
Yeah, we'll be okay. Could have more. So next slide here. So using SPY and IVV as our example by selling both the call and the put, which is our strangle here, we can see that there's a ton of value lost here just in the bid-ask spread. So when you're looking at SPY, you're looking at basically penny-wide markets here, 2-3 cents. And that's, about as tight as you can get.
That is about as tight as you can get.
As in terms of slippage. When you're looking at IVV, and these things are going to trade at slightly different prices because they're slightly different values in terms of the share price. They're tracking the same thing. But you can see that it's almost a full dollar wide. So it's a $100 wide spread on the strangle in IVV versus a penny wide in SPY. The same sort of thing you see in QQQ versus VGT. You're talking about a dollar wide spread. Not only is this bad for your P&L because you are most certainly going to trade the less liquid underlying is most certainly going to be less advantageous from a price perspective. You're going to lose 5 or 10 cents on every transaction that you do in those products. But it's also like when you're looking at your P&L and you're looking at your portfolio, wider bid-ask spreads are going to skew what you're seeing from a P&L perspective. We get those emails all the time. I'm seeing my my P&L go from up $100 to down $300. That's because these bid-ask spreads and all the value of your options and your positions, your stock, is based on the mid price. And so, if you want to be in a little bit less volatile positions, liquidity is the easiest way to dull that P&L volatility.
Agreed. I mean, entry is all you can control, and that's what you should be controlling. Even the S&P is down 80. I'm basically unchanged on my.
I just bought another NASDAQ.
Nah, I couldn't. Even the S&P futures, and I'm out about 20 cents on my futures. 10 cents on my volatility futures. Do I scratch them or stay?
I think you stay.
I'm gonna stay, but I was hoping you said scratch them. Next one, please.
Since the bid-ask spread is not a line item cost, many traders disregard it. This is important because people don't think about, everybody talks about commissions or this or that. People don't think about the bid-ask spreads. That's really where you're losing out.
It's almost, sorry to interrupt you. It's almost like a gas leak. You know what I mean? Mm-hmm. When you have like a wide bid-ask, it's like you don't think about it, you don't see it, you don't smell it. But if you don't think about it and you don't, if you smell eggs, you probably have a nat gas kind of a leak there. Mm-hmm. You know what I mean? You have to watch it. When you see markets that are too wide, you have to run from it. Many times we talk about that. Go ahead.
For sure. And it's just from a P&L perspective, especially, and this is even more significant for the Johnny traders, which we just did our Johnny Trader segment. When you have limited capital and you're giving up 5-10 cents on each in and out, that's a lot of slippage. That's way more slippage than anything else. And
way more than you can afford.
Yes.
Is what it comes down to.
Yes. So it's a huge part of your P&L and just overall slippage. Couple quick takeaways here. So liquidity is fundamental to the success of retail traders because the lack of it can cost traders a large percentage of their returns. I mean, if you're taking $1 out of something and 5 or 10 cents is your slippage on bid-ask spreads, handful of those trades and you give up your profit. It's a huge thing.
It is. It really is.
So the way to gauge how liquid an underlying is mainly two metrics. We look at bid-ask spreads and we look at volume. Bid-ask spreads are going to be correlated to the stock price. Something like an AMD is going to have a much wider bid-ask spread relative to Intel. A $50 stock versus a $200 stock. But all else being equal, it should be relatively tight. We've talked about 0.1%, so a $100 stock should have 10-cent wide bid-ask spreads. Just a rough, way to kind of gauge liquidity in the options themselves. You'll see this in the stock as well, and in the options. The volume, you want to see high volume. If a stock trades a couple million shares a day, it's probably okay from a liquidity standpoint for shares, for options. If it's a 50K a day stock, it's probably going to be wide bid-ask spreads. It's all these things are correlated. Bid-ask spreads are correlated with volume, and so you want to see volume in both the options and the stock.
Good job out of you. Good job out of the team. Good job out of SIBO for sponsoring that for us. Market measures as they do each week. Even the S&Ps down 82, 85. They're going to make me work for my money this morning. How do you feel instead of doing your futures? What about a little SPX put spread? If you're leaning on the futures side of buying NASDAQ, trying to get small is all I'm doing.
Zero day?
Zero day, either is 67.40 or 67.20. You can go $10 wide if you want to go, or $15 wide if you want to take a little less risk. 67.35, 67.20, around
what about $2. 60. Oh, wait. I think you're at 67.30.
67.35.20 is what I was looking at. It's trading for around $2.
Oh, $15 wide.
$15 wide. I mean, I'm trying to make the amount of risk you have in NASDAQ futures as you would on even the S&Ps.
Done. 240.
245 actually.
Got a price improved because of that amazing liquidity in SPX.
You're right.
Sponsored by the SIBO.
You are right. You are right. See, you're sponsoring them that way.
Guys at the SIBO filling my SPX trade. Thank you, sir.
Appreciate them. We're going to take a quick 90-second break and come back. We got much more Tasty Live immediately following these quick messages. We're back in 90 seconds of Tasty Live.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
yeah.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Okay, you wanna see?
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. Oh, it's my man Q. How are you, brother?
Fellas, how's it going?
As you come on most days at this time, it's a breath of fresh air to see you, but we have not had a breath of fresh air. Let me go over this market for you. You guys have got to be busy on the desk. Futures are trading all over the place, down just about 100 a moment ago, $3 off of their lows. NASDAQ down 400 and change, about a 1 3/4% move. Russell down 28. It was green today. It's now down 1%. It was green at one point today when the market was rallying. Even the S&Ps were only down 30 at the time. Dow down 600 and change. This is about as ugly as it's gotten, as volatility is up about 10%. Bitcoin down to 67,000, 67.5 right now. Bonds are up 27 ticks. That's about as high as we've seen them over the last week or so in there. Oil down $2 and change. Gold is down 100. Do you see a pattern here? Things are down.
Yeah. so you know how like yesterday,
you noticed that?
Or the other day I was saying like, you know, we aren't too busy because like customers are managing their positions and there's not many calls in. Today is the opposite. There's a lot of calls into the trade desk.
Yeah, they got me a little bit. I'm long futures about 15 handles higher than this. I'm short volatility about 30 cents lower than this. I put my line in the sand and they went right through it.
Yeah, and
if not now, when? You know, you got to do something when it's ugly. You just got to keep your size in check. I just don't want to sit here all the time and talk about how, we make profitable trades, profitable scalps and everything else like that. Sometimes you take some heat on trades too.
Yeah, a lot of what we're seeing on the desk right now is when people are over leveraged by selling premium or volatility, days like today is where they get hurt. So if your size is in check when you're in low volatility, on a day like today, you should be fine. Of course, the P&L will be red, right, as volatility expands.
Yeah.
But you shouldn't be too worried about margin calls.
It hurts no less.
Typically,
margin call, you should never put yourself in
when it comes to stuff like that, this is where we see people who are over leveraged during low volatility on days like today get into trouble. But a lot of other customers, they're like, I already managed my position. What can I do? Sometimes it can be wait necessarily if you've already made those adjustments. But right now we're seeing a lot of customers roll out their positions into further expirations. The further expirations have higher vega. As a percentage to the option, the 0 DT, the shorter dated options are more susceptible to greater moves as a percentage. But then when it comes to actual dollar value, those further out options have a lot more profit to be made as volatility decreases.
I've done more stupid things than I'd like to admit in my life. I mean, and I'm just
no way.
Oh, and I'm just talking about trading.
Regrets? No way.
No, I don't have any regrets at all. But I've done more stupid things in trading than I hope everybody who's watching this ever makes in their career. I mean, it's been a long time.
Well, and you've made them so everyone else.
But I've never, ever put myself in jeopardy of a margin call or anything like that. And I'm talking about crash, 87. Never, ever, ever. The whole key to this game is being able to open the door the next day. And don't talk to me about having a small size account and putting yourself in margin. I had a small size account, started with $5,000. I get it. It's a hard thing to do. But if it's a hard thing to do, raise capital somewhere else, friends, family, whatever you have to do, beg, borrow. Don't steal, but beg, borrow. Get a larger account so you can get a margin account, but never, ever, ever. Keep it open. Keep your business open. It can be profitable for you. If you put at risk where you can close the doors on any day, you can't be profitable. You can't take advantage of anything when maybe opportunity arises. Whether it be right or wrong, the market's going to dictate that to you. But at least you have the opportunity to put it out there.
Yeah, and then this is
check that balance number. When you click on your balance number, make sure that that's a positive number, and you should be out of harm's way for a margin.
We'll say that there's two things, right? Because there's negative cash, which is you're borrowing from us, which isn't necessarily an issue if that's how you want to trade.
Yes.
But then there's negative buying.
I mean, I hate that too because
that's where things need to be.
Go ahead.
Yeah, right. But then when it's negative buying power, that's where things need to be cleaned up in the account.
Yep.
And so this is the big advantage we see to portfolio margin as well. A lot of our portfolio margin customers aren't hurting too much if they weren't over leveraged during low volatility, like I mentioned earlier, right? But if you have portfolio margin, if you're above 175, maintain above 150,000, then you get a lot more leverage when trading certain types of positions. The margin requirements are a lot lower. And so that's a big advantage on days like today when the volatility does pop. You have more, powder to play with.
Yeah, and then volatility moves 10%. It changes the pricing of the option exponentially.
I mean, yeah, that's exactly how it works, right? Yeah,
it really does. An option with a volatility of 21 versus an option of a volatility of 18, 19, or 20. You're talking about dollars on options that have 50 delta, 40 delta, 30 deltas to them, like we trade. So that's why we like to sell high premium. We like to sell high implied volatility for that reason, but you can't get yourself over leveraged in anything you do. Even the S&P down a full 100. Ooh. All right, my friend, I'm going to let you, I took too much of your time already. Let's get you a chance to
the list.
To get to the list. Yeah. I was going to let
Before you let me go.
And do you have any else? No, I wasn't going to let you go. Do you have anything else you have to announce or do or say or be?
No, I think we went over most of the important stuff. If you're not over leveraged during low volatility, you should be fine. And then there's a lot of, as we're going to go over the list here, there's a lot of high IVR symbols as volatility's popped. So top 20 symbols going through the system and their IVR. At number 1, SLV 83, Goog L 34, Tesla 10, IBIT 98, AMD 46, Amazon 63, Microsoft 39, Palantir 34, Goog without the L 33, NVIDIA 32, MSTR 70, SoFi 25, GLD 70, Broadcom 66, Apple 20, Micron 74, TQQQ 40, Robinhood 51, Netflix 26, and Oracle 88.
Good job out of you, but really that's our customers that are trading in the Tasty Trade account, right? That's where all the activity is, right?
Yeah, exactly.
Very good, very good. All right, my friend, I'm going to let you go and bring in our next victim.
I don't know if he's a victim today because we got a little dollar strength here. The euro pound position that I put on, quick little 100 and some.
Get out of here. How do you do it?
It's like spinning the wind.
What's ZAR? South Africa.
Yep, South African rand.
That one's moving too. That one's I'm at a scratch.
All right.
Did you just put that on like? Did you just
like a week ago?
Yeah, like a week ago, right?
It's one of the longest running FX positions. My portfolio here of
beautiful
2-month bag holding. It's unfortunate.
It's going to happen. It's
but
definitely going to happen.
I mean, some of these are you got some movement here.
Yes, you do. Yes, you do. Why are we having all this volatility in the currencies? Do you know?
Yeah, I mean, if you gave me a board of Bat's watch list and I perused all the other asset classes and saw this risk off move, taking a pretty big hold here in this U.S. session, as well as the move in longer term bonds, right? Which, not crazy from a percentage gain standpoint, but bigger than we've seen in a pretty compressed asset class. I would have thought the dollar response would be pretty large in terms of safe haven flows and not as big as you'd expect. So yeah, we have dollar slightly stronger on the day, but really the only big mover in terms of major pairs is this Australian dollar, US dollar, starting to fall apart here. Just in the past hour, down 0.4%, which is pretty good from an hourly candle. And this is a pair that I think fundamentally isn't looking to fall this fast at all, but has some of that sensitivity to risk, absolutely, from its positive correlation to U.S. equities, but also metals as well, as those start to cool off. So a bit of a shakeout there, and a bit of a laggard, falling since the U.S. Open, but not as much inflows to the spot FX market as I would have expected, but perhaps some room to play catch up there, or if you are bullish on the Australian economy as a whole and think risk sentiment will improve, you're getting a slightly cheaper price here below that 70-cent threshold that we've been oscillating around for the better part of 2 weeks now. Looking across the board, you called out euro pound. That's what I was looking at today because we had our double central bank morning from the BOE and the ECB.
Are they to blame for this move? I'm just wondering. In the equity markets,
we could blame them. Sure.
Okay. Sure. Okay.
Yeah.
Good.
It's a big move.
I was looking for somebody to blame. Maybe it can't be
absolutely.
myself. Right.
Christine Lagarde. That's your scapegoat.
Yeah.
No, nothing interesting from the euro area. Both central banks held rates unchanged, but the interesting dynamic and the mover of the day came from the BOE, the Bank of England, who was expected to leave rates unchanged, but of 9 voting members, we were expected 2 to vote cut, 4 voted cut, and so pretty close there. Could have been a flip to a cut with just one more vote. So that dovish meeting, that dovish vote, leading to some pound weakness, not only against the U.S. dollar, but if you look to that euro pound pair, that was the mover of the morning, up about 0.6% in pre-market trading.
That's a humongous move.
Yeah, especially.
And is that typical of the type of movements you get on, I guess, an odds on underdog, right? I mean, you said they lowered rates. It really wasn't expected.
It kept rates unchanged, but 2 more voters voted to cut than they expected. So pretty and you know it's all marginal here. The result is the same.
I think you got to fade that move then.
But all
that's
of
just
these,
that's just.
Do you fade?
What do you think?
I bottom fished it.
Yeah, well, here's the nuance. I mean, you know how this is. A lot of the moves
nuances. I hate nuances with a passion.
This is like back to the range it's been.
Yeah,
I mean, we're here.
But no, the interesting dynamic, is that a nicer word?
Mm-hmm.
Yeah.
A developing dynamic is that, you know, our overnight rates here in the U.S. and in the UK are around par. And so we start to get, you know, perhaps bigger moves when we're trying to speculate who will cut first.
Mm-hmm.
And now it's looking like England might cut before even the U.S., when maybe coming into this year, that wasn't as expected. We'll see what their forecasts are for, you know, going into the summer, if they would elect to cut before. It's a coin toss for us to cut in June. But that kind of dynamic can play through today in the spot market, as that's where the speculation is centered. So, yeah, from a pound dollar perspective, regardless of even this euro pretty much unch on the day, still sitting below 118 in the spot market. We got some of these event risks out of the way, and it can feel like if you're long dollar, if you have been long dollar, it can feel like any sort of event risk burns you more than it helps you. And so getting through these relatively unchanged could be a strong signal for the U.S. dollar, as, you know, there's still absolutely room to recover.
Okay.
But now it's looking like that flash up to 120 in the euro from, what was that, last week, 2 weeks ago?
Below 118.
Exactly. Right? So the more kind of, as time goes on and we stay even muted, even if we aren't getting volatility in these markets, that kind of move starts to feel more like a one-off than, you know, a re-emerging bullish trend for the euro or for all these other currencies. So definitely in terms of non-price action, it's still an interesting story. Dollar yen, we're starting to see some momentum slow down.
Oh no!
Oh no!
I mean, historically, it's still a very expensive price or cheap price for the yen. But we've got some political risk into the weekend. They've got some snap vote on a snap election. We'll see, but the key takeaway there is if the prime minister can get an easier majority, more of the government doing as she'd like, then she is in favor of tolerating a weaker yen, which could put that back to its stressed highs that we hit to end the month of January.
Has any yen pair trade?
It's death.
Well, I mean, we had that one rally about I don't know, 2 weeks ago or something like that,
right.
and then we've come back down into the middle of its low range that it's been at. I mean, I find a hard time doing anything with the yen outright, trading it bullish or bearish or pairing it. Like I think there's so many other more interesting trades to put out there.
Yeah, it's definitely a brave trade, even if you say, you know, we're still historically very weak in the yen. If we're not, you know, pressing onto those new lows for the yen, it's tough to have conviction there. I mean, pound yen today falling almost a full %, you know, on that combined, perhaps some safe haven flows for the yen, but also that pound weakness. But yeah, so far, past results, of course, not indicative of what could happen in the future, but looking at that pound yen chart, once you get over 214, if you would start to layer in there, you know, these, even though we keep pressing a little higher in this dollar yen, this pound yen, we do see once it gets to, in this pound market, 214, or in the dollar market, around 158, 159, if you start to layer in from there, that's been successful as long as you're comfortable taking off small winners. But yeah, by no means have we had a fundamental reclassification or sustained yen strength at all. So a tight market to scalp around, but there has been some opportunity there.
I just took off the rand.
Yeah, I mean
scratch that.
That's
it took me a while.
Yeah,
that wasn't a great one.
No, but you're starting to see kind of how these emerging market currencies behave because you had. Let me just pull up your dollar rand. I mean, you had maybe 6 days in the red, meaning the rand got stronger, and only a few days where the dollar started to rebound, but the magnitude of those dollar moves back on some of that, some of the moves back in kind of safe haven flows. We see that magnitude be a lot greater as you start to get shaken out. But it's from all I'm seeing in like hedge funds, institutional money, still making plays on
smart money, right? Because I'm the stupid money over here with my losing trades. What's the smart money doing?
What is the smart money doing?
They're still
Do you have a smart money meter somewhere over there? How do they know what the smart
guys?
So there's a big
smart guys with the collars. Okay, us Johnnies, no collar here.
There's a big trade that gets put up. How do we know which side the money's on, like the smart money's on? Because a large volume trade is not done by individual traders, right? Like we don't get together and pool our thoughts together to match somebody. How do we know which side's the smart money trade? I've been trying to figure this out for 40 some odd years. How do you do it?
If you figure it out, that's pretty good. The only thing I see is a day late and a dollar short media publications. But you start to see that even though some things like that can be outdated, for something like emerging markets, that can be kind of as much of a snowballing trend as a carry trade unwind, as you just start to see some tolerance for some riskier assets, and that can play out through quarters or even a year. So that's what we've seen so far. We'll see if U.S. equities start a major correction, maybe that gets redirected. But
we are off of our highs of around 7,000 down to around 6,800 or so. I mean,
the carnage.
That's a good. Was it 3% move? I mean, that's a decent start for those who are looking to nibble. And somebody who's going to say who's more bearish to say it was just the beginning, right? I mean. Plenty of room to run. I will tell you one thing.
I scratched one and then I got back in here like 70 points slower.
Oh, on your NASDAQ futures, I saw that. Put them back out at 90 and put them back at 21. I too I guess when we got back up to 68.25 or so, but I quickly bought them back 10 handles lower than that. Now they're 10 handles lower than that. So
not looking good.
Not looking good. Volatility 21.25 on the high. We're now.
It was the same thing we said on Sunday, though.
It is the same thing we said on Sunday. Back up to 21.20 now. Even the S&Ps back to 68.10, just a skosh off of their lows. NASDAQ futures under 24.6. They got down to 24.550. I haven't done anything in the NASDAQ at all. Just even the S&Ps and the /VX futures. Of the two, I kind of like the future sale better than the S&P buy, but they're going to move in tandem with each other. They're going to slap me like they're built to do.
How do you think of here on a Thursday, if we've been sliding kind of all week here, we haven't had that in a while. Is there any chance for just a Friday pop for fun?
Look, I'm just looking for a 40 handle rally here on the S&Ps. That's all I mean. That's all I want. I might keep my futures a little longer dated.
Sure.
For the /VX futures. I think that's a little bit more mean reverting than price. I'm the world's worst futures trader.
And commodities, futures, commodities.
And commodities.
What else? Are you good at
racking up titles?
Crap! I'm looking at some of the positions I have. I'm not even a great option trader these days.
Not very good either.
These days either. I've hung in there pretty good, but. Not a great option trader either. When you get a move like this on top of the opposite move of what you, I mean, listen, we're the market is, and at least in the NASDAQ, is back to where we were last year, October, November, mid-November, I guess I should say, not really October too, I guess, early October when we rallied and we sold off in November and we rallied again. So, I mean, I don't know if this is a a time to do something directional, but it's definitely a time to do something with volatility. So if you're looking to do something, you've been waiting to sell your puts and your calls. Maybe if you're leaning a little bit short, then put your call closer than you're putting your put. I think it's a two-sided trade until you can figure out like volatility starts to contract, and then you want to lean a little bit longer. But volatility is not contracting here. 21.25 is even the S&Ps are just a skosh off of their low. So tread lightly out there, ladies and gentlemen. No hero crap.
Yeah.
And I'll get the email when we rally today, tomorrow, Monday, Tuesday, Wednesday. They say, you said no hero crap. That was the time to be a hero. It's really easier. It's really easier after the fact than during the fact. You keep your size in check.
Yeah.
What our friend Q said just a moment ago, you keep your size in check. But if you've been looking for stuff, there's a lot of things right now that seem to be on a small scale sale. Not a fire sale, definitely not a fire sale, but a small scale sale here. Take advantage of that.
Yeah.
All right, ladies and gentlemen, you have anything to add there, son?
No, I've done a bunch of trades here. I mean, to your point, reducing some delta on some of the positions. So I sold a call against the AVGO put. So I have the 270 400 strangle on now. I close out some short delta. I had a leftover put from a put diagonal spread in SPY in February that basically went at the money. I close out of that, and I have another one in March that I sold a put against. So I'm turning that into legging into a diagonal spread. That kind of helped, or this move, that hedged me a little bit on this move. Not enough. MU, I sold a call against the put that we sold yesterday. So I have some short delta there, and I have the upside butterflies. So I have some upside delta there. AMD, I rolled down a call into this move. To your point, just kind of reducing some of the delta. I don't feel as bad rolling down the call with vol expanding here. It's easier to make that adjustment.
Because calls won't move as much if you get inside the expected move.
Yeah, you get a 30-40 handle bounce here, and vol comes in to 19 and change, you're golden. The roll doesn't hurt you. You get a 100-point bounce from here, and you think you're the stupidest person ever.
Your SPX put spread is trading. This is about where SPX was trading when we put it on at 245. It looks like it's around 210 as a mid price, just letting you know what that's doing. So that hasn't moved too much, even though the market has stayed near its lows here. Yeah. NASDAQ down 390 and change. Russell down 25. Dow down 590, volatility off of its highs of 2130, 2108. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny. Good job out of you. Hope you did a better job than we did. Even the S&P's down 87, trading 820. We'll be back in 90 seconds. Tasty Live. Peace.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Just
chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar.
Hello, everybody, and welcome to the Thursday edition of the Liz and Jenny Show. My name is Jenny. That beautiful blonde in red and green, can't decide which way she wants the market to go, is Liz Deerking, and it is a red shirt Thursday.
I know which way I want the market to go. There's no questioning my loyalty here. This is thrown down.
Do you feel like we've been down? Let's pop right into the platform. And I guess we have, if you look at this chart here, we have, I don't know if we can go to the platform, but we have the last 3 days down.
Yeah. I mean, honestly though, Jenny, it feels so much worse than what that looks like.
Well, okay, I'll show you why it feels so much worse than what that looks like. This.
Yes. Well, hey, listen, I'm trying to put a silver lining. We've got IV rank back. We kept saying how there's no IV in it.
129. IV rank in Bitcoin now 129.
It's back.
Yeah, Vol's back in crypto. So the crypto is painful, and you know what else is painful, honestly. And I'm not pleased, even though I was bearish. I've been bearish in silver since when it hit 73. I'm not happy because now I'm bullish. Now my position has turned me bullish,
and so has our position. So we have the exact same position on in silver. We had SI, we switched it to SLV. We had the ability to, we actually got saved a little bit by the down move in getting out of one of our short calls, right? But now we added the puts like true lunatics.
I mean, this for us, and this is what we try to stay away from. Liz and I have been really good about trying to not get whipsawed. We're usually good about not getting whipsawed, but in silver we got whipsawed where
we did.
We lost on the way up and now we're losing on the way down. And we don't like that to happen to us, which is usually why you don't see us rolling up the untested side, because we've been whipsawed in the past and it doesn't feel good.
The whipsaw is worse than the actual.
Yeah, the whipsaw. I'd rather keep losing on my direction if I'm wrong than get whipsawed when it turns around and goes the way I thought it was going to go.
Yeah, the whipsaw is worse than the actual. Wow. Well, SPOO's down 94.
It's not bad. I saw it down 100.
Yeah, I did see it down 100. I was just looking for. You know what? Yesterday was kind of crazy. I mean, we ended down 40, right? We were only down 40 at the end.
I know. Yeah, we did rally back. And I'm hoping we rally back today. So yesterday we did a study. We did a study from Kai and our research team, and it showed it showed iron condors and SPX in the 0-day, and it showed the put spreads, the 20 delta put spreads. And so this morning at 8:30, I did the SPX 20 delta put spread.
Oh, are you in the morning chart? Are you in the morning chart? No.
No, this is just the daily SPX.
Oh, okay. I thought you were trying to show me a point on the chart.
No. I just pulled it. I just switched it from silver to SPX because that's what I'm talking about.
No, I got it.
So I did the 20 delta put spread, and let's say I only did it $10 wide because I was a baby. But still, it was only about $2. So
that's pretty interesting. So your $20 to $10 wide is still almost the same price. Different strikes, but same price.
Yeah, it was a little over $2. I got a little over $2. But in the study, they closed their profit target was 25%. Now I've been setting a 50% profit target. Their profit target was 25%. So this morning, after putting it on, I saw it hit a 25%. But I didn't take it off because I left my 50% profit target in. Now my 50% profit target never hit, but the 25% profit, if you set a 25% profit target, it would have hit.
And that's why, and I want to give a big shout out to Kai, because Kai called us, or not called us, but teamed us afterwards and said the confusion was we do it at 8:30, and it is a very low profit target. That's why the results were so good.
Right. So when we were
just to be crystal clear about that.
Yeah, when we were questioning the results, like, geez, we do this trade and we haven't won. It's not.
We're not 100%,
we
right?
100% success rate, but it's only a 25% profit target. So when you're taking only $200 in, your profit target is only $50 on that 25% profit target. Now, for me, I said, I want a little more than that. Put in my 50% profit target. Well, now at this point, we're getting close to my strikes, and
you're not at your strikes yet.
No, but it's close. It's close.
Okay.
It's like right there. I mean, I think it's this 67.85 or 67.80. Maybe it's a 67 somewhere. It's right around here. It's right there. But it never. If I would have had that 25% profit target in, it'd be gone.
It would be. And I appreciate Kai and everything he does, because that was kind of cool of him to kind of follow up. So it is 8:30 and it's a very low profit target. It's 25%, and it would have hit.
It would have. So with this down move, with the 1.5% down move, I want to jump into Twitter. We are taking live tweets. I want to jump into Twitter and just show from Punish Pixels. Good morning, ladies. Rough week. Time for our upside crab trade on ES. Now, he had given us an upside crab trade on ES before. That was a winner. Then he gave us a downside crab trade in ES. That was a winner.
Closed it in Mexico. That's the only thing I did for my phone is closed my, I was like, thank God I have that on Punish Pixels.
Yeah. So now he wants to jump in with the upside. Hey, let's go for a 3 out of 3.
You go to the platform. I have the strikes pulled up.
Okay. And then let me see the date, Feb 17.
Yeah, I'll run through the dates with you. So start with the Feb. You're going to buy the Feb 17 68.50 call.
Okay. Got it.
Sell 2 69.25s in that same.
Got it.
Okay. And then the 7,000 call on the Feb 13. You'd be buying it, right?
Yeah. Okay, so we've got $14, cut that in half, $7.
Yes. So this is
now
bullish. Now he's, you know what though? 46 minutes ago, I was like,
like $14 should be $7. Shouldn't this buying power effect be 700?
I want to walk through it slowly. So you're buying the nearer term. I think we have it flipped.
Nah, we've got this in wrong.
Yeah, we have it flipped. But that's what he's saying. He's saying buy 1 68.50 call in the Feb 17, sell 2 69.25s, and then he's got the 7,000 call on February. So you have to actually buy the farther out ones.
Wait, maybe I'm in the wrong cycle. What was the 7,000? What cycle was that?
It says 13th of Feb, 13 Feb.
Oh, and I just...
You have the 13 days. Got it. Okay, yeah. Okay. I see what you did there, yeah. There you go. There you go.
7,000.
Okay. Look at before you put that in, it's 124,000.
Hold on a second. Because usually... So this isn't differently. Because usually you're buying something that's closer to where it's trading.
Yeah.
And the further out, and then you're doing that ratio spread
closer, and that's what you're doing.
Yeah, this isn't right. This is not in right. Are you sure you're reading right? Okay, I'm just gonna use his strikes, but set up a crab. Which
set up a crab using his strikes. So it does say buy the 68.50 call in Feb 17, So look at this, 68.50 call on Feb 17. Sell 2 to 1 at the 68.25. So yeah, this is
No, he's doing the
69.25. Yeah.
Sell 2 to 1, 69.25, 7,000. He's selling those, and then he's buying.
Oh, he's buying that one. Okay,
Yeah.
okay. I was reading it, but you backwards. Okay, so
68.50 call on the Feb 17. Okay, 68.50 call on Feb 17. So Feb 17, 68.50 call. We're buying this.
That makes more sense.
This makes a lot more sense.
A lot more
then,
sense. And then you're selling the 2 to 1. It's the 69.25, 7,000.
In what cycle?
In the Feb 13.
All right, give me the strikes.
So it's 69.25, 7,000. Buy one, sell 2.
Sell 2 of these and then buy one.
Sell 2, buy 1. Yeah.
69.25 and 7,000. This is the right way to set it up. We were reading it wrong. Sorry about that, Punish Pixels.
And it's still, Jenny, the same amount of buying power. It should be cut in half.
So let me take a look at this. So if we buy the 68.50 and sell the 69.25, that's $75. That's $75, and then between 69.25 and 7,000 is $75. So it should really not be 1,700. It should just be half of this. I know that. Let me see if I hit review and send.
No, you're using $1,800.
No, reduced by $8. Yeah, reduced
$1,800. That's what I'm saying. You're using $1,800.
I don't think that should be. It shouldn't be. Now I know we weren't crossing streams. I know we have this trade. Look at this trade.
Oh, that doesn't matter. That shouldn't matter.
That shouldn't matter. That shouldn't matter. Yeah, it shouldn't be using that much. Oh, because I'm in SPX.
Once again, from the top, go to ES, and then you cut it in half.
Yesterday, we were blowing through trades too quickly. Today, the opposite.
Turtle space, go to ES. Punish Pixels is out there shaking his head at us right now.
I know. He's probably yelling at the screen.
I would be.
Go to ES.
Okay, right, ES, here we go. Feb 17.
Got it.
Buy the 6850 call.
Got it.
Then go to Feb 13.
Got it.
Sell 269.25. Buy one 7,000.
Ding, 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 ding. Kind of.
Kind of.
Kind of.
It's okay, but span margining is a little bit on the different side. You know what I mean?
So this should be, cut $1,800 in half, so like $900.
It's just holding up an extra $200 for no reason.
No, but this is what,
yeah, that's our max loss. Total cost of trade.
Trade cost $912. Again, that span margin sometimes can throw you for a loop.
I would get in this $1,100. This is good. This is a bullish trade. We've got a couple days to do it.
And did he give a price that he did his?
No.
Well, whatever. We're in with you, Punish Pixels.
I mean, it took long enough. If we don't press that button because I read it backwards, then we did it in SPX.
And so we've got the extra short here. We want to make sure, we've got our extra short here in the 8-day and our long is in the 12-day.
And that's right. So this is exactly what it should be. Your long should be your farther out in time one. You are short 2 nearer terms. And that's why it's not $142,000. Like when you put in the short side first and then went to the long, it was like $124,000.
Yeah. So, Punish Pixels, let's see if we can make it a 3-peat.
Yeah, I like it. I think we can. And honestly, we're not, I know this, I'm not trying to get full profit.
No, we're not trying to get full profit. We're not trying to get full profit. I can't believe that we're down again. Are you?
I know. I think you're right. But
it was up this morning.
I know it was crazy. Now, the other elephant in the room that we have to address here on this live show of live shows today, and we're going to try not to get it wrong, IBIT.
Oh, IBIT. I want to talk through a handful of things in IBIT. Elephant in the room, people didn't realize this, but we were assigned. We had a put spread. We had a weekly put spread. And how do I know the strike, Liz? If I see, oh my gosh, I have 100 shares of stock and I didn't have that yesterday, how do I know what?
You know what? That's very good, because it's almost as if it's a telltale sign when it's a 0-0. So it's $52. It was the 52 put because it's right there. You were short the 52 put. That's why you're long in at 52.
Yeah. So it's crazy to think like 10 days ago, we had sold the 52.46 put spread 10 days ago.
Yeah.
Now, it was a defined risk trade. I'm going to close it as a package. If it's defined risk, it remains defined risk. We were assigned on the 52 put. So we bought 100 shares of 52, but we still have our long put, the risk definition of that put spread. If I close this as a package, I should be getting a credit of $46, the same strike. Like if you're closing stock and an option and it's all trading for about parity, you should be getting, it should be closing for the same price as the strike price.
As the one that's left.
Yes, is the remaining strike. So that
looks about right. 46, and there's a little bit of extrinsic value in it, but that makes sense. But honestly, I think it should be going the opposite way, because you're taking in a credit.
Yeah, I was going to say.
Yeah, it should be $45.99, not $46.10.
Right. Yeah. So I'm just going to close that all, and we'll get some, get a little buying power back. And if it doesn't close at that $45.99, I'll tick it down a tick.
Yeah, a penny or two.
Yeah, like I can give up 2 cents. I'm okay with that. There we go. So that's gone. That's gone. And now we had adjusted our old trade to this May Zebra, which is already all out of the money. And we have this Bob on Fire trade in Jan.
So the Bob on Fire trade in Jan. Now you notice our strike hasn't been breached. So we were talking about this yesterday, Johnny, and I haven't made any adjustments to mine yet. But if you take a look at this, I know we were talking about taking off the call. So if you look at the call, it's still 217, but you're up 60% on the call.
Now I want to give like a massive shout out to Bob on Fire. Shout out to Bob on Fire, because I switched a lot of my positions to these, and you saved me tens of thousands of dollars, Bob on Fire. You have, because I switched a lot of my positions to these, and I want to walk through how this has saved money. And I'll show it here in IBIT with just like a one lot, right? So let's say you were long 100 shares of IBIT, and instead of being long those 100 shares, you still wanted to keep your profit potential going, but you wanted to cut down your risk. So switching it to this Bob on Fire trade, the mechanics of this is buy the at the money. So we know when we put this on, IBIT was $51.
Right. That's correct. You buy the at the money and you sell at the expected move for the cycle of the January.
Yeah. So let's say here we had 100 shares of stock at $51, and we said, you know what, I don't want that risk of my stock. I'm going to switch it to this, where I'm still going to have this profit potential from 51 to 66, but now I have to get long at 35 instead of being long at 51. If we just had, and I'm going to just do the math for you here. If we just had 100 shares of IBIT at 51, and now it's trading 38, then that would have been a $1,300 loss on the 100 shares of stock. We would be out $1,300 on the 100 shares of stock. But on this trade, which I think replicates having that stock in the long run for your profit potential,
is only out 9.
Is not even 6, 12 minus 8, right, like 8 something, 9 something instead of 1,300. So it saved us money to the downside. And when I say thank you to Bob on Fire, it has saved me a lot of money in Oklo, because I switched like all my Oklo stock to this Bob on Fire January trade.
Yeah.
I added up, and I did it in a handful of underlines. I did a handful of underlines. I added up yesterday what it saved me, and it was a lot. But then after this big down move, I closed them all and bought my stock back.
Well, you got to talk about why, because in Bob on Fire's trade, which was great, we had a bullish assumption, and we didn't mind getting long at 35 and 344 days. Well, it's so funny because when it's time to buy the stock, you don't want it. Now it's trading 38. So this won't pick back up. It doesn't lose as much on the way down, but it won't pick back up until 51.
Right. Yeah. Because now our call spread is the 51.66. So the 51.66. So like, let's say from between now and the next, the year, IBIT runs up from 38 to 45 or 38 to 50. Well, this is going to be worth nothing in January if IBIT's trading 50, even though it'd be a big move up from here to 50. So on the down move, it saved us some money on the down move. But I think you have to change these. You don't have to, but when you have this big down move, it's a good idea to change them so your profit potential could pick back up again.
Right. I mean, and we are classic overtraders, and we will bounce back and forth between these things. So at some point, you may change it to stock, which we were long in. At some point, you might change it back to this. We're overtraders.
Right. Yeah. At some point we might change it back to this. Or like get in now, like close this. What I did was close mine and buy my stock. And at some point, if the stock has a run up, then I might start collaring it, or I might start, selling call spreads to buy put to protect it. But again, that's as the stocks move around. So we got an email yesterday saying, I don't know if trading options work. If you know how to use options and you have a portfolio, you could make them work for you.
You can make them work for you, for sure. I was trying to explain this to my son too. You just kind of need to understand what you're doing with options. Otherwise, people say they don't work. So in full disclosure, I mean, let's just talk about this real quick. SPOOs are down 81, so there's a massive rally here, but they've been down. So we're traders, but people aren't opening up their 401ks, right? So if you're Gen Pop, if you looked, and so I heard Tony talking about this. He's like, people get so nervous if they're very long delta but they're not looking at long delta in their 401ks or their IRAs or anything like that. You'd be shocked if it came with your statement with the how long delta you are. Like that's not in there. Yes.
If you every day, like if you every day logged into your 401k and saw the move, if you were like every day I'm logging in my 401k and seeing the move. And so my trading account is a bullish portfolio, but I use options around my positions to reduce risk.
And Bob on Fire did reduce risk. The Bob on Fire trade does reduce risk, and it did.
Mm-hmm. Right. So like I'm not an option trader of like, I'm just slinging strangles and trying to collect premium. That's not my MO. My MO is I've got a bullish portfolio and I use options to reduce risk. And I think, there's a difference, right?
Which almost makes you a little bit more neutral to bullish.
Hey, Liz, our 905 put spreads might be off.
They're not.
They're down to 78 when we put them on.
I know. I'm looking at mine. It's not even close. It's just because the vol is so high still.
Okay. Because I did the one at 830, and then I did like the 20 delta at 830, and then I did the 50 delta at 905.
Yeah, the 50 delta probably. The 831, no, because we were not down as much as 70.
No, my 831, no, but my 50 delta one, I thought maybe.
Yeah, we were up 78 when I put mine on, and I'm still not. I'm not out yet.
Yeah, down 70.
You just need the vol to come in a little bit. Do you know what I mean?
Right. So I definitely think we close this no matter what. I think we close this because again, I don't want IBIT at 38 and sit and wait till 51 to pick back up.
So no, let's close it. I don't mind. I know we just closed the stock, but I don't mind doing something in the stock.
Oh, because of with the other position.
Yeah.
And you see, we're getting.
Yeah, but that would have confused the children if we wouldn't have separated them.
I know. And you know what? What else is about like other thing about Bob's trade is, you would get double long. Like we put this on to have the profit potential of 100 shares. And it lost less than 100 shares would have lost. But if we keep going down, you get hit with double the shares. And so that's why, for me, it was a no-brainer when we were looking at Oklo yesterday. And we're like, geez, the 50 short put in March, that's what we have in Jan. And I had twice as much as the stock I really wanted to have.
Yeah.
Or what I had before. Do you know what I'm saying?
No, right. I know.
It kind of makes sense to close that and put on something new. And then even this, Zebra, we say when these zebras become out of the money, everything left in it is extrinsic value and it's not going to pick up one for one. I closed that too.
I would close this and let's just buy 100 shares of IBIT.
Yeah, I kind of think so. So then we got out of all of that and buy 100 shares. Now, that's not premium selling, and the rank is 100.
I mean, you could sell weekly puts until you can put the stock. That's what I do when I want a stock that.
I know.
I mean, you can go 8-day. You could go a little farther. Like, just, you know what I mean?
And just sell weekly puts until we get put the stock.
So now, though, the caveat with the weekly puts is that you will only make. So I don't expect it. I don't expect it to rise like a phoenix from the ashes. But
you never know.
You never know. So that's the problem. But we just closed 3 bullish trades. One.
Yeah. So I
got an idea. Buy the stock and sell a triangle around it.
That's what. But then we're still capping ourselves to the upside.
I know we're capped to the upside no matter what we do. We would have been capped to the upside, no, because both of those trades, the zebra and the Bob on Fire trade, would not have picked back up until we got a little higher anyway.
Like for me and you, like in your account, Liz, would you cap yourself to the upside and IBIT right here?
No, I'm thinking about selling that call from that Bob on Fire trade.
Yeah, buying the call back. Yeah, so I'm not capping myself. If I'm not capping myself to the upside and you're not, the problem is, if we lost on the way down in IBIT, and I don't know how much we lost in IBIT, but a lot. It's our biggest loser this year.
Buy 100 shares of stock right now as a Band-Aid over a bullet hole, and we can sell premium against it when we open it up. When we think about it another day. We closed a zebra. We took this position. When I looked at it, all of our positions together, we're holding up about $5,000. So we cut the risk in half. Not risk in half, but the market buying power in half.
So I bought 100. I bought 100 shares of IBIT, and I think let's just go back to our. Let's just, as far as premium selling, go back to our weekly Jade Lizards.
Yeah, sure.
Right.
Yeah. So you have to go backwards with it. You have to do the call first. The call spread first. And then, so you got, what'd you get? How much do you have for the call? Like 20 cents to go buy something for 20 cents. Because we don't want to put that much capital in.
Look, with this vol, you can't.
Yeah, you can't. That's the problem. Remember, we were talking about how there's no volatility in it. There's no volatility in it.
Here, that's fine. 36.30.
Sure.
And 42.43.
Yeah. If you want to bring that one put up a bit, I don't care if we do.
Oh, so this one.
Yeah, the 36 to the 35.5.
Yeah.
Okay. I mean, it's pretty far. Like when we were doing these before, Jenny, they were right underneath where the stock was trading, the put we were selling.
Okay, so that's going to be, so we've got 100 shares of stock, and our premium around it is going to be our weekly Jade Lizards. We're back to that. And if IBIT skyrockets, if Bitcoin skyrockets, we're not capped to the upside, because that's kind of similar to the silver whipsaw. It's like, okay, that's one thing that people will complain about with options. Like you lose $2,000 on the way down, and then if all you're doing is selling puts, you make 400 back on the way up. No thanks.
Yeah. I just want to be, I glanced at the chat, and Master Pillows, you're 100% correct. We did just sell the stock that we were long and then just buy it back. 100%. We were just showing 2 different.
Like when you get assigned on a spread, how to like remedy that. Yes, you're correct.
It's for sure correct. And like I said, we had differing positions that we just kind of were managing separately.
And we didn't really know what we were going to do. Like we didn't know, we didn't know when we closed that spread we were assigned, this is how we close a spread when we're assigned. We didn't know what we were going to do in IBIT after we closed that. We didn't even know we were going to close the zebra.
No.
Like we were kind of walking through how we would manage it and deciding at the time.
But that's it. You can, what I find fascinating about trading is you can change your mind right away. That with the commissions as low as they are, this is no harm, no foul. It was only down 66.
Now this DraftKings, didn't we just change it? I was going to say, okay, so I wanted to say, like, how are we down $600?
No, that's the Bob on Fire trade. We changed the one short put to the one long call for earnings.
So let's look at this. I mean, can you believe DraftKings is $25?
No.
I want to look at this again. Similar situation. When we changed we had a deep in the money put, deep in the money put. I think we changed that to 26 call. But when we put this on, DraftKings was trading 33. Now, if I do the math, 26 to 33, we've got $720. We'd be out $720 if we had 100 shares of stock. But what's this out?
It seems to be like six something.
600. Yeah. So like it does save you some money on the way down.
It does.
It does save you some money on the way down. So, and now it's at our short put.
I know.
So, and this wouldn't pick up till 33. I kind of think we do the same thing. We get out of this and replace it with another long position. And in DraftKings, the long position could be as easy as a zebra.
It does have earnings, but yes, this could be as easy as with things getting down so low. I kind of like the Bob on Fire trade because what it does is it allows you to still make money in the up move, but then not get hurt as much on the way down.
What I think is great with the Bob on Fire trade is if you're in a stock that has already gone up. You're in a stock that's already gone up, and you're like, geez, this has already gone up so much. I made a lot of money here. I want to keep making money if it keeps going up, but get back in at a lower price if it falls back down.
Right.
But it says save you. It saves you some money on the way down for sure. Okay, so I'm going to try to buy this back. One more shot. Third time.
The hard part about it is that you do have three markets that are pretty wide. You have 136 at 204. Liquidity is king here. It's not the end of the world if this doesn't come off though either.
I know. Yeah. But I hate that it's at our.
I don't like it either, but I'm saying the markets are pretty wide right now.
And it's at our short put. We could get doubly long and we're not.
But Jenny, look at this. Your 25 is 430 at 480. That's 50 cents wide. Each market was 50 cents wide.
That's why I think you're better off using the Jan leaps because they're around longer. I kind of think you're better off using Jan than Ds. I think they might be a little more liquid because people trade the leaps. Okay, so now I would say in DraftKings, throw in a March Zebra.
Sure. What did you just get filled on?
I just closed this.
Okay.
So it's $700. It's saving us a little bit of buying power, but now if DraftKings starts running up, it will pick up one for one where we're trading.
Ship it.
These markets are wide too. Look at these DraftKings markets.
The DraftKings markets are wide.
But even just 43 days out.
Yeah. Well, Jenny, this is one of those situations. Hold on. Don't send that order yet. This is one of these situations where you're better off just buying the 20. You're paying $7 for a zebra.
Yeah. Or do we just like we did here? We bought one for earnings, and we'll change it after earnings.
Sure, go for it. All I'm saying is those markets are really wide too. That doesn't make any sense. 180 at 430.
Yeah,
don't do that.
Yeah. So DraftKings is tricky. We had a couple deep in the money puts in DraftKings. Maybe I move this. Whoa.
That's what I'm saying. These markets are too wide. You can't do that in there.
I can't believe it. Even in the 8-day.
Mm-hmm.
What is going on?
I mean, I think this is. So do you remember being on the trading floor when things were going crazy and you could hit that button that said widen markets? I think that plunge protection was hit.
Plunge protection.
Yeah.
Yeah, and SPOO's only down 66.
That's what I'm saying. So in the options market, when volatility was going through the roof, this was back in the heyday, you could literally say fast market, and fast market meant your markets would widen out across the boards. And that's exactly what happened here. And it's widened out by a certain percentage.
And, DraftKings just had, I don't know. Have you seen my DraftKings t-shirt, Liz?
No.
For Christmas, I got, my brother bought me a DraftKings shirt, and he said he was searching for a shirt that said DraftKings Dumpster Fire because I was last place in our league.
Really? Oh my God.
So I got a DraftKings shirt for Christmas, and everyone was making fun of me.
That's awesome.
Because they all want me back. Probably they just want my money, but I don't know if I'm going back.
Dumpster fire.
Dumpster fire. DraftKings dumpster fire.
Awesome.
All right. So what are we going to do? How are we going to replace our?
I think you have to go with the other market, where you were. Just buy this 20. Buy the 20 wherever you were going to put the zebra. Buy the 20. It's $7. We're giving it 40.
We could figure out purity here.
$7. Yeah.
26 26 plus 50. It should be like 26 plus. So it should be 650.
2650. Yeah. So
Or
put in for like
670, something like that. There we go. Did I get price improved?
No, you did not.
Oh man. All right. Well, now we've got that, and then our other option that we had in the 8-day. It's just kind of cleaning up some messes.
Yeah, it is cleaning up some messes.
As far as new trades, what I really wanted to get back in. What do you think?
Oh, I'm sorry. I was pushing things out. Sure.
Now, 50 rank, 6J, falling. It had that like big lift, and now it's falling. I would say like
a broken wing. Oh my God.
What?
I hate figuring these out. I was thinking the same thing.
Right. Like,
but your max profit here is what you're collecting, what seems like 162. But
here, I'm going to go to the analysis page. It'll be easy. It'll be easy to figure out. Because here, then we can see, like, okay.
Our max profit, okay, we're collecting 37 cents over. Okay.
Only 37.50 to the upside. But
yes.
we might be playing for it to go. And then our max profit here
is going to be like 500 something. You're going to keep going on.
Yeah, $675 to the downside.
Yes. What's our max loss? Can you take it all the way over?
$575.
And it's trading right up there right now. Yeah, sure, go for it.
Well, I don't know. We could shift it.
Thank God for that analyze tab.
We could shift it. I just wanted to do something in 6J. You know, the last time it got down here, the rank was very low. I think the rank was low because I remember talking about this with Glenn. And the rank was low, and I just bought a call. But now with the 50 rank, I'm curious to see. Like, all I did was I bought just like a right at the money call, and I didn't pay $850 for it.
Yeah, that's expensive. I don't mind that downside broken wing butterfly.
Yeah, what was that?
Although if I'm collecting 37 cents, I'm bearish.
Right. Well, I mean, you know, I feel like it could come.
Theta Trader said, yen, don't do it. It will always break your heart.
Don't do what?
The yen, don't do it.
Oh, really?
Yeah.
See, I'm happy with my yen this year because I had like just long calls here for this run.
Yeah.
That's from Theta Trader.
Yes.
All right. Well, maybe we'll just keep an eye on it.
I mean, so the interesting thing right here now, Jenny, is volatility is lifted across the board, right? So with volatility lifted across the board, we don't necessarily need to, unless you, I kind of agree with you, unless you have unlimited profit potential, because you wanted to buy a call, that downside put ratio spread, we're not getting enough. That's bearish.
Yeah, we're not getting, but I wouldn't be surprised if it went down a little more, but
yeah, but we needed to go down and stay down if we're going to get anything.
And I just went to a longer term chart. Yeah. And it has been lower. So, yeah. Okay. All right. We'll follow Theta Trader. And do nothing.
Yeah. I mean, there is volatility everywhere else. We don't need to chase it in the end, especially if you were thinking about buying a call with that high vol.
No, I said last time I did because of the, because it was such a low rank, but now we've got it back down and we have a high rank.
Yeah. Take a look at all the earnings today, Bob on Fire. Amazon, IREN, MSTR, Roblox, Reddit, Bloom Energy, Affirm, Team. What is Team? I don't know what that is. And MCHP.
So there are a lot. Speaking of, so we'll take a look. Let's take a look at some of these earnings. Speaking of, we didn't even look at Google. Now, Google yesterday was.
Did we put something in Google?
No, we didn't. We decided not to.
Okay.
Now, Google was kind of all over the place. It was down, and then it was up, and then it was unchanged, and then it was up, and then aftermarket, after the earnings. And
Did you hear the Batista brothers talking about it today? They were saying if you had this news, Google, I guess apparently Google's earnings were amazing, like amazing. And this just shows if you get the news ahead of time, what are you going to do with it? Now, Google could be down because I think the expected move was like $25, and it's only down $9.
Right. So it's not. It didn't go. And Tim Knight kind of called it. Tim Knight said he didn't think Google would move much. I don't know if he compared it to Walmart, but he said now Google doesn't have big moves that much. It's just kind of I don't know. And he was right. I mean, down only $9 is nothing compared to its $26 expected move.
Yeah, right.
But we didn't do it. We thought we'd wait. But today, the big one, Amazon.
I know.
And look at the drop in Amazon today.
Yeah.
That's worse.
A lot of those have been hit. I mean, honestly, though, if you wanted to get long Amazon, looks like an opportunity.
Although to me, it doesn't look nearly as bad as that Microsoft.
That's what I'm saying. This looks like Amazon looks like a buying the dip opportunity because it's been there before and it seems to bounce off that level. If you look at the Amazon chart. You see what I'm saying? Like it's been there. It seems to be, I am not Tim Knight, but that seems to be some type of level of resistance. You know what I mean?
Right. Yeah. But when do you remember the split? Like after the split,
you'll never see it. Like the split just goes in.
No, I know, but after the split, they feel like it was $100.
Yeah, it did. It got down to 120.
Like doubled since the split.
Yeah.
So I don't know. I've in this crazy market that we've been in the last week, I've been a little apprehensive to do too much on earnings. Like all I did in Google was a calendar.
I know I switched my Google trade to take a lot of risk off. So that's just it. Is we talked about this with what we were just looking at. There's volatility across the board. We're earnings chasers when you need the volatility. I might hesitate. I might be like after earnings, like taking a look at Google. Maybe we could put something in Google today that's after earnings.
Right. What are you gonna? I know you have. I don't have this. I know you have a lot of Bloom Energy. What are you gonna do?
So here's my conundrum. Bloom Energy this is a good thing. This is a high class problem. I'm not trying to be like, woe is me. I have zebras and it's in my IRA and I ratcheted them from 10.
Then just leave them.
That's what I'm saying. So that's the question. I have them. I've ratcheted them up. I have followed it up. I actually followed it up and followed it down and then followed it back up again. So I'm exactly where the stock would have been. But when I have something like that, I can only lose down to my last zebra. So I think I can probably lose down to 130. Do you know what I mean?
Yeah, and if you have,
I have them on for free. I have them on for free.
Right.
There's no move in Bloom Energy that will take away all my profits. How about that?
So if a stock keeps falling and you keep ratcheting, moving your zebras down, you could end up giving back all of your profits that you thought you locked into the upside. So maybe I would just leave what you have.
So I have the zebras and they're in the 45-day, but the options, so I thought about just moving it to a single call or something in the near term, but they're probably so expensive.
Yeah, they're so expensive. Look at so much premium in there. Yeah. Maybe just leave it. So a lot of these earnings, I don't even know if I don't even know if I'm going to do them.
So do you want to take a look at Google? So real quick, Ajit did post something in Google that he wants to do, and then somebody's asking if we're no longer bullish in IBIT. We are bullish in IBIT.
Yeah, we just bought in IBIT. Now we have 100 shares, and we have a Jade Lizard around it.
Yes,
it was just how to change our position so that if it goes up from here, we would make money 1 for 1 as it went up instead of having to get so far up to our call spread.
Correct.
On this, okay, Mikey, good to hear from you. On this blood red day, booked 123% profit in 2 days, thanks to my Polish princess, Jenny, with the ZSL.
Yeah.
Well, good. I'm glad. I didn't even because
Well, I'm glad he's taking his profits. Like that's what you're supposed to do is take your profits. We could have taken it off when we were in Mexico and we didn't. Now it's back up today, but not nearly to where it was.
I can't get rid of my ZSL because now my ZSL right now is exactly 1-for-1 with my SLV puts. So like whatever I'm losing on my SLV puts, I'm making on my ZSL. And so I have until those SLV puts are gone, I can't get rid of my ZSL.
I get it. It's kind of a little bit of a hedge, but you're going to lose on one and make money on the other, but that's okay.
Yeah, but I don't want to take off my ZSL and then keep losing on my put. So I'm just leaving it.
I get it.
Mikey and the guy next to me on the plane.
Yeah, I like it. I know it's confusing, but we're complex options traders, and most of our viewers can follow.
So is Mikey. Our Blue Wackadoo. So glad I got out of my long SIL yesterday at the Open. This is crazy town. Bought dips. Now we just ride.
Blue Wackadoo, I kind of feel like if you have the account, number one, if you're over leveraged in the beginning, it's a problem. If you're over leveraged with premium with this drop, it's a problem. But I think Tony Batista made a great call today being like, he's never had a margin call. Like I've never had a margin call. You've never had a margin. Have you ever had a margin call?
No, but my son has had a margin call.
But and I know, but that's hard with a very small account.
Yeah, right. When he was 18, he started with a $5,000 account. He probably got a margin call like shortly in. I think in the beginning we just started putting a bunch of stuff in because with $5,000 you can't do too much.
Yeah,
you can't do much. So we started putting a lot of stuff in, and we had a lot of puts and low price products, but at some point he had a margin call.
Yeah, because I think the account dropped down. I mean, this is what happens. It's subsequently risen, but I think it went from like 5 to 3, and you got a margin call.
Oh yeah. He's doing great now, but I'm glad it was shortly after we started his account.
It's good to see.
I'm glad he saw it. It's good to see and not just think like, oh, the market just goes up.
Yes.
But Blue Wackadoo was talking about silver, and yeah, it's been a wild ride in silver. It definitely has been.
Yeah. Still an 83 rank. So, when we were looking at it before, it was like 128 rank. Now silver, I think there's only so much IV rank to give because now it's giving it to Bitcoin. Right?
Yeah, only so much IV rank to give.
So you got to take from Peter to give to Paul. Now Bitcoin is back in fuego.
Yeah, so Blue Wackadoo, good luck. Well, at least he closed his, so that's good. Now we've got Ajit, Google Play below simply just an inflated IV. I was comfortable both ways. Earnings were great. Stock was inflated coming into earnings. Yeah, I agree with that, Ajit. A lot of things have been inflated. So now he just has to strangle in Google. So we could replicate this with an iron condor.
So it's still got a 30 IV rank, and I don't know if he did it yesterday or not.
So let's take a look.
Yeah, so take a look at this. So this was the earnings that he has on there. So he just sold the short strangle on earnings, and that would have worked because Google, even though their earnings were so good, it stayed within its expected move. He's got its expected move was up $23. I saw it a little higher than that at 1.2 Ajit, but 23 sounds about right, and it's only down 9. So premium selling in that environment would have worked through earnings.
Right. But I'll take a look now because
Wait, can you go back? I want to see what the IV rank was before earnings. Does he say that? He usually does. No, it just says inflated. That's okay.
Yeah, it doesn't say. And that would have worked for him.
And I know it was an earnings play because did you see where the stock was?
Yeah, 333. Yeah. And we still have a 30 rank. So we still have a 30 rank. I'm curious, going out to March, if we just went to the expected move and did an iron condor, if according to Tim Knight, Google doesn't move much, it's just like Walmart. You're getting $2 on a $5 wide. That's not bad.
It's not bad. It's over a third.
It's kind of bouncing around.
Yeah. But this is
not terrible. Look, you've got 15 cents wide.
That's what I was going to say. These are tighter markets than we've seen in some of the products.
Yeah, I don't mind $2 on a $5 wide is pretty good.
I do want to cherry pick this because it's something we haven't talked about in a while. Somebody's asking, where can I look up the expected move? And we just casually mention this all the time. So Jenny, can you just show where you can see where the expected move for the cycle is?
So in March, where I'm working in order, this yellow dot means I'm working in order, all the way to the right here And I know, I'm sorry, my arrow is not displayed.
No, but if you just follow it over, those parentheses on the side are the expected move for the amount of days that are in that column.
Yeah, so if you look at March 20th, 2026, 43 days, and go to the right, that 38.3% is the implied volatility, and that plus or minus 2850 is the expected move. That 30.3% implied volatility is giving you that plus or minus, now 29, up or down $29 move. If implied volatility were up to 45, well, then that plus or minus number would be in the 30s, and that would keep going up as the implied volatility goes up.
The other thing I want to say too is if you can open up any cycle you want. So she's opening up February. And you can see it in the corner. So now it's just that cycle so for February 20th, 2026, the expected move is up or down 1760. It's also visually represented by that brown bar.
Right. So the top right on that blue line where it says 1754, if you look in that middle where the strike prices are, that brown bar is the representation of that 1753 up and down.
So if you were going to, just so you can see 1753 and you can see that brown bar, if you were going to close this and go real far out in time to like a leap where the expected move is a little bit farther, that brown bar will be bigger.
Yes. Yeah. So like, let's go to something like.
No, just stay in that product. Can you stay in that product?
Oh, you mean further on time?
Yes, yeah. Further on time. So say you go to then whatever. Pick it.
Here, I'm going to like 288 days.
Yes, then you can see 8607 is the expected move, and that brown bar is a visual representation of it's $86 down and $86 up.
Yep. So that was a good question.
Kids these days, I'm saying this to Sergio, kids these days have everything because we used to have to do the at the money straddle times like 0.89. Do you remember?
Yeah, 0.85. Like straddle, it was like straddle plus strangle divided by 2 times 0.85.
Right.
Or anything else? What do you think, Liz? Anything else in Twitter?
Let me take a look because we did. So we're not, I think we kind of agree. I think I kind of agree with you. We're not going to go back to Twitter and go top down. It's Punish Pixels. Yes.
I was yelling at the screen. We knew it, but we've got it. We've got it on. So, and honestly, we put it on when spoos were down 90 and now they're only down 60.
Yep.
$50.
It's not bad. $50 ain't bad. The only reason I'm saying $50 ain't bad is because what is that? What line is that from? Toy Story with Ham, and just where he was saying the red everywhere.
Oh yeah, where he had it right here.
$50 ain't bad.
Oh, well,
so I mean, we could take our $50.
No.
I think we need a couple $100. I would say in my head when we were doing this, I thought $200.
Yeah, we'll leave it for a little bit. Hope for a rally. And
then I'll be 3 for 3 with Punish Pixels if that's the case, because I did the short one too.
We have 2 minutes. I just want to see where Reddit is. I used to trade Reddit all the time. I don't anymore. I haven't traded Reddit since it had a big run up, and I thought I'm out now. But
we don't have anything in our account that has earnings, do we?
No, we don't.
I mean, and also I know we have a minute or two, and that's it. But I also want to see where volatility has been today, because I want to see if spoos are down 55. We were down as much as 102.
I just want to see how much it's expensive. The diagonal on Reddit's expensive.
Yeah, they usually are.
$20 wide for 860. VIX, where volatility's been. VIX right now, 19, 2024.
It's got a lot higher than this. So
it got to 22.
Yeah.
Opened at 1920, as low as 1906. I think at some point we rallied back where we were only down 30, and that's when it was like back to 19, and now we're 20.
Yeah, I agree.
Geez, this was a fast show.
Yeah.
Like, we're out of time.
The fastest hour of the day, done and dusted. Okay, we did not place any earnings trades today. I mean, I have Bloom Energy. I'm actually hoping for an up move in Bloom because it's come down a little bit. But other than that, we don't have anything in our account for earnings, and that's okay.
No, and I'm going to, on the end of the show, I'm going to close. We leave some of our FX positions for so long. Oh, it's not as good as anymore. I was going to surprise you with our great our British pound US dollar. It was more of a winner earlier, and I was going to close it for you.
If we want to take something off the table, you can.
Nah, we'll wait.
Okay.
I mean, I don't know when the shekel position is ever going to come back.
The shekel.
But that's going to be with us forever. That is going to be with us forever.
All right, everybody out there, good luck with your earnings trades today. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
shedding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. skin is thin and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love will love you. What would love do? Love will love you, love you. What would love do? Love will love you. What would love me? Love will love me. Love will love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path. And if you need me, I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what will love do? What will love do? Love will love you. What will love do? Love will love you. Love will love you. Love you. What will love do?
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
What's up?
And it is a lively day here on the SIBO floor. We got the SPX pit behind us. We got the VIX pit next to us. And it's been loud. We've had plenty of loud yelling matches, a couple of lulls with some quiet times, but that was kind of paired with the market rally. We were down 100 in the E-minis, down 400 and change in the NASDAQ. That's been cut in half, and it's kind of a wild day here.
Yeah, little verbal dust up in the VIX a little while ago. It's typical. It happens. But definitely this rise has kind of coincided with the European close that we will see from time to time, or even the days where the market is up big and then you see a little bit of pullback heading into about 10:30 Central Time, 11:30 Eastern. So you could definitely kind of see it coinciding with that. We'll see if this holds. I personally don't believe it. I just can't yet. But market still seems to be moving a little bit higher here, coinciding with not just the market but silver, among other things. So interesting day so far. I mean, I think there was there wasn't jobs report. Jobs report's coming out next week, but there's all these other job things that have come out.
Yeah.
And they haven't looked good. It doesn't really look good. I mean, truth be told, like, the job market is not looking that great. There's no chance that we're going to lower rates anytime soon until maybe June when the new chair gets in. So I don't know. Economy might be on shaky ground a little bit, but I mean, to sound at the risk of sounding a little bit like Chris Vecchio or Ilya, all right, GDP is good. So that's a positive thing for the economy, but I don't know. Generally, things are I think a little bit nerve-wracking, and then you add everything that's going on in here in the market with the software names, with the AI names. I got to tell you this. I said this before, but it gives me this feeling of like the DeepSeek stuff that was coming out around this same time last year, late January into Feb. I know there was a lot of scares of certain companies that were just going to completely get replaced, and those fears might be overblown. I guess we'll see how this all plays out in time.
Yeah, we had the market aggressively selling off. You had Google earnings after the close yesterday, and they destroyed their estimates. And that is not even saying it lightly. I mean, they destroyed the estimates. The market was down after the close. It was net up 15 points, and then we ended up net down 15 points. So the fact that a company like Google can absolutely blow their figures out of the water and still sell off 4% just tells you everything you need to know about this market and the volatility associated with this market, and really more importantly, the binary nature and unknown nature of earnings. Like, you could have said, yes, I 100% believe that Google's going to destroy their numbers, but that doesn't always mean the market's going to go up. And I think that's especially important when these numbers get so blown out of proportion, where for Google to rise to 350, 360, they would have had to destroy it even more and had even more positive guidance. So to your point, I think we could be in shaky waters here with some of these tech stocks that have yet to announce. We've got Amazon.
Well, before you get to that.
Yeah.
That's the whole thing about earnings sometimes. I mean, the capital expenditures, or CAPEX, as everybody loves to talk about, is the thing that's keeping this down right now in Google, right? I feel like I think it was Microsoft and Meta. Just this earnings cycle, both of them had crazy high CAPEX expenditures. Meta took off on it, and Microsoft did not. And so I don't know what I want to do with earnings going forward now. Like I'm a little nervous now because I don't know what to do. Like you said, Google smashes it, but the whole CAPEX thing caused them to fall. So like, I know the big thing always has been about cloud with Amazon. What's it going to be tonight? Is it going to be about their CAPEX spending or something like that? I don't think they have any real AI projects, but is that going to be an issue? I don't know. And like that's the interesting thing, and it's just all about when you come out with earnings, right?
Yeah. It's hard to imagine that if Google can't stay afloat and have a rally after the numbers that were reported, like I have a hard time believing that Amazon could. However, they did last time. I remember last time Amazon was the only tech stock back here. The market was selling off and Amazon was up. So
it's true.
Really, I think, thinking about it, I think I'm going to go right back to the well and do the same exact trade that I did for Google, which is the double calendar spread, long the Feb monthly, short the weekly. And you can see this here, 17.5 point expected move for 1 day and 20 points for Feb. So we're going to be able to offset almost all the cost basis on these long options. And if we get a nice vol crush and a move towards one of the strikes, like we did in Google, we'll be able to close that. So this morning, I did actually close. I had this double calendar on, long the 315 and 340 options in Feb, sold those options in the weekly, bought that whole package for $5.50 and sold it for $7 this morning for $150 profit.
Nice.
30% return on debit, and I'm expecting that we can set up something very similar in Amazon. So yeah, we will see what the market brings us. If you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. You'll see this video streaming front and center, and you can throw in your trade ideas, questions along the right-hand side chat. But yeah, we've got Amazon after the close. Let's do a quick rundown real quick of any other earnings. Give us some earnings trades, and we'll look at them and try and put them on. But after the close, Amazon, that's pretty much it.
Yeah, it kind of is. Yeah.
I was expecting to see more, but that's pretty much it. The futures markets are flying around though. If we look at what's moving to the downside with the general market, we've got MXP, Micro XRP futures down 20%. Huge move there. Silver down 10%. ETH and Bitcoin down 8 and 7%.
Below 2K.
Yeah, crazy. Bitcoin having a really hard time here. MicroStrategy's at like $100, which is nuts. Crude oil down 2.5%. Gold down 1%. So silver leading the downside charge with the precious metals here. And then flipping it to the upside, soybeans, wheat, and corn. Who would have thought? Which, I mean, I guess makes sense considering all these other markets are just tanking. Why not give a little bid to the silver, wheat, and corn markets, or soybeans, wheat, and corn markets here? But we did, looking at the vol structure here, we did creep into backwardation ever so slightly. The G contract was slightly higher than the H. Right now we're seeing a pretty flat vol structure here, 2010, 2030, 2090 for the next 3 monthly cycles, and then we get into a little bit more of a contango into the K and the M, but still, all these contracts are above 20, and the fact that we creeped into backwardation today tells you all you need to know about the market and its behavior. So I would say be careful out there, keep your risk in check as always, but plenty of opportunities with a lot of these tech stocks selling off. Microsoft almost below 400 for the first time since the April lows, the tariff lows back here. You've got Amazon selling off to recent lows. You've got Apple kind of chopping around that middle of the range. Again, Google had great numbers. They sold off. They're rebounding from the lows today. But yeah, a lot of volatility to be sure here. Nvidia chopping around the lows. MU had a nice sell-off. This benefited us because we had this 100-point wide iron condor with the short options at 400, 410. But still, extrinsic value marked loss considering the vol pop and the creep towards 400. When we put this on, it was right in the middle of the range. So we just need to wait and see if we can get some vol out of there, get that time value out of that contract. But yeah, one other thing real quick before we get to our trade ideas for the day. Micro E-minis and micro NASDAQ, we've got these strangles on. If you did not roll into the March cycle before, today is a good day to do it because we're seeing an extrinsic value boost of 50 cents for one contract, which tells me that if you were to roll from Feb to March, you're going to pick up about 50 cents more than what we did when we rolled into the previous sell-off. So great opportunity if you're looking to roll into or from Feb to March if you're following that trade. But outside of that, nothing to do. Still in the middle of the range. We got 200 points of downside wiggle room, and we've got 400 points of upside wiggle room. We're right in the middle of the range. This is exactly where we want it. We'll see where the market goes, but it's a hands-off approach today since we're already in March.
Yeah. Mine's a little in the money. Mine is 59 delta at the moment, my put. But I have not moved my call, of course. I mean, that's way out of money. That's 8 delta call at this point. No reason to touch that.
Yep. Have you done anything else this morning, or we're waiting on some more activity?
I have not. I don't think.
Cool.
No.
Looks like it. Yeah. No. So yeah, threw on a new trade
outside of the trade that we're going to talk about.
Yeah. Let's get right to it. So yes, it is Thursday. We've got a couple trade ideas for you. SPX pit behind us. Let's trade a little SPX into this market sell-off. What do you got for us?
Classic iron condor. Why not? And doing it for next week. I figured it would only give a week here, but went with the 6,600 to the downside. Gave it a little bit of room from where we were today. We were at, I think, lows of about 67. God, where was I lose today? 6780. Yeah, I didn't think it was 6750. So gave it a little bit of room to the downside. As far as the upside, I mean, I basically chose 7,000. We've only touched that once in the 5 weeks of trading this year.
Yeah.
I'm sure we'll eclipse that at some point in time. As a matter of fact, for the end of February, I have a call butterfly starting with 7,100. So I am still participating to the upside. But in this case, just want to take advantage of this volatility. I mean, SPX IVR was like 30, 31 when I put this on at the time. So just want to take advantage of that.
I like it. I think I might follow you into this one because I've got a bunch of positions that are within this range, so it'd be nice to just throw on some extra premium, reduce cost basis around those trades. But yeah, I like this a lot.
I was thinking about following your trade too. That was actually messing with me. I was trying to find something, but I liked yours. I wanted to do something a little bit different.
Yeah, I gotcha. But yeah, I think this is a great time to place a trade like this, especially in a near-term cycle that's going to be very implied volatility centric when it comes to the extrinsic value. If we chop around here tomorrow, you're going to see a big vol pop or vol crush, and this can affect this type of trade very much because we have the weekend premium that might come out after a day like today, and if there's a big vol crush tomorrow, you'll see this premium dissipate at least, I would say, $75 to $100. So yeah, I am going right back to the well here. I've got the 6,700, 6,690 short put spread that I threw on this morning, and I bought the 69.50, 69.55 long call spread. So I'm getting back to the Super Bowl setup, selling a 10-point wide put spread to buy a 5-point wide call spread. The middle range, I was filled at 40 cents, so I've got 40 cents of credit that I'll keep in that range, and if we get the rally, that 5-point wide call spread will appreciate to $500 at expiration. $250 prior to expiration if it goes in the money. So looking for a bounce here and just layering these on as we get these sell-offs because until we're proven that the market is ready to go into a free fall, I want to keep buying these dips in a small way and keep that risk defined. But max loss 960, max profit 540. Pop is right around 60% because I don't lose money unless we drop below 6,700. And I wanted to show the overall portfolio as well. So I'm starting to build a mountainous SPX position.
Yeah, you are.
But I've got a 100-point wide butterfly, the 6,800, 6,700, 6,600. That's why I like your Iron Condor, because it creates premium below or at 6,600 and below, and then at 7,000 and above. So you can see all of my positions are right in that range. So if I threw on that Iron Condor that Jamal had, I would have another $300 of profit potential between the range of all my positions, and it will just reduce the basis of all these trades if it stays within this chop range. But 100-point wide butterfly, that offsets a lot of the risk of my short put spread from my previous Super Bowl, 6,700, 6,790. And just something to consider here also, I've got 2 call spreads to the upside. So this risk graph, I did not change implied volatility at all. I pushed the time estimate to February 20th, as you can see here. So my nearest term options that will expire in SPX are Feb 27. So this Feb 20 theoretical P&L reflects 7 days to expiration with the 100-point butterfly and some of the other positions there. So this is kind of that smoothed out risk graph. You can see I start to take on risk if we're 7 days to expiration in Feb. I start to take on risk at about 6,600, and anything above that is gravy. And it just depends on where we are to see what kind of value I can get out of this thing. But this is all of my positions that I have on an SPX. I think that it's important to put on new trades. If you're putting on new trades in SPX and you already have existing ones, just make sure that you're putting yourself in a scenario where you can make money on all of them. Don't layer on positions that completely offset your profit potential on a trade you already have on. That's where you can get into, locking yourself into losses. So always analyze your positions and make sure, best case scenario, you have the ability to make money on all of them, and you'll be in a good spot.
There it is.
So yeah, I think I'm gonna do your exact same trade.
I wanted to show something. No, you can go stay on SPX. Just go to the graph. Let's go to the chart. Go to a year to date. It just shows this even easier. Look at these, except for the 20th, which was expiration, which is the big red bar where we actually finished on the lows. Yeah. You look at a lot of the moves where we've had big down days, and you see these big candle wicks where we didn't finish on the lows. The only day we did is the 20th. Even the day after expiration, which is the big green bar where we started on the lows and then went up, again, we didn't finish on lows. So there's been very few times where we've had big down days like this and we finished on the lows. Maybe I'm talking the book. Hopefully this is another one of those days. But and again, I said I don't believe in this rally, but there's no reason I shouldn't, because every time we've had big down days, we have yet to finish on the lows. And I think that's a positive sign. So as scary as these have been, we haven't finished on the lows except for one day, which was expiration, which are always a little weird.
Yeah. And I think a lot of it can be attributed to the concentration that we see in a lot of these products and the sectors that are moving. Like when you look at the NASDAQ 100 list, you're going to see a ton of big names moving to the downside. Amazon, Workday, Google, AMD, Palantir, Qualcomm, MicroStrategy's selling off aggressively with this Bitcoin sell-off. But yeah, I mean, and then you see it reverse, and that explains why you see these big violent moves to the downside, reverse to the next couple days. But yeah, this could certainly go lower. But to your point, we've had one day on these big intraday ranges where we've kind of closed near the lows, and even today we're following suit with all these other red bars where the bottom is getting bought up. And if we do get a reversal tomorrow that's sizable, the positions we put on today are going to look pretty nice.
Yeah.
But yeah, I'm going to follow your trade here. The 8-day, 6,600, 65.90.
I am right on this day, and we go back down, I'm definitely following your trade.
Yeah, let's see if I can get filled at 330. Just throw in some extra premium here. This is pure vol premium. You can see here 20% IV for 8 days. You can see it drops as you go further out in time, but 160 points for 8 days, 200 points for 15 days. So when you look at, okay, if I double the time from 8 days to around 16 days, am I getting 320 points of implied volatility? No, not even close. So this shows you everything you need to know about where the implied volatility is concentrated, or the implied volatility value is concentrated when it comes to extrinsic value. And this is always going to be the case when you have these big sell-offs and big vol pop. You're going to see these near-term cycles account for a lot more implied volatility value compared to these longer-term cycles. And you can see here, like, looking at the 8-day cycle, 160 points, where on the time horizon do I get that 320 point implied move, which is double the implied move of the 8-day cycle? You got to go all the way out to 32 days. So a lot more than twice the time, 4 times the time. So to get that double implied volatility or close to it. So plenty of implied volatility in these near-term cycles. And again, if we chop around here for the next couple days, if we chop tomorrow, chop Monday, you're going to see a big vol crush, and you're going to see this premium just go to 0 in the 8-day cycle. So I like this type of trade a lot.
Absolutely. It's the plan.
That is the plan. Let's see if I can get filled here. 320 is the lowest I will go, and we'll let it cook. All right. Looks like we're letting it cook.
It's going to be difficult for you.
Yeah.
It's trying to be.
But yeah, Amazon, let's go back to Amazon, and let's throw this trade on. I think really, like, I see no reason to do anything other than what we did in Google. I think we can go to
double calendars. Yeah,
double calendar, just slightly inside the expected move. I mean, you can go to the expected move if you want, but let's just take a look at what this looks like. So it's trading at 220. If we go to 210, 10 points out of the money, 13 points out of the money, and then we go to the 240, a little bit higher, but you can see there's a lot of premium to the upside here. $7 of premium sold, and if we go to the Feb monthly and we buy the 210 and the 240, yeah, this is very cheap. So yesterday we did this exact same setup, slightly inside the expected move, bought the same strikes, bought the 210, bought the 240 here in Amazon, but look at the price difference here, which is attributed to this vol pop we're seeing today. With this option or this spread, yes, Amazon's cheaper in price than Google, so that also plays a role, but $3.
You did this for 5 and change?
5 and change.
Yeah, $5.50 or something?
Google, yeah.
Wow.
So yeah, we're paying $9, we're paying $10, let's call it, to buy these options in Feb, and we're collecting $7 to reduce basis against that. So we're reducing cost basis by 70% with a 1-day short premium relative to a 15-day long premium. This is a really good setup, especially when you consider where your risk lies. So if we go to Amazon and we go to tomorrow, which reflects the Feb 6 expiration, this theoretical risk assumes that we get all this value out of the short options, and then let's crush this 10 percentage points. So let's bring this down, the monthly cycle for Feb. Let's bring it down from 62 to 52% IV. This is what we're looking at. So $3 debit, if that's where we're filled, which I think we'll get instantly filled if I route it there. We'll see. But 10% vol crush, pushed to tomorrow. We get all this premium out of the shorts. You've got a theoretical risk range between 195 and 262.5-ish. And this can be a more than double. If you get a neutral move, or best case scenario, you get a move to the upside here to the 240 calls, that's always going to yield the highest profit potential, because an upside move where the stock price is getting more expensive means all extrinsic value around the new stock price is more valuable as well. So we want a move to the upside. We can accept a move to the downside, but this is a nice range of wiggle room here for theoretical P&L, and we just need our debit of $3. We need these long options to have $3 or more of extrinsic value, and there's a lot of ways for that to happen, as you can see on this theoretical risk graph. So
I like it.
Instantly filled at $3 as foretold. So yeah, I like the way these set up, especially into big moves like this, and it kind of goes along with our thesis like we saw in Google. Maybe Amazon reports big numbers, maybe the market sells off a little bit or just chops around here, but if we get any kind of inside move or move to the strikes we have, or even beyond a little bit, as long as the long options have more than $300 of net value relative to the shorts, we'll be in a profitable trade. So we shall see. SPX Iron Condor filled.
SPX, there you go.
All right, throwing on trades left and right here. But yeah, it's a nice way, instead of doing a straight up Iron Condor in Amazon where you don't have dynamic exposure to implied volatility, throwing on something like this, a double calendar, especially when you can reduce cost basis by 70% on the long options you're buying, it sets up a lot more implied volatility exposure in your favor for the earnings announcement that's happening after the close today. And that's pretty much it. Everything else, if we look at this portfolio here, like crude chopping around between our range, MES chopping around between the range, ETH A, someone asked me about a short put. Why did I sell a short put here instead of buying a call, or buying 100 shares and selling a call? Just a nice cost basis reduction, or a buying power reduction boost. So like I don't have to put up as much money to sell an in-the-money put relative to buying 100 shares and selling a call. So that was the reasoning there. We've zapped out a lot of extrinsic value with this sell-off, but we'll see what happens there. And then just waiting around, seeing if we can get a move higher in IBIT. Like, this is crazy. IBIT's down sub 40 now.
Yeah, someone was just mentioning the IVR in MicroStrategies, but yeah, IBIT, same deal. I mean, high IVR in a lot of these names right now.
Yeah.
All they do is go down.
It's crazy.
Yeah.
Crazy.
Yeah.
But if you're bullish in crypto, the best time to get in is when everyone's looking to sell. Like, honestly, it's the old adage. But yeah, it's hard to find a floor here, so you got to be careful regardless of what you're doing. Keep that risk in check.
I mean, I guess crypto is just taking strays here because of what's going on with the whole AI trade in general, right? Yeah. It's just the whole complex, whether it's nuclear, whether it's names like IREN, data warehousing, all of that. Yeah. It's all getting beat up.
SVXY, short vol product. Looking at this, this is one that is an interesting one to consider buying with long positions or with shares. Just looking at when vol pops and when you get that backwardation move, you're going to see SVXY tank. And if and when vol goes from backwardation to contango, you see this thing drift higher. So this morning was a good opportunity, better than yesterday, of course, but we're seeing this get bid up as well as vol calms. Market's only down 45 now. If we go flat today, I don't know what to tell you.
I don't know.
I mean, it's looking like it's possible.
It's looking like it's possible. I mean, at the very least, we're not going to end on the lows based on what we've seen more recently. It looks like that's going to be another type of similar situation here. But wow, if we go flat, that'll be really crazy.
Yeah.
Would not have expected that.
No, not at all. Why don't we pop over the YouTube chat, see what we got from the peeps here?
Yeah, let's do that.
Remember when Palantir was at 200?
I do.
Insane.
Yeah. Wow. Yeah, the stock's gotten rocked, man. Again, it's gotten swept up in the, I don't know. I mean, it just seems like a little bit overdone, this situation with the software and all of them, but what do I know? I don't know if this is much of a question as it's a statement. Straddle, strangle, swap, Roblox. What do you think?
Straddle, strangle, swap, Roblox. So give us some strikes to look at if you can in the YouTube chat. But yeah, I mean, a straddle, strangle, swap, I assume you're going at 63, maybe you're going like 60, 65, or a 65 straddle in Feb, and then you're selling the weeklies against it.
And this has earnings coming up?
Yeah.
When?
Today. After the close. So yeah, 65, 70.
They were just in the news recently. Situation with
Roblox?
Kids. Yeah. I made my son watch it on the news.
What was the situation?
God, this guy reached out to these young girls in Florida over Snapchat and Roblox. He actually snatched them up. Luckily, they were recovered safe. Yeah.
Okay, so it's actually like a wild story, insane story.
Yes.
Yeah, that's never fun to hear. Yeah, I mean, this is an interesting trade. I think you got to go. So with these types of trades, if you're buying, if this is what you're thinking of, buying a straddle in Feb, selling the weeklies against it, you just got to make sure that you can get your debit under the width of each of these spreads. It's very important because if you look at this risk graph, this is a theoretical risk graph of the vol collapsing 20% in Feb. You get all the premium tomorrow. Your risk, it looks like a risk-free trade. You have risk here, and your risk is if there's a bigger vol collapse. Yeah. So if you get a 30%, 40% vol collapse, now this is what you're looking at. You're looking at The dead zone here, you need a big move to either direction, and your premium or your value here is pretty low relative to the debit paid. So just be careful with that. But if you look at your theoretical risk, given this is a 30% vol crush, 40% vol crush, but you keep all this premium in the shorts, you're looking at $100, $150, something like that. Because Roblox is still very volatile, it's going to hold on to extrinsic value. So this debit paid is not really your true risk tomorrow, because you're going to get some kind of move. Your straddle is going to pick up some intrinsic value. But best case scenario here is you hold this to tomorrow, and what can you accept to basically scratch this trade? A 25% vol crush in Feb. So yeah, I think this one sets
is reasonable, actually.
Yeah.
I mean, this is actually one of the rare times where this type of trade can make sense.
Yeah.
I think that's reasonable to make an assumption of about 90 vol for that regular Feb.
Yeah.
That Feb 6 is definitely going to get smoked. I mean, 300 vol, like, holy cow.
Yeah. And you can see these here, like, these back months are 70, 80, 90%. Yeah. So this thing's going to go to 90% most likely, which is a 30% vol crush. And this is the importance of, if we go back to the curve analysis, I was mentioning the importance of making sure that your debit paid is less than the width of these spreads. So if you do a 5-point wide and you pay $7 for it, now all of a sudden you're in the red if you get a big move to the downside, and you're in the red if you get a big move to the upside. So just making sure that your debit paid is slightly less than your max profit on either side ensures that your $950 debit can be offset by your $100 or your $1,000 max profit to the downside and upside here. So just be mindful of that. But yeah, I don't mind it if you're trying to get a little spicy for Roblox earnings. But this is probably the setup I'd do: 65, 75, 55, or the 60, 70, 50, and just make sure you're paying less than $10 for that 10-point wide spread.
Next question. Could you roll out the MES to April on this vol spike, and if we get a vol crush later, roll it back to Feb? Not a dumb question. It's not.
No, it's not. I think the biggest issue is it gets a lot more complex and complicated if we do that, because if I roll to April, I'm rolling into a lower volatility environment, first of all. So 42 days, 71 days, you've got 320 points of implied volatility versus 386. So there's a lot more vol exposure in this 42-day cycle relative to April. Also, I'd be rolling from the H contract to the M contract. And as you can see, the H contract is about 60 points lower in price than the M contract. So not only would I be rolling into a lower vol exposure, I'm rolling into a new contract. I'd have to shift my strikes, and then if I roll back from April to March, I'd have to readjust back to the current contract. So technically, yes, you can do it, but you're not going to pick up as much premium as you think here. And if we just look at the 6,700, so the contract adjusted, let's move this up 50 points, the 6,700 and the 7,250. You're picking up $300 of extrinsic value. So it's not nothing, but again, you're rolling into a lower IV environment. It's more time-based extrinsic value. You're rolling into a new contract. You're rolling to a 70-day cycle, so it's going to be really slow. So I'm going to stay in March.
Yeah, and just look at the volatilities there. You can see it right there in the IVXs. You see how you're basically, like Mikey said, rolling to a lower one. Volatility works kind of like a weird cone. On days like this, it explodes higher in the front. So the question you really want to ask is, could you roll closer? But that's a little bit more risk, right? Like that's a lot more risk. You're probably not collecting as much as he just showed you between the March and the April, and you're adding a little bit more risk. So honestly, this is exactly the expiration you want to be in at the moment, given everything that's going on. And it's the perfect expiration as far as time. It also rolls into everything that we talk about the 45-day window, right? It rolls into all of that. It's in the 45-day window where our studies show that you see a lot of value decay within those windows. And so this is where you really want to be. But yeah, you could roll closer in time, but then you're giving yourself a little bit more risk. Yeah, you could roll farther out and probably collect a little bit more, but that's a longer cycle and it's less vol.
Yep. So yeah, I think all things considered, after the analysis, we'll just stand pat. And really, I think it's just the simplicity of staying in this current contract. This current contract has a lot of implied volatility value. We're at that 42-day sweet spot. And I want to see where we settle as we get closer to this expiration before I roll to the next contract.
Somebody wants an explanation on the chart candles. I'm guessing this is being asked because of what I mentioned earlier, but I mean, essentially, go to the year-to-date again. So we don't have a ton. So the idea I was getting at here is, again, I mean, you look at today, you can see kind of where we opened is at the top of that red bar, not the top, but like the top of the thick part of the red bar. The highest we've been is where the thin part is, and then the lowest we've been is down at the bottom, right? And so that shows you now where you see where we are, you see where we opened, and you see the highs and lows of the day. It's really that kind of simple. And so what I was getting at was a lot of these big down days we've had today, the day before that, you see we started lower or we opened one area, we went low, but we didn't close near those lows. The most interesting of that is, what was that, 5 to 6 days ago? That one. I mean, look at that. Like, and we opened not far from, we ended up closing not far from where we opened, but we were way lower at one point in time. And so that's just kind of showing you, outside of expiration on January, that's the only day where we closed almost near the lows of the day, even though we had opened much higher. So, this so far, this is almost looking like another day where we opened, we had a really scary point in time throughout the day, but we potentially might close way higher than the lows of the day.
And if this doesn't feel like natural to you, the way that you look at this, you can change this. But just keep it consistent. Like, if you change to one of these other ones, just make sure that you're looking at, you have the, just make sure you understand what you're looking at here.
That makes me feel like I'm in Patagonia.
I always just use this because I know exactly what this means. But yeah, if a candle's red, it means we opened here, we ended lower. That's the fill line, the open to the close. Here's the intraday range. If a bar is green, it means we opened down here, we rallied here, and we closed here. Some can get a little confusing. So like Google is a little bit confusing because you see this bar, okay, this is where we closed down here, and then we dropped lower, we gapped lower overnight. However, we opened at 310, we got as low as 305, and now we are currently at 322. So even though this bar is lower than the previous close, we are higher from where we opened today. Which makes sense considering the E-minis are down. We're down 100, now we're down 47. We're seeing a rally intraday. But yeah, just research these candles. These are the simplest candles that we use, and they can help you decide, where you want to put some risk, where you think the market's going to go the next day. But you're going to be wrong sometimes, you're going to be right sometimes. So you still got to keep your risk in check.
The Amazon calendars. Somebody wants to know what happens if it drops below 210.
Well, let's take a look here. So this is tomorrow. What do we do? Crush it 10 percentage points? I think so. If it drops below 210, we can still be profitable because, again, like in the simplest terms, what do we need to happen here for Amazon, for this trade to be profitable? We need these two long options to have more than $300 of extrinsic value. They currently have $1,000 of extrinsic value. So we're going to get a vol crush, we're going to get a move in Amazon, but as long as these two long options that I own total to a value over $300, which they're currently trading for more than 3 times that, then we'll be okay. So that's where this range comes into play. That's where this curve analysis mode is nice to see. Now the question is, where is this Feb vol going to go? Will it go down 10%? Probably. Could it go down 15%? Sure. Will it go down 20%? Yeah, it could. But either way, the nice thing is, if we look at this from a February 6th standpoint and we crush this vol 20%, we can still see we have a nice range to be profitable here. It's just not going to be as much. Our profit potential really relies on how little the vol crush is in Feb. So the less vol crush we can get, the better it is. And you can see my green zone here increases. Now we have a $400 profit potential in the middle here. If we only get a 10% crush, if we get a 30% crush, we're going to be looking at losses here. But I don't really see a 30% crush in Feb, considering that would cut this vol in half, basically. So we're looking for somewhere between 10 and 20%, and we'll be totally good with this trade as long as we're between 210 and 240. But again, we want to see that rally if we're trying to get the most out of this, because higher Amazon price means higher extrinsic value around the new price of 240, and we'll be able to make more in that scenario.
Question about if you're bullish, why not instead of doing a Super Bowl in SPX, why not do it in things like Nvidia or AVGO?
Well, I'm already bullish Nvidia. So Nvidia, I've got a 190-200 long call diagonal spread, long March, short Feb. So right now it's down, but this is kind of where I want to be anyways into the sell-off. But yeah, you could do that. But the reason why we're going to SPX is because, first of all, the pit's behind us. So we're giving a nod to them. But also, when it comes to big market sell-offs, what is the most predictable thing that can happen? The more the market sells off, the more predictable it is that we will be higher 6 months later, a year later, et cetera, et cetera. The S&P 500 is easier to trade for that reason. Nvidia could go higher as well, and I assume that if the Nasdaq is going higher, Nvidia is going higher too. But there have been plenty of times where that's not the case. You can see we got as low as 90 at the tariff lows. We went all the way as high as 210, and now we're sitting at 175. You could see a scenario where they announce something unforeseen and it's bad for the stock, and the stock goes from 175 to 150. Those are the kind of binary events that I don't necessarily want to be a part of if I'm taking a lot of risk and I have a year-long trade on, for example. So much easier to trade the S&P 500 where your worst days or your worst week is down 10, 15, 20%, which happens very rarely. But with an equity, it happens every single day. Every single day, there's some equity that's up or down 20%. So that's the reason.
To further make the point, look, you can be bullish in any one of them, all three if you feel like it. You can already see Mikey's bullish in Nvidia, he has a position. I'm bullish in AVGO, I have a Super Bowl in that. And so the answer is, if you just look year to date, the S&P 500 is basically flat. It's down like 0.06% at this point. AVGO is down 7.5% because it's been caught up in all this crap. And Nvidia is down almost 6%. And so that's your answer. It's cool to be bullish in these, any one of these from any given time, but the stocks always have their individual issues that they got going on, and that's your case in point. So the S&P 500 can absorb a little bit more of this stuff, and that's why we try to do more of these things in S&P 500.
Yeah, and especially like when volatility is low and the E-minis and Nasdaq are just grinding higher, that's where we're going to have more exposure to the equity markets because we're filtering for higher implied volatility opportunities. But when the market is selling off and vol is popping, I want to be putting on more trades in SPX and XSP and the E-mini futures because that's the opportunity to do so, especially if you're selling premium. But yeah, the product sizes may not be for everyone. They're a little bit higher than some of these other equities that you can find, but yeah, we've got positions and everything. But from a new position standpoint, when the market's down 100 points, the first place I'm going to look is the Nasdaq and the E-minis because you have a bigger opportunity there than you had previously, and those big sell-offs are more rare these days than an equity space.
So I was talking about a Reddit double calendar, 1 day, 15 day. I already have a Reddit position. It's way out of the money at this point.
Yeah, we could do this too. Why not? These markets are a little wide though. That's the only issue that I see. But let's take a look here. So Reddit, 20-point implied move on a $15 stock. Yeah. Huge implied volatility. 20-point move on a $150 stock. That's well over 10% of the notional value, and anything over 10% is an outlier for an earnings announcement, especially with 1 day to go. This might be one of the highest earnings implied volatilities of the entire quarter. So yeah, selling the 1 day. Let's just look at the 140. Yeah, let's look at the 140, 170. $870 a premium for 1 day. If we go to Feb, the 170, 140, $700. So basically, this can work for sure, but just be cognizant of the fact that you're paying $1,400 in the long options and you're picking up $700 in the short options. That's a 50% cost basis reduction, and don't get me wrong, that's still a huge cost basis reduction, but the trade we just put on was a 70% cost basis reduction, where we're selling 70% of the value in the short options that we are buying in the long options. So all else equal, this is a worse setup than the one we just put on, but there's a couple of things that are interesting about this. First of all, Reddit is a high implied volatility product, and Reddit is likely going to hold on to more implied volatility than Amazon will. Amazon might see a bigger vol crush after earnings, where Reddit might hold on to value. So that could be a nod to potential profit, but let's just do the same thing. Let's look at Feb 6. Let's crush this down 20%. So let's bring this down from 116 to 96 and see what we're looking at. So yeah, paying $700, you can make $300-400 in the middle here, $450 to the upside if you get that crush. Where's your risk? Your risk is if you get a bigger crush. So if you go down 30%, which is totally viable, possible, your range is still fine. You're still between 135-ish and 180-ish, which is still a nice range. But your profit potential is significantly lower. So just keep that in mind. Can we skew these a little bit? Can we bring this out? 135, 175, and 135. Oh.
I know, I hate when it does that.
135, 175, and 135, 175. So yeah, I mean, here you're paying $6. You're paying $13 in premium for your long options and picking up $560 in your 1 day. So this setup is a lot worse than the one we just looked at. So I think if you're throwing a trade on, I would do what we had previously, the 140, 170, and the 140, 170. What am I doing? Oh,
the haircut that some of these names have taken, like Reddit, like wow.
Yeah. So yeah, I think if you want to trade Reddit, totally viable. Just be really careful with your fill. You got a 630, 805 bid-ask spread, so you're looking at a $2 wide bid-ask spread on a $150 stock. Not too great. So just be careful with your fills in and out. I'm gonna pass on Reddit, but I like the setup if you want to trade it.
Great, Bob. Wow, it's gotten really quiet all of a sudden here. MU question. I have a Feb 13 put butterfly. 405, 400, 395.
405?
Yep, 405, 400, 395.
Okay.
And apparently they have it on for 590 credit. They butterfly to put ratio at some point. Now, would you close the 405, 400 for a 333 credit, or let the full fly ride to expiration?
Great question. So this is trading for.
This point you do nothing, right?
Yeah, this is a huge bid-ask spread, so you're going to see this thing fly around.
Yeah.
But yeah, in isolation, you do have this vertical spread on. The max profit on this trade is $500. If you close this now, and you sell out of this for $300, what you are doing is you're adding $200 of risk on your 400, 395 short put spread. Because instead of selling out or letting that long put spread appreciate all the way up to $500, you're selling out of it early for $200 less than max value. So just be cognizant of that. Like if you want to do it, fine. If Micron rallies above 400, it's going to be a great trade, and you'll have timed it perfectly. But if it doesn't, you're adding $200 of risk on your in-the-money short put spread. So it's tough because like you're right in the middle of this implied range, so there's plenty of probability and possibility that MU can rally, especially if the general market rallies. But yeah, just keep that in mind. You're adding $200 of risk if you close out of that long put spread.
Bottom of the chat for now, as far as the questions.
Cool. Let's just scan one more time. See if there's any other earnings today.
Yeah, I was about to say.
Oh, God. MicroStrategy has earnings today? Oh, no. That's going to be tough.
Are they even really going to move on earnings, though? I mean, the hell, it's not like...
yeah, I mean...
I don't know, I wonder.
No, they don't really... I mean, they do report numbers, but, like, this stock is just pure Bitcoin volatility.
Yeah.
It scares me, though, because if they have any kind of slowdown in like their Bitcoin purchases, because they've been buying Bitcoin on the way down here, maybe that spooks the market and you get even more of a sell-off. But
I think he's just going to keep buying it into perpetuity. I don't think he's worried about anything.
Yeah,
he's just going to keep.
He's
buying
probably going to go on the phone and be like, "This is a gift."
He made a decision a long time ago to go down with the ship.
Yeah, that is true. But yeah, really interesting to see MicroStrategy earnings after the close today. This speaks to how volatile this product is. We've just looked at a couple of earnings reports or earnings implied volatilities where the near-term cycle was very close to the Feb cycle and very close to March. Looking at this, 11 points for the 1 day, 20 points for Feb, and 30 points for March. So you're not getting any kind of implied volatility boost here relative to other products we've looked at, where if you were, you might see an 11-point move in the 1 day, and you might see a 14 or 15-point move in Feb. But they're pricing in a ton of premium in Feb and March here, as you might expect with a over 100% implied volatility product. But I'm out on earnings for MicroStrategy. I think, if you're doing anything here, I think you've got to be defined risk given the fact that we're down 17 points today before the earnings announcement. But yeah.
Zero Hedge just put out a chart. Bitcoin is the 4th most oversold in history.
Yeah, sounds about right. I mean, it can't catch a bid at all.
It cannot.
It's crazy.
Yeah.
But again, if you were trying to get long Bitcoin, it's scary, of course, but like, when's the last time you saw 6,600?
November 2024.
There you go.
I'll tell you right now. I looked earlier. I forgot to mention it. Yeah, November of 2024 was the last time it was this level.
Yeah, look at that. Long time. Lots has changed.
Yeah. There's no appetite for it at the moment.
Correct. But yeah, MicroStrategy, interesting. Datadog? Oh, that's next week. So yeah, there's really not much today.
Stock is a dog.
Not much today. Yeah. Amazon, Gen Digital. Yeah.
Iron is after the close. I feel bad because I feel like we talked about the stock a few days ago and like it's done nothing but get smoked along with this sell-off more recently.
Yeah, I think this is another interesting one. Like, this is another huge implied volatility. $42 stock, $6 implied move. Big implied move relative to notional. But same story in Iron, same as MicroStrategy. You've got 6 points here, 10 points in Feb, 15 points in March. So you're not really getting a big vol discount here. But same story. I mean, if you're trying to trade this thing, I would stay defined risk unless you're trying to pick up some shares. Yeah. I know Ryan was looking at selling puts here in Iron, picking up a ton of extrinsic value reduction against notional value. So 40 strike short put, you can reduce 5% right off the top for selling a 1 day option. That's kind of nuts.
Yeah, Ryan's a believer in this thing. He's fine if he's taking delivery on it.
Yeah.
Said that outright.
Yeah.
You know who has earnings tomorrow morning? Sibo.
Really?
Yeah, has earnings tomorrow morning. Yeah, just noticed that.
I have a feeling they're going to say we've crushed.
Yeah.
Tons of SPX volume.
That's right.
Especially on days like today. I mean,
We have noticed added volume on Thursdays due to Options Trading Concepts Live.
There you go. Yeah. Yes. We've noticed an influx. When Mike and Jamal are filled on their trades, we hear people yelling behind us because they're trying to fill everyone's trades. Oh, man. But yeah, that'll be interesting to listen to. And a lot of other ones. But yeah, Amazon after the close. We've got this double calendar. Quick recap here. Double calendar filled, and then the SPX Iron Condor that Jamal did followed exactly $3.20. But yeah, can't wait to see what happens here. If you're trading Reddit, just be careful with those bid-ask spreads. Amazon's super liquid, but I really like the way this sets up. Reducing cost basis on the longs by 70% doesn't happen all so often. And that just gives us a much wider range of outcomes where we can be successful on this trade.
Yeah, Amazon, IREN, Reddit, MicroStrategies, Roblox, BE, Bloom Energy is another one after the close today. So see what happens. Affirm as well. AFRM.
A bunch of them. That's it for us. We're out of time. Thanks for tuning in. If you want to follow us on Twitter, you can find us there. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We can answer any questions you have there. Thanks for giving us all those trade ideas and questions in the YouTube chat today. We'll post these trades to the follow page momentarily. But yeah, we'll see what happens the rest of the day. It would be nuts if we ended up flat or green again. Feels like it happens all the time.
Yeah.
But Amazon after the close today, a bunch of others after the close today. We'll see what the market does with those data points. But we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails that were submitted. But first, we would like to take a look at the market. Even the S&Ps down. Early ding. What are you doing?
I just took a little small scalp out of my Dow.
Dow futures. Dow was actually up at one point yesterday.
It was up like 150.
While even the S&Ps were down here where they are right now.
Yeah.
You take advantage of that. Just going back at 90, 49, 396.
Got the runners, as you would say.
The runners. So good job out of you. Russell down 14. NASDAQ down 196. They're all down around the same. I think maybe the NASDAQ is the weakest here. It's been kind of a recurring theme the last couple of days. Even the S&Ps down 42. Back down to 68. 60 and change, where if I zoom in here, we've gotten to numerous times this week, only to rally back up to almost 7,000, a little bit less yesterday, 69 and 50 and change, about 100 handles higher than that. We'll see if it do it today. Volatility, 2025, about as high as it's been. Volatility percolating and keeping its bid up almost 5% here, but you can see it too is up near that volatility range where we've fallen from before. Tight relative range in the even the S&Ps, big-ish move in volatility. I actually think /VX, if you're bullish, is a better sale than buying E-mini S&Ps. That's
volatility's gotten smashed from this level 5 times.
Yeah, if you get like a 21 print, you get a little bit of movement in the market going a little bit lower. We'll see how the rest of the market is acting. I mean, everything is subject to change, but I think that's a place where it might start to nibble a little bit. Bonds up 16, 115.01 and change, like that.
To your point, I'll take off my last
volatility
long vol. I was buying those at like 1830, 1860-ish. I pulled them out at like 1960, 20-ish.
Very, very nice. Very nice. Yeah.
To your point, if you think there's a little bit of a bounce.
Very nice. Good job. Good job out of you. I think it's a lot harder to buy volatility as it goes down. 18, listen, that's a number where we've bounced off of numerous times to the upside.
It was just a trade.
Yeah, I find it harder to buy it for the rally than to sell it for the sell-off. In volatility, as volatility is more mean reverting, even if the market doesn't go anywhere, sometimes volatility will contract. But you won't get that if the market is going higher. Volatility usually contracts, doesn't go higher. Bitcoin Well, what do you have to say about this? Because I am at a loss of words.
I have long stock. I'm sitting.
IBIT?
IBIT and ETH. Bag holding. I'm a bag holder. Diamond hands.
Yeah, IBIT is the Bitcoin future. I mean,
it's ETF.
ETF. It's going to act and be just like Bitcoin. And you can see here, it's been falling out of bed. Ethereum down $100 and change as equal 5% move to Bitcoin being down 3,700. Oil down $1.67 after catching quite a few bids since the beginning of the year. Starting the year around 58 or so, got up to around 66. Now taking just a small little breather, 63.5. Gold has been all over the place last night. It was over 5,000.
Crazy.
It was crazy. It was one time during the concert last night that I was watching, and it was down like 150 at one point. And as I was sitting there, it rallied to almost unchanged. It's sitting down $90, down about a little over 1.75%. GLD, for those who look to trade that, I saw it down below 442. I saw it up to 455.
Yeah, sorry, go on.
No, go ahead.
I was just thinking, so the gold-silver ratio, we've watched it go. It got killed down to 48. You had that huge, the first big move in metals, it got up to like this level was kind of the high.
It
settled at like 55.
Yes.
Chopped around 55 a little bit. Now we're at 63, 64-ish. It's up about 12% today. Do we take the other side of the gold-silver ratio?
Before you do that, it really does, that spread really does kind of live and die with how silver moves.
Yeah.
Like silver going lower, that is going to make the gold silver ratio go higher.
Yeah.
You've got a big, almost 10% move here in silver back down to its lows from 3 days ago when gold was making its lows closer to 45, 44. I think it got as low as well. I'll look. It got as low as 44.25 or so. It's 48. So you've got silver on its lows from that big move down just about 3 days ago. It makes sense.
Just as a trade.
Trying it just as a trade. We've done well, really well, the other direction the last 2 days. The key to that gold-silver ratio is keeping the gold-silver ratio spread on. So it takes out about 80-ish% of the notional move of the two products.
Yeah. All right. Well,
not trying to scalp around it.
Yeah. We'll look at this.
Okay. Like I just mentioned, silver continuing to go lower, down 8 in the orders here, about $2 off its lows, and gold about 50 cents, $50 off of its lows. Net gas up 5 cents, a decent sized move, chopping around in net gas, a little higher than the middle of its most recent range. Soybeans, as Vanetta mentioned, up almost 1%. Taking a look at your currencies, you've got euro up small. They've been going sideways the last couple of days. British pound, I believe, is doing the same. I thought I saw it down. I did. 7 cents, which means the dollar is maybe maintaining a little bit of its bid here. For the earnings front, you've got Google down about 11, 10, 11. Qualcomm down around 17-ish or so. ARM down, it was down about 8. I saw it down a little bit less than that. It is down around 5 or 6 right now, just under 100. That's all I got, my friend.
Cool, let's do it.
Confirm and send Thursday, February 5th. I'd like to put on an Iron Condor SPX one day right at the close so I can close the next day without incurring a day trade. All right, so now this is, when I hear that, there's a person who has an account under $25,000 and you're trading a very large product in SPX. Let's keep that in mind. 10 times the size of all of your other trades that you might make. However, I'm worried about tail risk overnight. Is there a way I could protect myself overnight with something like a long VIX call or short /MES future?
I think you answered this, or at least referenced it.
Gesundheit.
Thank you. I thought that was going to keep me like in sneeze mode for like a minute where I'd be like,
yeah, don't you do like 3 or 4?
No, I'm usually like 1, maybe 2.
Oh, okay. Because your grandmother used to do 3 or 4. I think you took after her. Still trying to find a redeeming quality. Go ahead.
I think in the first sentence, you kind of answered the problem and the question here.
Yeah.
You don't have a ton of capital to trade this at one lot, sure, and you can do it every once in a while, but you're definitely seeing the issue here. Is
here. Forget about. Let's not. I think the person knows because they're trying to. You can't protect with a VIX call. No. You can't protect with MES
because the position's too small as it is.
Right, and you have defined the risk.
Yeah, you're kind of stuck in no man's land here. If you really wanted to, you could go into ES options.
Yes.
Or
which would there be no
MES,
pattern day trading rule?
Yeah. ES options won't have the pattern day trading rule, and they're effectively it's the same.
Notional is different.
The notional is different. The tick size is different. The liquidity is not as great in those options at certain strikes, and on the open, it's going to be a little wider. You have risk overnight.
Sure.
So you could go into ES options, but again, it's like I think you should be doing do the weekly Iron Condor.
Yeah, I don't like the overnight risk that you're taking too. Like, look, you get a night like today, even the S&P is moving 50, it's going to blow you out of this. I'd rather you have control of it intraday, so you could move down the untested side, take on more risk. If you just want to move the naked option, take on less risk, same risk. If you don't want to move the whole spread together, I think you open yourself up to tail risk by doing it the night before.
Yeah.
That being said, I'm not your judge. If it's been working for you, stick with it. I think the way that you can mitigate your tail risk, our research shows a lot of $20 wide iron condors. Make it a $10 wide iron condor. Just get a little bit smaller with the width of your SPX spread. I don't think doing anything else is going to be able to do this. Personally, I think it's too big for your account. But
yes,
what do I know?
I agree.
Next one, please.
I have a deep in the money $5 wide put spread with 17 days till expiration. I'm able to roll it to the weekly expiration with 31 days for a couple of cents of credit. Is that a good move just to extend the duration a little, or am I walking into a corner as volume is really low and markets are very wide? What is the best choice in a situation like this?
If you can do it for a credit, I think it's worthwhile, and obviously I'm assuming that this is a losing trade and you're trying to extend duration. If you're trying to,
I would check because he says the bid-ask spreads are wide. So I would make sure you're actually getting it.
I was going to get him around that. So the bid-ask on deep in the money options is going to be wide because they're basically 100 shares of stock, each one of them individually, not the spread. Spread's going to have very little delta to it because it's so deep in the money. Again, can't look at it. And I'm going to assume that there's no dividend risk here either. So no dividend risk here. Here's how you price it. Look at the put spread. Same strikes. If that put spread is trading for $4.50, put spread is trading for 50 cents. The call spread, if it's $5 wide, is going to be fair value is going to be around $4.50. $4.52, $4.48. Then you can go to the other side and look at where you're rolling to. Look at the put spread again. It's just put call parity, same ones. If that put spread is trading for 75 cents, you probably can do that call spread, buying back yours that you're short, selling another one for around a quarter. The difference between the two put spreads, 50 and 75 cents. Now, it might be 22 cents, might be 20 cents, but at least you have an idea on what that credit should be, even though the markets are quite wide. So that's the way I would do this. And would I do it? Sure, of course. Yeah, you need duration at this point.
Yeah.
Now, if it falls out of bed in 17 days, you're going to come back and say, why'd you make me roll for 5 or 7 or 10 cent credit? But we can't control that. You're still in a better place than you were before.
For sure.
Next one, please. Your spread is even better now. Your gold, silver, you're watching it. You want me to go?
Oh, yeah, go for it.
Sure. At the start of the market measure on Monday, Kai referred to closing out early the put side spread of his 0-day SPX iron condor this morning because the remaining call spread was already in the money. I take it that's not the standard approach that Kai's back-tested results are shown for. In the back-testing, I gather you just set to close 25% profit, be the whole spread calls and put. But otherwise, let it expire. Is closing the untested side early more profitable?
So there's a lot going on here.
There is a lot going on here.
I think people with back-testing and all this stuff, it's very easy to kind of pick at one thing and kind of, as I
take it easy there, son.
I think you pigeonhole yourself, and you know, when you're trading and things are moving and somebody goes, you know, you have a big rally and the spread goes to 0, you take the trade off. In the back tests, you're not taking the trade off that side.
Well, they don't want to pick and choose that either, because
but it's happening. So you got to trade that.
Sure.
And you know, that I think is kind of the thing that you can't quantify in a back test. Like,
that's correct.
You're not looking at the fact that, okay, you know, one of the occurrences, the market rallies and the put spread goes to 10 cents, and you peel that put spread off, and then the market goes down.
Mm-hmm.
And then you make, you know, more on the call spread. Like, that's trading, and you can't really quantify that in back testing. So I would just say that's, you know, one thing that I think people get caught up in. To that point, you know, you can certainly be mechanical based on the back testing, but I think it's good to incorporate this sort of thing of closing positions when possible.
Yeah, and everything is subject to change. You watched us 2 days ago, and we were looking at the 0-day SPX iron condor. And I said, you know what, volatility is way too low. I'm not going to put it on here. A lot of our research, you know, you put on at all times. I mean, that's what it shows. I mean, like, you know, we didn't do it. We did it the next day, and it worked out for us. I mean, lucky, better to be lucky than good. Maybe, I don't know, but everything is subject to change. I mean, that's why you're trading. If you're taking something off for pennies on the dollar, it's probably prudent.
Yeah, it's good. It's just a smart thing to do because you're taking risk off the table. Like,
it's logical. I mean,
you just do it. So, I mean, it's very hard to get hyper specific with a back test. I'm going to close this put spread if it gets to this. I'm going to close this call spread if it gets to this. I'm going to roll this one. I'm going to roll down just a short. Like, you get, and that's why there's no. We can't really research this. This so like this is in the moment that's the trading.
And markets get wide in SPX on the 0-day. You look at mid-price, a lot of times you're trading them. You can't get filled on the buy or sell at mid-price. You know what I mean? But on a back testing, it would hit there and you get filled, and then that spread goes to, you know, full profit. You know, it's
a good way to, the back test and back tests in general are a good way to
good things to know.
Good thing to know, give you an idea of what's happening, but it's different than really trading. And that doesn't even incorporate the risk and sentiment and feel. You know, in the middle of COVID, you're right. It was great to buy whatever. It felt really bad. You know, that's hard to quantify.
Yep.
So anyway.
Next and last one, please, I believe. I saw it in an old, is this me or you?
I don't know. You want me to do it?
Go ahead.
I saw in an old video the idea of using the 20 delta strike in the classic tasty iron condor is really intended to be just inside the expected move. But is that where you'd be putting your short strikes for the 0 DTE iron condor, just inside the expected move? Or would you stick to the closest strike to exactly 20 deltas?
Yeah. I mean, and here you go. Like, this is up to you, right? Like, I mean, when we make a statement around the 20-ish delta, that's on you. I mean, many times you've watched while we do the show, maybe you're a little bit more bullish or a little bit more bearish, and you tweak it by one strike. I mean, that's really what you're talking about here. You're talking about one strike, one way or the other. But sure, you can do either one. For me, I'm around the 20-ish delta. 18 works for me. 22 works for me. Around the 20-ish delta. When you put these on, you're going to have a little bit of bullish or bearish delta one way or the other on your assumption of what you're picking, the 18 delta or the 22 delta.
Yeah, it's...
If it works, they're both going to work.
Yeah.
I mean, 9 times out of 10.
Same thing.
Yeah. So. Good job. Good job out of you. We got to take a quick 90-second break because we got trades from the research team coming up next. Even the S&P's down 45, volatility about a dime off its highs, up just about $1, about 5%. We'll be back in 90 seconds. Let's Tasty Live. Nicky, we are back, son, but the market is not back. Even the S&P is down 74, making new lows here. as volatility makes new lows too, makes new highs too at 2065, got up to 2070 just a moment ago. Russell, you're strongest of the group, with the Dow being down 0.75%, Russell being down just about 1/3%, NASDAQ down 300, and the E-mini S&Ps down 71. What are you doing here?
We're gonna take another one. We're gonna get a little one there.
Buying MNQ, that is the NASDAQ futures, even though volatility is not selling off. That is a no.
I know. I agree. It looks horrible.
You're on
It
tilt.
looks horrible.
You're on tilt here, yes.
Oh, come on. I've been banging them out all week to the short side.
You have been.
I've sold 7,000, 720, 50 times in the last 2 weeks.
Yes, you have, and rightfully so.
This is the first stab at the long side I've taken.
Totally agree
small
here.
Still.
And small. Bonds up 17, 115.02. All right, son. Oil down $1.76. Why? We talked about /VX/ES volume the last couple of days. Let's move out of yesterday. Just prior to that, volume had been very, very low, very, very weak. Yesterday we had 1 million E-mini S&Ps trading before like 11 o'clock and 11 o'clock. Today you've got almost 700 traded at 37 minutes into the day. You definitely have players on the future side again and in volume.
Yep.
So they're back.
Yep.
All right, my friend.
Let's do it.
Let's do it. I'm ready. Why liquidity matters? A market measure sponsored by the SIBO.
Very nice.
Very nice indeed.
Why does it matter? Does it matter to you?
What doesn't matter?
Does liquidity matter?
I think it's right up there with Delta. I mean, after you put on Delta, before you put on Delta, you have to make sure you have liquidity. So maybe it's the chicken egg kind of thing.
It was a trick question. I knew that you would know.
Thank you. Yes, I'm glad you had faith in me.
Liquidity is a fundamental requirement for efficient markets and is a reason why our assumption of efficient markets tends to hold in research. And so today we're going to take a look at two key characteristics of liquidity as well as the dangers of trading illiquid underlying. So, liquidity is one of the things that retail traders can control. You can control your entry, your prices, what you're trading, the duration. Those are all things that you can control. Liquidity is another thing where, when things are wide, you can choose not to trade them.
Yes.
That is a huge positive for us. Liquidity and being in liquid markets, being able to get in and get out at efficient prices is huge, and that's really what we're going to discuss here.
Let's do it.
So the study that we're going to look at is SPY versus IVV, which is a Vanguard ETF for basically the S&P 500. It's iShares. iShares Core S&P 500 ETF. VGT.
Cancel crash. I mean, the S&P is down 73, but I'm going to cancel the crash right now.
Really? With all stay in bid? You can cancel it?
2070, 2065, 70.
I mean, this has been the low for NASDAQ. I mean, this is where we got
Hey. Yeah, I'm allowed to make my call.
Okay, all right. Well, I put the risk on. You're just out there.
Never mind. Subject to change.
VGT is the Vanguard Information Technology ETF. We're going to measure that to Qs. So these two products, as we'll see when we get further on, they're basically the same thing.
They got me. I bought them.
You did?
Yeah, but they got me.
We're going to look at the money put and at the money puts and strangles on March 20th, 2026. We're going to find the 60-month correlation of the price of these assets, which is going to be very, very highly correlated. We're going to look at daily volume, the bid-ask spreads, and then the cost over the theoretical mid-price. So the mid-price is typically where we trade or try to trade. When you have penny-wide bid-ask spreads, they're going to be very, very tight. In some of these products, you're going to see they're not very tight. And we're going to discuss the results by highlighting liquidity differences and explaining the risks of trading illiquid products. E-mini's down 80.
Making new lows. I said they got me.
Vol up
$1.50 and change to 20.80.85.
might not buy this dip.
No, I said they got me, but I'm in now.
You might be back.
So now I sit.
It's okay.
Broken-hearted.
This next slide here, just to take a look at the correlations of these two products. And let's jump to the next slide, the correlation matrix here. You'll see that SPY and IVV, 100% correlation. QQQ, VGT, slightly tiny difference there, but basically the same thing. So these products are the same thing. In a lot of like 401ks or passive kind of funds like that, they're not buying SPY or QQQ. They're buying these Vanguard related products. A lot of places, like if you have a 401k, it could be held with Vanguard. They're going to buy their own products. Buying SPY. And so just so we're clear here, they have basically the same correlation. When we get on to the next slide here, the two main characteristics of liquidity are high volume and low bid-ask spreads. That's what we talk about when we talk about liquidity. Those are the two things. You want to look at high volume in both shares and options. Those are two important things because they correlate the bid-ask spreads. You talked about this before, how if the bid-ask spread on the stock is $1 wide, the options are going to be at least $1 wide, if not more. Just because spreads get wide because the shares themselves are not even liquid. So below are two identical price underlyings. They're both basically the same price here. Same IV and near 100% correlation to each other. You can see SPY trades 20 times the amount of IVV. QQQ, the same thing with VGT. They trade, a multiple here. And you can see the bid-ask spreads here on the at-the-money put, a penny wide on SPY versus $2.80 on IVV. It tells you that, these are the same thing.
Yeah.
And you're going to be losing out on value by trading the illiquid product. That's it. That's, the big thing here. Getting on to the next slide here. So, why does the volume and the bid-ask spread matter? In trading, liquidity is a measure of price efficiency. So where there's no price efficiency, you pay the difference between the mid price and the bid and the ask as a cost. So when something's a penny wide, it's going to trade at the mid price. You might have to give up a penny on either direction. If something is $1 wide or $2 wide, you might have to give up 25, 50 cents just to get in and out of that position. And so that is slippage. That is value that you are just giving away.
That is correct.
For not being in something liquid. And that means over time, your P&L will decrease by how wide the average bid-ask spread is on your trade. This is more substantial than commissions or anything else. Like, you're giving up dollars on bid-ask spreads on two products that are the same thing. It's why liquidity is king here.
You can't trade. It's not even my opinion. You cannot trade without liquidity. You can't be successful. You can trade anything you want without liquidity. You can't be successful with the slippage. Why take the slippage if you don't? Don't have to. There's so many other products to trade that mirror each other that have liquidity. Just go there. It's it's really the simple thing.
Totally.
Even the S&P is down 94 and volatility up to 21.
Bonds rallying too.
What's that?
Bonds rallying.
Bonds are rallying 115.07.
Damn.
Oof. They got us hook, line, and sinker.
Yeah, we'll be okay. Could have more. So next slide here. So using SPY and IVV as our example by selling both the call and the put, which is our strangle here, we can see that there's a ton of value lost here just in the bid-ask spread. So when you're looking at SPY, you're looking at basically penny-wide markets here, 2-3 cents. And that's, about as tight as you can get.
That is about as tight as you can get.
As in terms of slippage. When you're looking at IVV, and these things are going to trade at slightly different prices because they're slightly different values in terms of the share price. They're tracking the same thing. But you can see that it's almost a full $1 wide. So it's a $100 wide spread on the strangle in IVV versus a penny wide in SPY. The same sort of thing you see in QQQ versus VGT. You're talking about a dollar wide spread. Not only is this bad for your P&L because you are most certainly going to trade the less liquid underlying is most certainly going to be less advantageous from a price perspective. You're going to lose 5 or 10 cents on every transaction that you do in those products. But it's also like when you're looking at your P&L and you're looking at your portfolio, wider bid-ask spreads are going to skew what you're seeing from a P&L perspective. We get those emails all the time. I'm seeing my my P&L go from up $100 to down $300. That's because these bid-ask spreads and all the value of your options and your positions, your stock, is based on the mid price. And so, if you want to be in a little bit less volatile positions, liquidity is the easiest way to dull that P&L volatility.
Agreed. I mean, entry is all you can control, and that's what you should be controlling. Even the S&P is down 80. I'm basically unchanged on my...
I could have just bought another NASDAQ.
No, I couldn't. Even the S&P futures, and I'm out about 20 cents on my futures. 10 cents on my volatility futures. Do I scratch them or stay?
I think you stay.
I'm going to stay, but I was hoping you said scratch them. Next one, please.
Since the bid-ask spread is not a line item cost, many traders disregard it. This is important because people don't think about, everybody talks about commissions or this or that. People don't think about the bid-ask spreads. That's really where you're losing out.
It's almost, I'm sorry to interrupt you. It's almost like a gas leak. You know what I mean? Mm-hmm. When you have like a wide bid-ask, it's like you don't think about it, you don't see it, you don't smell it. But if you don't think about it and you don't, like if you smell eggs, you probably have a nat gas kind of a leak there. Mm-hmm. You know what I mean? You have to watch it. When you see markets that are too wide, you have to run from it. And many times we talk about that. Go ahead.
For sure. And it's just from a P&L perspective, especially, and this is even more significant for the Johnny traders, which we just did our Johnny Trader segment. When you have limited capital and you're giving up 5-10 cents on each in and out, that's a lot of slippage. That's way more slippage than anything else.
Way more than you could afford.
Yeah,
what it comes down to.
Yes. So it's a huge part of your P&L and just overall slippage. Couple quick takeaways here. So liquidity is fundamental to the success of retail traders because the lack of it can cost traders a large percentage of their returns. I mean, if you're taking $1 out of something and 5 or 10 cents is your slippage on bid-ask spreads, handful of those trades and you give up your profit. It's a huge thing.
It is. It really is.
So the way to gauge how liquid and underlying is mainly two metrics. We look at bid-ask spreads and we look at volume. Bid-ask spreads are going to be correlated to the stock price. Something like an AMD is going to have a much wider bid-ask spread relative to Intel, a $50 stock versus a $200 stock. But all else being equal, it should be relatively tight. We've talked about 0.1%, so a $100 stock should have 10-cent wide bid-ask spreads. Just a rough, way to kind of gauge liquidity in the options themselves. You'll see this in the stock as well. And in the options, the volume, you want to see high volume. If a stock trades a couple million shares a day, it's probably okay from a liquidity standpoint for shares, for options. If it's a 50K a day stock, it's probably going to be wide bid-ask spreads. It's all these things are correlated. Bid-ask spreads are correlated with volume, and so you want to see volume in both the options and the stock.
Good job out of you. Good job out of the team. Good job out of SIBO for sponsoring that for us, market measures as they do each week. Even the S&Ps down 82, 85. They're going to make me work for my money this morning. How do you feel instead of doing your futures? What about a little SPX put spread? If you're leaning on the futures side of buying trying to get small is all I'm doing.
Zero day?
Zero day, either is 67.40 or 67.20. You can go $10 wide if you want to go, or $15 wide if you want to take a little less risk. 67.35, 67.20, around
What
$2.
about 60? Oh, wait. I think you're at 67.30.
67.35.20 is what I was looking at. It's trading for around $2.
Oh, $15 wide.
$15 wide. I mean, I'm trying to make the amount of risk you have in NASDAQ futures as you would on even the S&Ps.
Done. 240.
245 actually.
Got a price improved because of that amazing liquidity in SPX.
You're right.
Sponsored by the SIBO.
You are right. You are right. See, you're sponsoring them that way.
Guys at the SIBO filling my SPX trade. Thank you, sir.
Appreciate them. We're going to take a quick 90-second break and come back. We got much more Tasty Live immediately following these quick messages. We're back in 90 seconds of Tasty Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's still Thursday, February 5th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio in New York. He's Thomas Westwater in Chicago. We're both here in a very red market today, Thomas.
Yeah, red it is. Red all across the screen. There's not much green, but crypto getting killed, absolutely slaughtered. It's insane.
That's really the main driver, perhaps, of today's action. There are a number of stories floating around about some Chinese whales, not in crypto, but in the metals space, tossing around silver prices over the past few weeks. Several traders raking in hundreds of millions, if not billions of dollars on recent moves in the metals. And they've now publicly come out short in silver. Interesting driver here. But your focus today has got to be with crypto, where Bitcoin is below 70K. Forget the crypto winter, and thinking about where we were a few weeks ago, Thomas, when we were tossing around the idea in November, that Bitcoin's come off, but isn't it curious that it's exactly 18 months after the halving cycle? That was April 2024. Tack on 18 months, you get to October 25, and Bitcoin peaks in October 25. Yet, somewhat self-fulfilling, we see a deeper pullback It's worse than just winter out there. It's a deep freeze now. I got out of my long deltas in crypto this morning. No reason to be in them anymore after we broke through the lows established earlier this week. Just too much pain out there. And it seems to be a liquidation event that's spilling over into other asset classes in the traditional finance arena, I should say.
Yeah, I mean, we are now the lowest in Bitcoin since somewhere around October 2024. There's kind of an area of congestion around here that we traded in last time, going back all the way to February of 2024. So be curious to see if there's any buying pressure here, but right now it looks like it's just sell, sell, sell.
Speaking of sell, it's a pretty red day in the stock market. So what's driving the stock market? If you were with us on Overtime yesterday, you may have noticed that there were some errors in the Google earnings data that was initially put out. They had released a fourth quarter CapEx number, as one keen-eared listener points out, which I suppose makes sense as some feedback, Thomas. It's not capital expenditures, it's capital expenditures. So we have our CapEx number here from Google, which is not 96 billion for just the fourth quarter. It is, of course, for the entirety of 2025. But what was true was the fact that they are spending all of this money, 175 to 185 billion dollars in CapEx spending for 2026. So you had a sell-off, you had a big bounce, you now have a little bit of weakness on the day. Google's off 2.5% post-earnings, and Amazon down 3.5%. On Microsoft and some of these software names still getting taken to the woodshed here. I wish we could say value stocks are holding up a little bit better, but the Russell's not having that more of a better day. It's really the fact that the market has a defensive posture to it, where you see consumer defensive with the few specks of green, industrials having a few specks of green, utilities with their few specks of green, and even healthcare. But it's consumer cyclical, it's technology that's having the roughest parts of the session.
Yeah, I mean, not much like defensive. It's more like things that, are down or aren't down as much. Yeah, I mean, Amazon, can they come in and save the day? I think this is too much. I mean, it's we usually during earnings, we look for big tech names to kind of save us, report good numbers. Hasn't happened with Google, and they've been the leader that people have had confidence in the Mag 7 for the past few months. So, I don't have much faith that just good numbers from Amazon alone can save us. This seems to be like, a continuation of the fear than just liquidating speculative assets to go to cash. And I think it can continue, especially with tomorrow being Friday. I'd especially think that's more true maybe in the stock market than crypto, but we'll have to see.
Day 3 of stock selling continues here, Thomas, although we are starting to get a bounce together. We've been talking a lot about what's happening in the crypto space. 65K here, 50% haircut almost. Ethereum down 10.7% right now, 1939 as I wait for that to load. Thomas, I'm concerned more about what's happening broadly speaking, and that's great timing for this. And why that would happen right now is a question beyond me, but we are back. So we go to our charts here, Thomas. Trying to bottom pick a low right now is very difficult. So I'm going to look at this through a momentum perspective, and we're going to give a little bit more leniency here and not look away from the daily chart, because something moving this fast warrants a consideration on a lower term time frame. If a bottom were to come in, I imagine it would show up here where there are clear signs of downtrends in the lower term time frames. I go to the 8-hour, which for whatever reason, the 5 EMA, which normally on a daily, that's your 1 week. What are 40 hours? Who knows? Not a block of time people really use as a unit of measurement. But in this case, it seems to work, because ever since we get the Warsh nomination last week, we have not seen ETH, for example, put a close above that 5 EMA here on our 8-hour time frame. So first things first here, Thomas, if we're looking for a change in behavior since this wave of liquidations over the past week began, I would look for characteristics of this downtrend to evolve. I want to see the characteristics that have defined the downtrend. For example, stochastics being an oversold territory while we're not closing above the 5 EMA on this 8-hour time frame. Let's just put those two boxes on our checklist. And until we can say those have been broken, there is no reason to catch a falling knife. No matter how high the volatility gets, no matter what the price level looks like, you're trying to catch a falling knife as long as the downside momentum targets, or downside momentum profile, I should say, remains in place. It's very appealing, but no matter where you look and no matter what asset it is, Thomas, the signs of downside momentum are quite strong. Don't stand in front of a market that's liquidating right now, even if you are still a long-term constructive person.
Yeah, I agree. And I mean, like you said, almost 50% lost in Bitcoin. For an asset that has just become mainstream the past couple of years, gained this kind of credibility among not only niche investors, but, just your everyday person knowing what Bitcoin is now. And probably mostly everyone has just a little Bitcoin in some way, or I'd say a majority of people. I have to wonder what this does to the long-term credibility. Does it bring us a step back and kind of make Bitcoin and cryptocurrencies? Is it a hit against their newfound reputation? And I don't know. This is, it's a very speculative asset, obviously, 50% off the highs, but this is definitely more than I thought it would be selling off at the start of the year. Expected some kind of pullback to come eventually. Definitely cascading into the rest of the market, I think. So I'm not buying either here. I'm just watching it.
What makes the chart so damning from a technical perspective is the fact that we have this level that's sitting right around, we'll call it 75. That was resistance through 2024 up until election week. We're going into a new administration, new world, new regulations, lack of regulations. So we break out. And when we get to the lows in April of last year, right near 75K, almost picture perfect. We talk often how Bitcoin, more than other markets or crypto generally speaking, is more self-fulfilling from a technical analysis perspective. And so meaningful that you get the bounce there. I would say it's just as meaningful, Thomas, that this week we sliced through it like a knife, through butter.
Yeah.
There was no support there. And the fact that 74, 75 gives way so quickly should be of deep concern. That has to be a major stop loss for even institutional traders right now.
Yeah, I mean,
so I'm out. I am not bottom picking here. I made that mistake. I was doing it through IBIT. Sorry to interrupt you, but I was doing it through IBIT here. The 40-42 put spread. The second we started breaking through those April 2025 lows, took my bags and went home, closed it out.
Yeah, if I bought here, I'd be afraid of a little consolidation before next big plunge, more liquidation coming. It's too wild for me. It's way too wild.
Well, with that setting the tone here, because crypto sentiment is bad, and I've been trying to bottom pick myself because of the sentiment being so bad, it is spilling over into other markets perhaps. The S&P 500 down 1% right now, 68.33. It is challenging the lows that we had in January at 68.14.5. And that puts us with a move potentially closer to the lows that we had here in middle of December, 67.71.5. Funny that we're talking about Bitcoin right now. I see an email just popped up on my screen. Bitcoin dips to crisis levels. That, again, seems like a sentiment extreme, Thomas, but the momentum doesn't tell us anything good. Speaking of momentum in this market, if we were to go to a 4-hour time frame, do we find anything that we like down here? Because we are off the lows, so maybe that's a sign of recovery. It's really not a sign of recovery. The candlestick here on our 4-hour time frame tells a pretty decent story. It's not one you'd like if you're a bull, which I usually consider myself among those people. We have recent lows throughout January and February coming around 68.75 or so. Today, we rallied back up into there where we had former lows carved out. That's exactly where this market fell from. And incidentally, that is the backside retest of the uptrend from our November and our January swing lows. So a little bit of a danger Will Robinson moment here with momentum breaking to the downside. These are some of, and when we look to, say, a 12-hour time frame, you're beginning to see a breakdown in the technical momentum in a manner with which we have not seen occur in several weeks. So this is kind of a last line in the sand here, line of defense. in the S&P, it would seem it might be time to take some of these trades off the table, Thomas, and get away. And just get away from it all for a little while.
Yeah, you read my mind. I just closed my MES call spread that I had. Technically, I don't like it. Sentiment-wise, I don't like what's going on in the market. I don't like what's coming out with the headlines. And Chris, I messaged you the other day how good of a January I had in my account. And then I come into February and I'm getting spanked every day. So
me too.
I've been humbled.
My hot hand has run out. My hot hand has run out.
Yeah, I was like, January, this is a great January. I just need to do this 11 more times and it'll be great. But
and then I can retire.
Yeah.
Right?
That's what the market
January
does to
year.
you, though. So it's
if you keep compounding at 25% a month for a full year, you can take a little bit of time off. You've earned it. And then when you give that all back in the first 6 trading days of the next month, you question yourself and say, should I leave the country for a little bit? Which I suppose is a good reminder. I'm actually leaving the country, so I won't be on tomorrow. Good timing for a reset for me.
Right. Do we think the job openings data had anything to do with sentiment today?
It's a fair question. Do we care about economic data in state capitalism? JOLTS 6.54 million versus 7.2 million expected, down from 6.92. We see that the initial jobless claims jump up to 231 from 212. Fed rate cut odds corresponding to both of those moves, or at least, in response to some of the data that we had seen come out today, rate cut odds have shot up. Yesterday, we were talking about a steady erosion in the June odds, down to about 70% or so. Now back to 97%. Those March odds, which yesterday at the close had dipped to 9.4%, are now back to 22.7%. So I don't want to dismiss your claim here. There might be something to this. And that something would be the market is now looking at a Fed that is late. Obviously, how the market feels about the Fed can evolve on a day-to-day basis, and thematically, the viewpoint can change. Sometimes it's good, sometimes it's bad. We're happy about the cuts coming. We're mortified that a cut's coming. There are hikes potential. Hikes are fine. It's all about the context. But the context here, no rate cuts are coming, and there's compounding weakness in the economy. The economy and the margins in the earnings, Thomas, those are the things that you hang your hats on as a bull. And all of a sudden, you may be losing one of those two things here. So 68.32 for the S&P. We get a next update for the Atlanta Fed GDP Now growth tracker on Tuesday. We will get at New York Fed tomorrow, and we're about 2.5 weeks away from those GDP release updates. So we will not dismiss these readings casually. A reminder, the non-farm payrolls report that came out, or was supposed to come out last Thursday, is coming out on Wednesday, February 11th, thanks to the very temporary government shutdown here. Thomas, the S&P looks like it's bouncing at support, a recent low, so to speak. The NASDAQ offers you 0, nilch, not a zip, sort of optimism. This is a much worse looking chart. It's a much worse looking chart, thanks to QQEW in part. We can see here that the equal-weighted NASDAQ has been plunging in recent sessions. We can't dismiss the impact of the Mag 7 either here today, but the Mag 7's bouncing. So pick your poison, Thomas. Do we want to? Where do you put your chips here? Do you look to your S&P 500? Do you look to your Mag 7 chart? Do you see charts at support and bouncing a little bit intraday and go, that's enough? We can look to buy these lows.
If I picked one, it would be Mags, just because of the technical. Also, the NASDAQ, a lot of this, maybe I should say some of it, but the software stocks, they've been hit by, potentially being displaced, things like that. I think the Mags
3.8% today.
Yeah, I think the Mags is less susceptible to that, perhaps, given the capitalization of those companies, kind of the moated defense that they have. and also perhaps betting that Amazon could surprise to the upside, give us some glimmer of hope here. Yeah, if I had to pick one, it'd be Mags. So I don't like the way the NASDAQ looks. I don't like it at all.
You mentioned the software stocks. We've been talking about this a few days this week because software has been driving this market in the driver's seat to the downside. It's obviously another bloodbath today, down 3.8%. One of my favorite things, I have this themes map that I like to look at here. CRM is down 3.84. Enterprise software 3.31. Nothing good there. Quantum computing hardware stocks down 6.4%. That includes Google. But we could go to like qubits, for example, some of these meme names. D-Wave Computing. This has been a wild ride over the past several months. 15 up to 45 and now back down to 17 and change since late September. That's fun. But even some of the areas that were standing out here in the market in recent days, like transport and logistics has been my favorite place to look. That's now down. Rail's down by 0.3%. So your Russell, which had been holding up better than everything else, is actually your worst performer here. You mentioned a market being sensitive to economic data that came out today that jolts the initial claims. If there was a place to show concern about the domestic economy, it would be in the Russell, and the Russell's the worst performer. And, I think that substantiates a view that maybe we have some new concerns coming into the field of play that aren't necessarily related to the latest tweet or geopolitical kerfuffle.
Yeah, I think the economic data today, we were talking about regional banks the other day. Regional banks aren't doing good today because, you get weaker labor numbers. Energy's not doing too good today because oil is trailing back lower. So you get the energy component in the Russell also hurting. So not too surprising that the Russell here is leading lower among the indexes. I don't know. I mean, there's nothing. None of these are screaming buy to me. None of them are giving me an itch to try to find a bottom here, especially going into a
Screaming
Friday.
get out though. Yeah, I'm not having the itch to buy vibes in a lot of things right now. I'm having the itch to get out and let the markets run its course while I get out of town and come back with a fresh slate.
Yeah.
The Russell here today, what's going to precipitate that for me, right? Now, let's talk more actual trade. We have here, futures power, I think between me and you, we were both looking at long S&P 500 positions. You're out.
I'm out.
Okay. What would define that for me? For the S&P 500, getting rid of any longs, the low here, 68.14.5, that's got to go. That's got to go on a closing basis. It's not looking too hot because we're 9 points from there. If I was really adamant about holding tight and riding out a loss, 68.20, 67.75, we'll call it. That becomes the point of pain. If we wanted to bottom pick around here, what's one reason why we would not just yet? Volatility did cycle into a new high. And if we think about bottom picking in Bitcoin and Ethereum, we apply some similar standards here. Do we find any rates of change that have been guiding us to the downside recently? You could make a case that if we go to an hourly and slap hour 1 month, 50-day, but obviously there are 21 hours and 50 hours now in the 1 hour time frame. There's this band, almost like a 2-day moving average, right? Somewhere between 21 hours and 50 hours, 48 hours rests in between. You have this downtrend where the market has been capped off on rallies. So if I'm bottom picking right now, Thomas, I want to see the downside momentum broken. This is a little bit of a profile we can put together here. There's no reason to do that, but getting out of longs, we can tolerate a bit more pain. 67, 75, 50 more points. You want to risk another percent? That might be the camp I'm in. That's where the camp I'm in. For the Russell, it's going to be that 50-day moving average. 50-day moving average is what we tested earlier this week and started to bounce from. It allowed us to hold the uptrend from the lows that we had in December and at the start of the year. We are now starting to fail below there very hard today. The 50-day comes in at 25.92. If we break the low from earlier this week intraday, I'm going to get out before the end of the session, 2575.9. I'm not keen on holding losers. This feels like an odd conversation, Thomas. We haven't had to have these conversations here on Futures Power Hour in many recent months.
No,
Right.
So it's a little different of a market. I mean, we've had sell-offs. We've had them, but this one's it's starting to get a little different.
Yeah, stretching. Oh, I don't like these muscles that we're reusing here.
Yeah, and
it was so much easier on the other side.
I would love to be a contrarian just for the sake of it, saying things are down. Sentiment has, bearish sentiment is maxed out, but this time I'm just not feeling that, so I don't want to do that just for the sake of doing it. It does work out a lot of the times. You get like, whether it's the VIX or any fear gauge, you could say it's maxed out. It could be the cover of a magazine cover for more protracted stories in the market, but I just don't feel it here. I think I'm going to let the market digest this itself before I get back in. I still have some equity exposure via single name, so I'm not out totally, but I want to just dump everything, but definitely want to reduce exposure a lot here. And I don't know. I think this could be a changing point for AI and how investments go. If these companies are saying they're spending more and more and the market's not reacting, it's not gifting them, companies are going to reassess and say, if your stock price is down and you've been touting AI investments, you're going to have to reconsider, because shareholders are going to want to get rewarded. If you're not getting rewarded by what you're doing, you're going to do something else.
What do we make of the upward moves before we get off of stocks of both VIX and VVIX? Because I find this concurrent jump where VVIX itself, it's going up from over the past few weeks, right? We're 85 up to, we'll call it 112 now. But even so, in the past 2 weeks, we'll go 95 up to 112. And then we see in that same window, more or less, volatility has gone from an 18 handle to a 20 in the VIX futures contract. That's obviously not a red alarm, but it feels like it should be a yellow, maybe an orange alarm on our screens about the regime shifting beneath our feet. Does that pique your interest at all?
You mean going into a different type of volatility regime?
Yes, because when we get spikes in the VIX, but VVIX itself stays low, right? You're bounding around below 100, you kind of shrug your shoulders at it.
Yeah.
Like low VVIX with regular VIX spikes, that's a vol selling environment, or at least vol sellers are favored. But when you have vol spiking with VVIX spiking, to me, it says that the underlying regime is becoming less stable. Traders are starting to think a little bit more about tail risk. They're not just worried about the first order effect of rising vol, which is potential uncertainty in the near term. They're worried about the second order effect, which is a completely different volatility regime than we've been experiencing recently. VVIX never broke the recent high that we had here in January. I would be curious to see if we start to pressure some of the levels that persisted in the fall around government shutdowns and Trump-China trade war threats and will the Fed cut rates or not? That was the November spike. But it feels like we're getting into one of those areas where we're going to have to make the assessment if this is a real concern or not. And we're in that territory now.
Yeah, yet to be seen. I think that makes sense. I think that's definitely possible. And I think that kind of goes back to what I said. Are we coming out of a market that has been hopped up on AI narratives, AI spending? And is that now over? If we do go into a different volatility regime, I'd probably say that is over in a big way. And then the market, will do what it does. I don't think it would be good, but I don't know. I think it's going to be funky for a little bit. So
yeah, you mentioned some of these compute and AI names having a little bit of a rough session. For example, an AMD, Advanced Micro Devices. That's not having a good one. Yesterday it fell out of bed. Today it continues. And you think about a potential double top here, Thomas, breaking below the lows that we have in November, 265, we'll call it, against 192. We'll call it a $75 move. $75 less that brings us to, we'll call it 115. Ooh. Right. And we have a gap fill in here too, potentially. So right, you think about some of these names right now. What else is getting slugged here today? Not good news for me. Broadcom at a neckline, perhaps can't get through 320 again. These aren't small names, Thomas. Intel, that's pulling back in. Clack. This has been a big name. We should just point out that it's not pretty out there everywhere. And AI is the pain point. It is software, it is AI, it's semiconductors. It's almost like AI is advancing too quickly for software to keep pace. And so it's just getting eaten alive.
Yeah, perhaps. On the other hand, I guess one bright spot is companies that are reporting, really good earnings are still getting rewarded. If you look at ARM, it's pretty strong. I mean, especially compared to the market like this now. It's just one small part, but I don't know. It just doesn't feel. This feels more like I'd go short than wanting to go long. I know the past couple of years we've talked about buying the dips. It's always felt right to buy the dips. Just doesn't feel
give a dip
right.
buy here in Microsoft. We have a gap from April 2025. We closed at 395.26. Why not close that gap here, Thomas, and get a bounce going on? Microsoft is going to be down 30-something% from its highs.
Yeah, I mean, that's pretty crazy. That's a lot of market cap if you think about it.
Oracle's getting into the lows that we have from 2025, right? You got to think there are going to be some dip buyers down here. Another $20. What's $20 between friends and a name like Oracle, which is already down $200 from the highs that we had September. Bad one-day performances. It's these cloud names that are really getting hit hard. SMCI, for example, haven't talked about you in some time. Supermicro, that's off 8% and change. Datadog, that's another name that's having a rough session here. You look at some of these charts, Thomas, and you go, where is the bottom coming in? Because we're slicing through a lot of technical support, swing lows, this, that. Only thing that's up, semiconductor packaging. Good for you guys. Form, for example, up 16% today. But you really have to, 17% now, you really have to squint to see it in this very, very bright sea of red.
Yeah, could this, if we continue this bearish move, is this going to be bad for the labor market? Are companies going to start laying off employees when their stock prices, go down 20, 30, 40% and don't rebound immediately?
So it's a really important question. If recent history is any sort of guide, then one would have to look to 2022 and 2023 as our most recent template for this, where equity markets got hit pretty hard on the other side of the Russia-Ukraine war and the Fed raising rates because of inflation, which Russia-Ukraine may have added to that, but there was a whole bunch of deficit spending and low interest rate hijinks coming down the pipeline anyway, which is why on January 5th, 2022, the Fed came out in their FOMC meeting minutes from the December 2021 meeting and said, you guys really should take seriously the prospect that we're going to be raising rates a lot over the coming months. And that was the peak for the S&P 500 at the time. Just to jog our memories here, if we go back to 2023 or 2022, excuse me, so long ago on our charts. We're scrolling.
Years ago.
That is this candlestick here, right there. January 5th, this red bar. And we get those FOMC meeting minutes and we hear the rate hikes are coming. But that was the last environment in which you can look to the stock market seeing a fairly significant decline from high to low. And there were questions. Okay, well, is the equity market crumbling? Is this going to undercut the post-COVID recovery in the economy and the labor market? And it did not at all. So if we're in a K-shaped economy, Thomas, and it's gotten worse since 2022, Is the stock market so disconnected from the real economy now that this is just the casino for the upper income folks? I don't think so, but there's enough price action to substantiate that perspective as something that one may toil with and think about. And I think maybe, weaker stock market. I mean, what is that going to do for the grocery store folks, for the people at the dry cleaners? People aren't going to get their clothes dry cleaned anyway post-COVID. No one goes to the office anymore, I've been told. So, I'm not worried about that.
All right. Well, yeah, I mean, we'll have to see. I think there's a loss of confidence, business confidence. I guess it doesn't translate one-to-one with the labor market. I don't know. If you see this, equities entering a digestion phase here, do you see us going sideways? And what's the catalyst for, a retracement higher and a V-shaped recovery or something from this sell-off?
If the economy is just in a jobless growth state and we're still getting 4% growth at the top line levels, it's going to be difficult for equities to sustain any sort of significant pullback, in my view, especially with double-digit earnings growth. Today's data against a backdrop of a Fed that, when the market was like, no, there's like, what, a 20% chance, or excuse me, 7% chance of a cut in March, for it to jump up to 22, isn't the framework with which we've been saying after the January Fed meeting, the market's out of the mind, we're only getting a cut before June if something bad happens? Okay, well, what kind of cuts do we have in front of us? There are maintenance cuts, there are recession cuts, and there are emergency cuts. The stock market only does well in the 3, 6, 9, and 12-month windows for maintenance cuts. If the market is thinking no cuts before June unless it's emergency or recession, what's the context of today's rising cut odds? Emergency or recession? What are the immediate returns for the stock market in recessionary or emergency type cut situations? Negative. So the lens with which we're working here is actually a pretty bad one. We would have to see the earnings data is being overlooked. It seems like Ilya keeps saying the earnings data is being overlooked, just like it was at the end of last year. Fair point. The earnings data has been great for the second consecutive quarter. NASDAQ has not been able to clock new highs in 3+ months. So it's going to have to be good economic data. It's not going to be earnings. It's not going to be something out of DC policy-wise. We don't want the Fed cutting right now.
Yeah, we'll have to watch those rate cut odds if they keep increasing. We do get the jobs report next week. It's not usually like that, but the second week of February we get it. Potentially a big one for this market, especially where we're going right now. It would be, I don't know if funny is the right word, but if we got an emergency rate cut after, this political jousting that we've had, certain people would feel vindicated, of course. But yeah, I don't think an emergency rate cut would be good for the stock market at all.
You mentioned, that's funny. Wouldn't call it funny. Emergency cut in this environment. Thomas, the bond market here today is giving you a pretty strong signal about how it feels about the recent economic data and what's happening globally. This is a very significant up move today in ZB. We're higher by 27 ticks. I know it's less than 1%. I know that we still haven't broken the downtrend here. We haven't gotten through 116. The fact that you have the data evolving in the manner that it is, and you look at the SR3 contract, and we go out to the December 2026 cycle, there's a meaningful bump in year-end rate cut odds here today. Year-end rate goes from 3.2% to 3.14%. So 6 basis points lobbed off by the end of this year. It's a small shift. 6 basis points isn't a ton, right? We're not talking about a full 25. But 6 basis points is a quarter of a rate cut. That's the effect of what's occurred as a result of today's action. So the bond market now, historically, since 1980, what tends to do the best in rate cut scenarios? It's the long end of the curve during recessions, during emergency situations. It's the long end of the curve. Bonds do best in those two. Gold likes recession cuts. They don't like emergency cuts initially. But that's like a raise capital kind of situation. they come around to liking the emergency cuts, but not in the first 3 months. You could see that almost in today's price action, by the way, where gold is struggling. I digress. Notes, bonds up. If we want to talk about a recession trade going on, volatility is coming in. Notes still around 20, but what a development. Getting through the downtrend off the highs that we have in November, December, January here, back through the neckline that had defined price action going back to December. So much for this being a bear flag. We're on the cusp of a full-blown reversal here. So I'm watching the 50-day moving average in 10-year notes. We had resistance here throughout the year so far, multiple times in January, and thus far haven't been able to clear it today. But notching a move through there, there's a lot to like technically about there being a major turn and reversal in the long end of the curve's fortunes, at least on a yield basis here, Thomas. I'd call it 4.18%. You're at 4.18% in the 10-year yield, and we may have seen a full-blown reversal in the yield trajectory in the intermediate term.
Yeah, this is, I almost want to get back into a ZN position here some way. Not sure if an iron condor is the best. How are you trading them right now?
Not well. That's one way to think about it. Not well. The reverse iron fly, the albatross around my neck, which has been sitting at max loss for several weeks, continues to do so because it's an absolute nightmare of a position. What else is there to say about it? Could I take it off at max loss? Should I take it off at max loss? Well, if this thing starts to move and break out here, maybe I can get some juice, Thomas. I just needed to get away from 112. The siren song of the reverse iron fly, it checked all the boxes and met the criteria. It has worked out horribly so far, so nothing really good to report there on how I'm trading it. At 50 days, I do have the short iron condor on, as you are mentioning, in ZB against the 111, 112, 119, 120. In doing so, effectively saying that the lows, and I want to go to the continuous chart to make this point, but the lows that we have from September, the highs that we have here from October, we're not going to breach those in this next 45 in 21 day out cycle. We're effectively near the midpoint of this trading range. If we were to take a Fibonacci retracement tool and go from the lows in September up to the highs that we have here in October, midpoint comes closer to 116.10. So within a point, that is, I like a little bit more. That was actually the right way to trade ZN for the past several weeks, just saying that we're not going to go anywhere. I think that's one way to play it in bonds. I also have something shorter term sprinkled in here. Out of the money call spread that's been on for some time, a little bit of a reach, sitting right at a put spread, a long call spread here as well. That's working out, that I put on with Jamal the other day. So bonds are a little bit better than notes, peppering a few different things in across the board. Some of them are working, some of them aren't. ZB here, though, getting a little kick in the pants today where I really needed it in bonds, given that short duration cycle that Jamal and I are working with on that particular trade.
Yeah, actually I think I'm going to do ZN. I think I'm just going to put on iron condor. And it's like 1-to-1. It's only 35% POP. Actually, I might wait on this for a little bit. I might wait.
ZN is usually the better product for retail traders, just by the specifics of the product contract specs, where the tick value for ZN is $15.62.5, and for the bonds it's $31.25. Likewise, the overnight buying requirement for notes is $2,073, whereas for bonds it's going to be $4,070. So just in general, notes are the more approachable product than bonds are here. And if we think about the typical Tasty methodology, we want to look for, at least try to sniff out higher volatility readings than lower ones if we're going to look to sell vol in this market. ZB has a 9.6 IVR and ZN has a 20.6 IVR. So the product for retail traders, at least in this bonds futures world, that is more appealing, also likewise has the more appealing volatility situation. I think it meets the criteria. If I'm looking for one of the two to trade and put a new position on in, it would be the notes, which I think would be a little bit more comfortable as things stand, and technically maybe giving you a little bit of a better outcome in the short term.
Yeah, definitely the IVR rank. IV rank is more advantageous if you're trading that along with the size.
Let's move into the next layer of hell as we work through Dante's Inferno today. Metals crushed by China. There have been news stories circulating, Bloomberg News in particular, that several Chinese metals traders have locked in gains of $500 million shorting silver in its recent bout. These are folks who had made up to $5 billion getting on the long side of gold over recent weeks and months. So there's a little bit of a narrative shift here, Thomas. I think this is really interesting, that it's not just a story of silver bulls in China who are making money and pushing this market around. It's now whales that are shorting the market likewise. I'm not sure that it's something that is anything more than a good tale, however, right? You often hear these stories of how XYZ hedge fund made, $20 million, $50 million, $100 million betting against GME during the meme stock craze. Or quite frankly, on the other hand, how a lot of companies and firms made some money on the way up too. We shouldn't dismiss the impact of what's happening in Asian markets, though, because it was last night, and this is the bigger takeaway. It's not the anecdote of the traders that have been making money. It's the fact that last night when Asian markets opened, what do we get? We get a 20% sell-off in silver driven by what was happening in China. And I think that's a way to substantiate our view that China has been a major factor on the way up, just like it could be a major factor on the way down. There is good news, though, which is that the siren song of silver did not get us back into the market yesterday because we were waiting for that close through that key area. Give us a little bit more back through the 1 month. Stop treating that former band of support as resistance over here, right? And it never did. And so avoided a bad trade. Avoiding a bad trade, Thomas, is sometimes just as good as getting into a good one because it means you're not losing money. It's obviously not as good as not making money, but it's better than losing money. And so this is why I talk about these check boxes. We were so close yesterday and just decided to wait a little bit longer. So patience here, the November 21st uptrend, something that gold was able to get through, something that copper had been able to get through and trying to hold it here still today. Silver can't get back above. It's a major red flag. It's a major warning sign. We're close to the lows, though. Here's the good news. We are close to the lows, though, $71.20.
There's good news.
There is good news. We're not hitting new lows, despite that aggressive pullback here. Volatility is staying up-ish, 84 vol right now. We had a high of 105 earlier in today's session. Into the breach once more, one could go, where depending upon where you want to put your strikes in a market like this, you could look higher and see that call skew still persists, but you could also look to the recent lows. And where did you go? We'll reset this here. 70.71 on our short put spread. What would that look like? 70.71 on a short put spread here under recent lows. Calling a low is risking a 1-to-1 trade, Thomas, right now. 53% probability of profit, risking $2,430 to make risking $2,560 to make $2,440. It's a good chunk of buying power too. On a $25,000 account, it's going to be more than 10% of your account equity, probably closer to 13%. So it's not a small trade. It's probably better executed through SLV, but there is a level to trade around. You just have to be willing to eat the loss. You could also call for a bounce back into 81 if that's what you desire to do. That is a little bit more upside, has a little bit more positive convexity to it. But of course, you need the market to move higher, and the momentum has absolutely died here. So as for me, I'm going to wait. I'm not revenge trading this. It's tempting to revenge trade it. I already did that once when I got out at 99 and then jerked myself back in there into a 117, 118 call spread and was trading at 113, and it looked great for a few days. And obviously now it's sitting at max loss. So the chain of the trades that brought us all this glory and fun in recent months seems to have been broken, we're not going to callously re-engage, as tempting as it may be. Let's allow our criteria to be met before we try to play hero ball again, because it is difficult.
Yeah, I'm not going to get in either. This is silver had a series of good trades on it, got hurt. It's like when you're 19 years old and you get hurt, someone breaks up with you and you cry in your basement for a week and you're forgetting Sarah Marshall on repeat and you just lay there. You know, you just don't want to do anything. That's kind of where I am with silver.
Okay. All right, Thomas, we can talk off air. Gold here, we are down 1.5%, so not quite. Silver's 10.6% gain. Gold holding up. It is holding up. That's the thing. Gold's not exactly breaking down technically today. There's a lot of volatility in these products right now. Feature, not a bug. So 48.75 right now. The 1 month moving average comes in today at 48.37. We are in the process of holding it for a third consecutive close here. It is some stability. It's not moving up, so it's not fantastic. That's not exactly what you want to see if you're long, like I am. But by nature of some of the trades, Thomas, deep in the money call spreads that are expiring in around 18 days, plus some others that are on the precipice of being in the money 80 odd days out, there's no reason to panic with what's happening. Duration is your friend if you're trading these on the long side right now. Other than that, there's really nothing to do here. Copper is holding-ish. Where do we draw this trend line to? I want to stay long, so I guess I'm going to draw it here. Either way, if we can get a little bit of recovery, we hold that 1 month here in copper as well, just like in gold. The metals are dealing with some indigestion. The speculation, Thomas, you called this out at the start of the show. There are clearly speculative forces unwinding right now when you look at what's happening in crypto, when you look at what's happening in silver. The stuff that's adjacent to it is getting hit. It's the NASDAQ and tech for crypto, if it's copper for silver. But they're also not getting totally killed in a manner that doesn't make you want to engage and say, like, I got to just ride this out, I guess, for a little bit longer. So gold longs, copper longs, it hasn't been fun. Money's been taken off the table for sure. But it's not over.
Yeah, I have my copper position. I have an order in right now. I'm just rolling out for some duration. So I was in, that February 24th expiration. It was at 19 days. Now I'm going out to 49 days. Essentially almost the same exact strikes, 5.7 or 5.68, 5.7 now. I think, 49 days staying above 5.7. I feel really good about that. So I'm fine with this trade. That's what I'm doing in copper.
Before we hop off copper here, I want to just take this level and draw it to the one that we have down here. Okay, we talk about former highs becoming new levels of support on the way down. Thomas, this is pretty clean to me. We have a level just over 5.5, call it 5.55 even, where we have a low here at the end of December, right? Oh, margins are coming in. Margin hike, markets wash out that Monday, the Tuesday, we bounce back. We have our washout day on Friday last week, Thomas. Copper never got down below 5.55. So CPR itself, trade idea here, 74 IVR, copper holding up a little bit better. So if we go over to the HGK6 contract, and we can hop on over to HGK6 here, line up the recent low, 5.61 we'll call it. 555, 560, 555, 560. Show me a decent trade. Hey, 61% probability of profit. Basically risking 3 to make 2. A little bit worse than that, but not terrible. All right, let's see if we can get someone to fill it. 49 DTE. I like that, Thomas. I already have some bullish exposure, but it's more of the this thing needs to rally rather than this thing needs to stop falling variety. And maybe we can have the best of both worlds where we rally a little bit here and I can curb some of the losses in the long call spread with a profitable shorts put spread. But 555, 560 to me seems like the level with which we'd want to trade around if we're going to hold on to long deltas. Those break and we say sayonara for the time being.
Yeah, I like copper.
Oil down, nat gas up. 2.6% loss in oil here, uptrend in place. Last few days, consolidating, Thomas, 65 IVR. It's a triangle up here, which we can draw on the screen. It goes into another triangle here. The bulls aren't dead yet, but certainly it's a period of consolidation. Thomas, what do you make of our oil market as we continue our Iran watch here on Futures and Power Hour?
Yeah, well, I guess what's the latest thing on the Iran negotiations? I think I saw last night that the talks were potentially back on. I don't know if that's what caused, the selling here. In any case, I expect it to continue to be a little bit range bound. I have a short iron condor between 58 and 68, so as long as it stays in there, I'm happy.
The long deltas here have worked over the past few weeks. It's obviously not up near 65, 66 anymore, but we're heading into the weekend. And again, as I've been saying every Thursday and Friday, the Trump administration, when they have done things militarily, they have preferred to do them on the weekend. Volatility is our North Star here, Thomas. So what are we looking at right now? That is a 65.5 IVR. Why do we care about that? Context. Today's volatility range, 67.58 down to 59.83. Which end of that range does 65.5 sit closer to? The upper end or the lower end? The upper end. So volatility here in the oil market, it's not dying even with the pullback. If the volatility disappears, that's when the rally ends. But if the volatility is sticking around, Fat Lady hasn't sung just yet. We're going to go over to currency real quick because we do have a time constraint here. We can't talk forever. We do see the dollar index is starting to peak through the lows that we had before Christmas here. And that matters because that could be a potential turning point, Thomas, where we take a look at, say, something like 6B, for example, starting to think about losing its uptrend over recent months, starting to dip below its 1 month here. A key test of the 50-day moving average is coming up. We have the euro down by 0.13%, holding its 1 month for now, but teetering. The Canadian dollar, which if that really wants to go down quickly the next few days, I wouldn't mind you doing so, but 73 and change holding the 1 month. You could see how a lot of these individual markets are at potential turning points in trends, just as the broader dollar indexes. The volatility is what's most interesting here, though, because it's your Canadian dollar, your Japanese yen that have the highest readings on the board. So what do you make of these markets right now, Thomas, as we close out this door? Do you have faith in this dollar rebound continuing? Because I've been looking to sell it. It feels like today would be the day to do that if that's the persuasion that I'm still holding. If that were the persuasion, I'd still be holding.
You said you're short the yen, or?
No, I've been long the yen here, and I've given, again, cold hands the past week or two. I have not been able to. Past week has not been fun for me.
Yeah, I mean, I'm not trading the yen right now. I was looking at a euro short. I know the ECB, was it this decision yesterday for them? Bank of
this
England
morning
too.
Yeah, both this morning.
The BOE was one vote away from cut, correct?
Yes.
Yeah. I think shorting the euro. I think the euro's run a little too hot for too long. So.
And this is what's so fascinating about the pound's move today, off by 0.8%, and the euro even being down. We have economic data that comes in that shifts Fed rate cut odds up 7% to 22%. Ostensibly, that should be bad for the US dollar. Treasury yields are down across the curve, of course. The BOE here, when they kept rates on hold today, the market was pricing 7 out of 9 people to vote for a hold. Only 5 out of 9 did. 2 out of 9 were expected to want to cut. 4 out of 9 did. So a cut could have been there today. The central banks aren't as optimistic on their currencies and their economies as the market feels they should be. And as a result, that's all subsuming this shift with the Fed that's occurring today. Tomorrow, Canadian jobs data, that is coming out, even if our U.S. jobs data is not. Again, that's next Wednesday, as Thomas astutely pointed out earlier. Michigan confidence likewise out. We're done here now. We'll be back later on for overtime. Thomas, I will catch you later. Everyone, brief break. Tasty Live continues next. Dr. Jim Schultz, he's here with From Theory to Practice. See you there.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Thursday edition of what it is that we are trying to do. Welcome to the Sell Everything edition of what it is that we are trying to do. I'm so glad that you guys are here and you're a part of the show, because it is only because of you all that we can do what we do. So thank you guys so much for being here, because we couldn't do it without you guys, man. So thank you guys for being a part of my show and being a part of the network writ large. It's all because of you guys, man. So thank you. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who might be also watching the show. You can celebrate if you are a bear. You can commiserate if you are a bull. It's nasty, nasty business out there, man. We are almost 7 to 8% off of all-time highs now. So watch out below, because apparently, according to the internet, it has only just begun. And of course, you can drop whatever questions you have for me down in the chat box, and I'll try to get to as many as I can right around the second half of the show or thereabouts. The expected move on the number of questions I get to per show is somewhere between 0.1 and 0.15. So the earlier that you get that guy in the chat, the higher the delta that will get to your questions. All right, Josh, bring us into the market, bring us into the portfolio. I kind of wish we didn't have to do it, but we got to do it, man. Like AMD, look at this thing, man. It is a dog. This thing is a dog. And I'm not talking about like a German Shepherd. I'm not talking about like a Labradoodle. I'm talking about like a little Bichon Frise. Like, this thing's just like a little multi-poo, man. Like, it is just not getting it done. AMD down $8.90 here on the day. And then Google, of course, this was yesterday's edition of lighting stacks of cash on Fighter. That butterfly did not work out. It's currently now worth about 74 cents. So if I go into, if I open up the Google position, you can see that this was a butterfly that we put on yesterday. 340, 360, 380. You've got the stock at 329, and yeah, that's not good, man. Like, we needed this thing to go the other direction. Like, we needed Google. I mean, it's not a huge situation. Again, this is not an an AMD kind of Bijan, kind of multi-poo type of deal where it's like, man, this thing is just never coming back. It just doesn't quite have the teeth that we need it to have on the right side of the market. Okay, that analogy, that's probably more like C minus. So we may put that guy to rest. But Google, we could get a turnaround tomorrow. Like, could we get a little taco Thursday? Could we get a little taco Thursday afternoon? I mean, it's possible. Could we get a little turnaround Thursday headed into Friday? I mean, I'm not sure it's been done before, but maybe tomorrow is the day. Like, maybe tomorrow is going to be the day when all is right in the world and we actually get a little green on the screen with the E-mini S&P is down 73 and you've got the NASDAQ index, the risk-free instrument, right? An extraordinarily high-risk product down 305. You've got the boomers down 470 and you've got the Russell 2000 Futures Index down 35 on the day. Man, you've even got, look at gold. Yikes, man. Pour one out for your local neighborhood shifty. Gold down 98 on the day. Where are my Hunt brothers at? Gold was just up, not up, but I mean, it was like 20 or 30 points higher, I think. And then it just fell out of bed. Silver down $9.65 today. Man, Hunt Brothers Pizza is back in business out of necessity. Like, they may not want to do it, but they have to do it. Like, they may not be excited about the prospect of Hunt Brothers Pizza being back online, but at this point, you got to slang some hot and ready's just to keep the lights on, man. Like, you got to get some cheese and pepperoni out the back door just to kind of get the bills paid. And so silver down $9.57. Man, that's some crazy, crazy stuff. Let me go into silver really quick. Let me go into we look at a chart of silver. Yeah, this guy was down. It was down like 73, 71. Wow, the low today was 71. I didn't even think it got that low. Man, if we see a 6 handle on silver, guys, that's crazy stuff, man. Because we just saw a 12 handle, right? We just saw a 120 handle on silver. Now we're going to go back to a 6 handle here pretty soon. That's some wild stuff, man. That is some crazy circus-like behavior. If I go into, when did that happen? When did the 71 print, was it last night or was it in the morning? Wow, it was just a little while ago. So it was after the morning. This morning, silver was down to 71.50 and it has since recovered a few dollars, but still down $9.50. So that means that earlier it was down $12.57. I mean, this isn't quite like Friday was. Again, Friday was one for the history books. Like, Friday was one for the ages with silver down $30 or whatever it was, $35 and, $45 range. I mean, just some crazy bonkers like stuff. But if we look at gold, I think gold's going to be very similar, right? So not the exact same pattern. I mean, gold was down to a low of 48.05, and that was last night. So right around the midnight hour, I think you got the 48.05 print. And then it's been kind of just hanging out in the 4,800s pretty much all day. I think it's run up to 4,900 a couple of times, and it has now kind of settled in at that 4,850, 4,860 range. And so, market's all good. Volatility obviously on the rise. You've got volatility futures are up $1.06, and the spot volatility VIX is up $2.11 up to 2075. And I think that's pretty close to the highs of the day. Fairly close to the high of the day. I mean, it was up over 21 a little while ago, but it's 2075. It hasn't crashed, boom, banged. It hasn't contracted significantly. I mean, it's pretty much just right where it was at the tippity top today. So all right. So what I want to do though, so Google, it's brutal. AMD, more brutal. Right. The rest of the position. Look at Snapchat, guys. Look at this piece of crap stock. Look at this. And you guys made me buy this. Right? Didn't you guys make me buy this? I'm not sure. This could not possibly have been my own independent thought to go into the show and say, man, let me buy some Snapchat. Like, let me get long some Snapchat. Oh, I know what it was. It was Josh. Before the show yesterday, he's like, hey, you doing anything in Snapchat? I'm like, no, I'm not going to touch that stock. It's a crap stock. He's like, you should buy the stock. He's like, I really like that stock. Like, I see great things in the future for that company. And he kind of laid out a pretty compelling case. And I'm like, all right, maybe I'll buy some Snapchat. Maybe I'll, be a long-term investor in SNAP. And here we are, Snapchat down 72 cents. And so it is closer and closer to the brink of insolvency at $5.19. But thankfully, we've got our 100 shares. It's obviously a very low price stock. We don't have to worry too much about it. I'm obviously more concerned about AMD, Google, the stack of cash. I'm going to set ablaze here in a couple of minutes with Amazon and things of that nature. So, all right, let's go ahead and Let's see here. We did Google. I mean, I'm not going to do anything with Google. There's no reason to do anything. There's one day to go. Let's see if it turns around tomorrow. I mean, I'm not going to save my 94 cents. Let's just see if we get a little turnaround Thursday, turnaround Friday, and see if we can't make a little magic, going into tomorrow. For AMD, we're 20 points in the money now, right? I mean, this is a pretty sizable in the money position. For right now, though, because we have so much time on the trade, right? You can see we still have 43 days to go. We still have a ton of extrinsic value in the position. We're obviously beyond the break-even point. I mean, the break-even point on this trade is just going to be your strike price, so 210 minus, whatever you sold it for, which for our purposes was 775, right? So my break-even point on the trade is going to be what, 202 and a quarter? So 202 and a quarter. So obviously you've got the stock at 190, 191, right? We're $10 away from the break-even point. We've got some work to do. There's no question we have some work to do. But remember, guys, I say this all the time. In my opinion, this is the biggest advantage that comes with a short put. Like, this is the number one advantage that comes with the short put strategy. If you want to, you can just take the shares and stuff them in your back pocket and go live your life. Like, you can just take the position in the money short put if it's deep enough, or long shares, essentially, one in the same. And you can just put them in the stock drawer, man. Like, put them in the stock drawer and say, you know what, I'm going to go live my life. I'm long this stock. I feel good about the stock, whatever, which is not to say it's guaranteed to work out. And it's not to say it's not going to get a whole lot worse. But if history is any guide, I mean, being long stocks, being long indexes, being long individual names has worked out okay, in the longer term. Now, could this be the beginning of the end? Could this be like, late 1999 going into early 2000, right before the internet, bust? Could this be the AI bust that's on the horizon? I mean, that's what Johnny Pools 47 on the internet is saying. Like, that's what Johnny Pools 48 in the subreddits is saying. And so I don't know, man. We've got to wait and see. Generally speaking, Johnny Pools 47 and or Johnny Pools 48, their career batting average is somewhere around 0. So I think if you're playing these things to the upside, I think you might be okay. So, all right, let's go in here, though. I see you guys, man. Look at Michael Anthony in the house. Brian Dowdy's here, man. Too Late Jake is in the house. Sam L. Man, Parsival's in here, is in the house. Rodrigo's here. Argent Purr. Look at iPod Touch. iPod Touch is in the house taking victory laps. Man, that is some good stuff. And I see N1C is here. Man, look at you guys. All right, let's go to Amazon. So I'm going to go to Amazon. Okay, so Amazon. Let's think about this, right? We don't need technical analysis. Maybe we do. We don't need fundamental analysis. Maybe we need that too. When I'm thinking about this, though, and I'm just using common sense, and I'm recognizing the fact that the global financial marketplace right now is teetering on the brink of complete destruction, 7% off of all-time highs. This thing is hanging on by the thinnest of all possible threads. It is all up to Amazon. It all comes down to Amazon. It all comes down to AMZN. Do you really think that Bezos is going to run the risk that he's going to lose Amazon Prime access to his pharmaceuticals? Do you really think he's going to even let that possibly enter his radar? Not a chance. Absolutely, unequivocally, not a chance. So when I think about Amazon, there's no way to see this other than mega bullish. It's the only way. It is the only way. If you can't beat them, you join them. If you can't beat them, you fall in line, rank and file, just in the back of the pack, and you just kind of follow the sheep all the way to the slaughter. Right? Like that's exactly what we've been doing. AMD, GOOG, even GOOGL would essentially be the same, of course. But for Amazon here, guys, this is what we're going to do. We're going to go to the trade page. We're not going to do any funny business. No funny business today. No butterflies. No expected move rigmarole. We're going to keep this really straight-laced. We are, of course, going to double dip, but we're going to keep it a little bit more straight up. So let's go into the March cycle. So if I go into the March cycle, and I want to start with a short put in the back month. So let's begin the strategy with a short put in the back month. This is going to be the financing component of the debit part of the strategy. This is exactly what I did with AMD, and they both blew up. They both completely blew up. But it's also what I did in Apple, and it worked. And so this can be a really good strategy when it works and a not so good strategy when it doesn't work. It's almost like for every gimme, there's a gotcha. If you go for a bigger gimme, there's going to be a bigger gotcha, right? And so these things are sized appropriately, and they're obviously going to match each other, on either side of the fence there. So let's go in here, though. Let's go to Amazon. And I'm thinking, we just sell if we sell a 200 put, that's going to be about $2,200. That's right about 7% of the account. So we're kind of up around the upper end of the range, but we're not beyond the upper end of the range. This isn't 10%. It's not 15%. I don't think this is too crazy at all. I think this is absolutely within position sizing parameters. And this is why having position sizing parameters, 3 to 7% or what have you, is a very, very good thing to have when you're going into the different trades that you want to do. Undefined risk, defined risk, whatever it might be, it's really helpful to understand, okay, how do I want to size this trade? Like, where am I comfortable with the sizing of this trade or any trade for that matter that might look like this one? A vertical spread, a strangle, whatever. And so when it comes to undefined risk, 3 to 7% is where I like to live, generally speaking. I will go above the upper end of that range if we do find ourselves, or if I find myself, I should say. I shouldn't rope you guys into this. Against your will, most likely. If I find a trade that, it's checking all the boxes, it's an index, the volatility's high, I like the directional nature of the trade, what have you, the credit collected, the premium efficiency, like check. I may go up to 8, 9, 10%. I've certainly done that before. I will do it again in the future. I don't usually go out of my way to do that with individual stocks because I do feel like the idiosyncratic risk that comes along with individual stocks is obviously nothing to sneeze at. Like, it's nothing to shake a stick at. Or maybe it's something to shake a stick at. Either way, sticks are getting shook when it comes to individual stock, one way or another, when it comes to individual stocks and, ratcheting up the position sizing. So for us here, though, it absolutely fits. Okay, let's put this guy on. I think we've shaken enough sticks here. Let's go ahead and push that guy out. Okay, so we got filled for 547. So there you go, 547. Beautiful. Okay, so now what I'm going to do, though, I'm going to use some of that credit, maybe all of that credit. Let's buy an at-the-money vertical. So we're going to play Amazon to the upside in a pretty sizable way here. And again, I like this strategy because I do feel like the short put strike, we're 20 points away. We're basically right at the expected move for the March cycle. Any up move is going to be great. Any non-event is going to be great. Even small down moves, we're going to be able to absorb that rather effectively. Now, of course, if we get another crash, boom, bang, like an AMD or whatever, then it's going to be pain. Like it's going to be Clubber Lang in Rocky 3. I predict pain, man. Like that's the only thing that I predict. And so let's go ahead. Josh is trying to troll me with really, really bad trade ideas. Yeah, absolutely not going to do any of that. So let's go in here, though. Let's just stay in the March cycle. Because like I was I think Ordenu, I think you had this question yesterday. And I think I owe you an email. I'll get back to that email as quickly as I can. So thank you so much for reaching out and being a part of the show. Like I appreciate you, my friend. You were asking yesterday, if I remember correctly, when it comes to, vertical spreads, do I go short term? Do I go long term? Like, how do I capture the move that I'm going for? And the basic essence of what you want to understand is the speed with which the strategy is going to move. So when you choose something that's short term, it's going to move a lot more quickly one way or the other. Like if it works in your favor, it's going to work in your favor very quickly. If it goes against you, it's going to go against you very quickly. And so even though the cost of the strategy will essentially be the same, which is what we looked at yesterday, looking at the money verticals, in the front week versus a couple weeks out versus, the front month or what have you, they're all priced at right about 50% of the width of the spread. But the speed of the strategy after that point is totally different. And so for me right here, we've already got, the short put in the March cycle. I sort of want to go to the, the 1 day cycle, try to be a hero. Like, let's just do this. The Friday contest not going to create itself, obviously. But then, the disciplined side of me, like the, more well thought out side of me and more kind of methodical side of me kind of comes out and says, well, maybe we should do something with a bit more time. Let's do something that has a little bit more time to kind of take down those teeth of the strategy a little bit. Like, we don't want the German Shepherd teeth now. Like, we don't want the Labradoodle teeth now. Like, here's that analogy again. Still very much C- to maybe solid C. We want the Bijan Frichet. Like, that's what we want for this guy. So let's go into it keeps getting worse every time I keep bringing it up. Trust me, I'm aware. I'm very aware, but we'll keep going back to it. It's part of the show now. So March, yeah, I mean, you got Amazon at 222. You know, I'm kind of thinking, you know, if I bought at 215 and sold at 225, I mean, you know, this guy already has a ton of intrinsic value. Like you can see, I mean, we're paying about half the width of the spread. So that's a little under 2% of the account, right? So position sizing wise, I mean, again, defined risk, typically 1 to 3%. And so this is very, very reasonable, in my opinion. You have to decide what makes the most sense for you, of course. But this makes some sense. I mean, we could go into something like the 1 day, and I will even bring it up just for a second, just to kind of show you that, again, the pricing is going to be almost identical. It might be a little bit different because of the bid-ask spread differentials, but I don't anticipate it's going to be that different and just drastically different from, you know, from kind of one cycle to the next. So this strategy looks really, really good. That might be the one that we choose. Let me just go to, let's delete that. Let's minimize that. Let's go to the 1 day cycle. So it was a 215, 225, I think, right? Yeah, wow, it's even cheaper in the 1 day cycle. They're drawing me in, man. They're drawing me in. If I do the 1 day cycle, I can save like 20 cents, I think. Like I can save a little something off the top there. Man, look at that, 215, 225. It looks so good. It looks so good. Let me clear that away though. You know what we're going to do? Let's go with the February 15 days to go. 215, 225 is going to be what, 520? 540? That's brutal. I can't pay 540 for that. No. What was the March again? Hold on. I want to make sure I'm not paying them. I'm not paying out the wazoo for this thing. It doesn't even make any sense. 530. So it's the same. Wow. We got a nice little discount there in the 1 day cycle. Whew, man, Shooter McGavin is going to take over. Let's do it. We're going to go the 1 day cycle. 215, 225, 515. Saving 25 cents. I mean, obviously, if it goes down, then, you know, I'm going to be, well, actually, no, I'll be in a better situation. Now, the tricky part is going to be, of course, if it goes down tomorrow, but then recovers like a week or two later, that's the worst case scenario, right? Because if I would have chosen something even like February or March, of course, I'd still be in the trade. So I wouldn't have to worry about necessarily having to absorb a loss because the trade would still be on the books. I wouldn't have to, you know, get out of it quickly tomorrow because it's going to expire. But I really like the pricing of this strategy. For whatever reason, it's a bit cheaper than the back month. So let's go ahead and do this one. 515. We've got no takers. Let's try do like 518. I'll probably get somebody. All right, perfect. So we're in, we're out, we're wherever we're going. For 517 was the final tally on that guy. Okay, so let's go ahead. So there's my Amazon. There's my Amazon strategy for earnings tonight. Now, again, if you're new to the show, welcome aboard. I'm so glad that you are here. Like, I'm so glad that you are here. Thank you so much for checking out the network and checking out my show, whatever. I really hope that you stick around, whether it's on my program or any of the other shows that we have on the network. Like, there's so many things to choose from. If you are an active trader, like you're in the right spot, welcome aboard. You need to be fading all of my trades, especially the earnings trades. Maybe not the regular trades. Like maybe the regular trades do okay. I mean, we had a decent year last year, you know, as you guys saw at the end of the year. But the earnings trades have routinely been a stick in the mud. Like they have routinely been something that you should fade if you are serious about reaching your financial goals. Right? Now, you may think I'm joking. You may think that this is an attempt at B-minus humor. It is not. This is what you need to be doing if you are serious about becoming a better trader. So there you go. I mean, I couldn't have made it any more clear for you. I'm playing Amazon to the upside, and there you go. So you guys are welcome. So all right, let's go ahead and let's see where you guys are at. Man, where are you guys at? I see you guys in the house. Let me see. Can I surprise and delight somebody? Where are we at? Let me see if I can surprise and delight somebody in the middle. Here we go. Yeah, I'm going to surprise and delight my man Dexter right there in the middle. Man, what's going on there, Dexter? I appreciate you, my friend. Thanks for being here. I don't recall you having been in the stream before, but that doesn't mean you haven't been in the stream before. That just means I don't recall you having been in the stream before. So thank you so much, my friend, for checking us out. Dexter says, Dr. Jim, many traders with big size accounts only trade one product like SPX or SPY. For a medium size account, is MES also such an option? Yes, absolutely. And so, you know, SPX obviously going to be pretty big accounts. You know, you're probably talking about, I mean, you're talking about at least mid six figures, probably at least 400,000 or 500,000 or more, probably more like seven figures or multiple seven figures, because SPX is a huge account. But yeah, maybe you could do it with, mid six figures, 3, 4, 500,000 maybe. If that's all you're trading and you're doing more than one lot and things like that, that's probably okay. I'd have to think through the sizing of it a little bit, but I know it's not going to be 25 grand or 50 grand or even 100 grand. You're probably going to need multiple hundreds of thousands. SPY obviously is going to be 1/10 of SPX, so that's going to be a lot more tractable for the common man like myself, and so like yourself potentially. And so that's going to be a lot better for smaller size accounts. Now, MES is really nice because it's 1/10 of ES. And one MES is essentially equivalent to about 50 beta weighted delta shares of SPY. So if you trade SPY, you're obviously trading, the notional equivalent of 100 shares of SPY. Now, if you get in and the delta's on the put or the call or whatever, only 30 or 40, then you're only feeling 30 to 40% of the full weight of that contract, of course. But if it's in the money and it stays in the money, you take it to expiration, what have you, it goes all the way to the full notional value. And so you will be holding what feels like 100 shares of SPY. Okay. MES is essentially half that. So one MES contract is equal to about 50 shares of SPY. So that's really nice from a sizing perspective. I mean, the reality is there, Dexter, $20,000, you can start trading MES. Like $20,000 is enough capital to start trading, a little bit of MES. Like if I go into MES, I'll even show you really quick. I don't have an MES position on right now. Man, maybe we should get something on. In fact, I think we're going to do this, Dexter. So I'm glad you brought this up because you got the market down 75. You've got volatility, skyrocketing. I mean, MNQ, the pits in MNQ lately they've been crazy, man. Like the spreads are like 80, 100 points wide. I'm like, man, I'm not touching this thing. But MES is super liquid. So here's another reason, Dexter, why this can be a great option for you. It's a very, very liquid product. SPY, SPX, ES, MES. I mean, these are the big dogs. These are all the big players, that are playing in the sandbox that everybody's playing in, where all the activity flows. It all typically flows through the S&P 500 index. And so, whether you're talking about spot, whether you're talking about futures, whatever, this is what's going to attract and draw the lion's share of liquidity in, the index market for sure, if not the entire market kind of writ large. And so if I go into MES, if I was going to do an outright MES, you can see that it's only $2,400. If I wanted to play it directionally, do an outright trade, maybe tap into my inner Errol Coleman. I mean, I'd have to be trading MNQ to do that. But still, like if you're looking for directional plays in the morning, at night, in the evening hours, whatever you're doing, MES can be a great option, to do that, of course. But if I want to do something with the options, which is what I'm typically focused on, if I go into March with 42 days to go, and let's say I want to sell a 30 delta, like a 30 delta put, I mean, you can see the market yourself. It's only a 1.5 wide, 1.75. I mean, that's really, really good, right? Now, remember, with the multipliers, 1 point in MES is $5 per point. So, a point wide is $5 wide, 2 points wide is $10 wide, and so on and so forth. But, if I go in here and I go to sell this 6,600 put at a 30 delta, I mean, look at the buying power effect. It's only $1,500. And so from a position sizing standpoint, if you've got $20,000 in your account, that's about 7.5% of your account. I mean, it's an index. I think it's close enough personally. I mean, you may not agree and you may want it to be even smaller, and that's not a bad thing. That's of course a good thing, but I don't think that you're crazy big, like you're going to put yourself into super hot water and, you're going to be, just, in the hurt locker really, really quickly. Now, obviously, we're limit down tomorrow or something like that, then everybody's in the hurt locker together. It's not just Jeremy Renner. It's not just that other guy. It's all of us. Like we're all there together. Right. And so obviously you have to take that into account as well. But this is pretty good from a sizing standpoint. Yeah, $1,500. I mean, so if you want to do something with MES as being the focal point of what you're trying to do, $20,000 or more, you can absolutely do that. And so you didn't say what your account size was, and that's perfectly fine. You certainly don't have to share that, on this stream if you don't want to. But you said medium-sized account. So when I hear medium-sized account, I'm typically thinking 40 to 60 is my guess. That's just what I'm guessing. And so if you're in that range or thereabouts, then yeah, you've got plenty of capital to start doing some things with MES, whether it be the outright future or the options market. They're both there for you. So hopefully that helps you a little bit there, Dexter. Great question, my friend. And so let's go back to the beginning though. My nose always itches so much whenever I'm on the show. It's really, it's a very interesting phenomenon. But let's see. Org Denu's in the house. What's going on there, Org Denu? Hello, Dr. Jim. thank you for doing what you do. You are the reason why we are all here, man. I don't know about that. But I appreciate you, Org Daniel. Thank you so much, my friend. I owe you that email. I will certainly get back to you. And yeah, just thanks for being here and being a part of the core position, man. I think you're out in Italy, right? You're out in Europe, if I'm not mistaken. And so that's amazing. Like, that's so cool. And thank you so much. And we appreciate you so much. Danish Dynamite, Crash Boom Bang, Amazon to the upside. That's what I'm saying. Like, you and me, my friend, we are joined at the hip. Didn't you take me down, though, on Google? I think you took me down on Google or AMD or maybe both. And so I'm not so sure I want to be joined at the hip with you. Like, I'm not so sure I want to be down in the foxhole with you. Maybe I would much prefer Jeremy Renner. Right? I mean, he made it through the whole Hurt Locker, and it got a little dicey there a couple of times. And so I don't know, man. We'll have to kind of maybe revisit this little syncing up deal that we've got going on here, Danish Dynamite. But I appreciate you. I appreciate you nonetheless. N1C in the house. What's going on there, N1C? I appreciate you, my friend. Let's see. Argent Purse says the XRP army. Did y'all fall on XRP? Is that that's crypto stuff, right? XRP down to 13. Yikes. Look at that. Guys, I'm no technician, which is very obvious. But when I look at that chart, yowzers. Even I know that does not look good. Like, you can call this pattern whatever you want to call this pattern. This could be a downtrend. This could be an abandoned baby. Like, this could be a shooting star or a falling star. When I look at this pattern, all I see is this. That's all I see. I mean, you could even do it right up here. It's actually more like this. I mean, that is not good, man. That is a not good situation if I've ever seen one. So I don't know. I haven't traded XRP in quite some time, but I don't typically go out of my way to get involved with stocks down 20% per se. I mean, maybe I do. Maybe I do more than I'm letting on because, Oracle might ring a bell. Hey, Chipotle might ring a bell. So yeah, just disregard everything I just said the last couple of minutes because none of it's true. But yeah, XRP haven't messed with XRP in quite some time, if ever, actually. Let's see. Rodrigo's in the house. What's going on there, Rodrigo? Appreciate you, my friend. Calling this the best show, man. I appreciate you so much. Make sure you email Beth and tell her that, because Beth. Well, I think is Beth my boss? It could be the bat. Now that's a scary thought. Is that not a scary thought? When you have to sit down for your annual review with the bat himself, like he calls you in like a scene out of The Godfather, man. Like he's sitting way back there. And he's got like that Nick Saban button where he just presses the button and like the door opens and then he presses it again and the door closes behind you and he just kind of waves you in. You got the terrazzo floors, you got the, prosciutto, on the old, charcuterie plates. And it's a very intimidating type of environment. But anyway, make sure you email Beth. Email Beth and let them know that. Thank you there, Rodrigo. I appreciate you. JT says the comments start blowing up when the dot comes on. Yes, because I open up the chat window. I know that the chat window is not open for futures power. I don't think. Maybe that's different now. I'm not sure if Chris turned it on or not. But yeah, I appreciate you guys for blowing up that chat because you guys know that for the love of the algo, that's the reason that we're all here. Or Daniel, it's not just me. It's not even just you. It's for the love of the algo, my friend. And so thank you very much. The Preston, Dr. Jim, you're the man. What are your thoughts on XLP? Appreciate you, man. Appreciate you. Appreciate me. Look at gold down 107. Yikes. XLP? Yeah, sure. We'll give it a look. XLP down 8 cents. We've got, I was looking at a 1 hour chart for XRP. Oh, that's funny. I thought it was a daily chart. I had no idea. But if I go into a daily deal, yeah, I mean, this thing's obviously, you said XLP, right? Yeah, XLP. Consumer staples. I don't know that, the IV rank is looking nice at 50. And it's also an $87 stock. So if you go to the trade page and you go to March, the premiums, the premiums are actually pretty bad. I thought they would be much better than this because the IV rank is decent, right? Now, the implied volatility itself is not that high. And so remember, like when it comes to option pricing, it's not the IVR that gets fed into the model. It's the IV itself. So like that IVX, that IV index. The IV itself gets fed into the model to determine the option pricing across the entire chain. And so the IVR shows us opportunity for volatility mean reversion, but it doesn't really tell us anything about the actual premiums themselves. And so in a perfect world, we want high IVR and high IV because there's a lot of juice in the options. It's going to help with break-even points. It's going to give us more room, to work with, and we can manage more, more easily and things of that nature. But here, man, like I'm just looking at this. Expected move strangle. you'd sell an 83 put and then maybe a 91 call? I mean, first of all, the spreads are not that great. I mean, look at that, 9 cents on the put side, 15 cents on the call side. And if I sell this, like if I sell the 83 put, hold on, let me delete all that. If I sell the 83 put and the 91 call, I'm only getting $1.38. I'm only getting $1.38 and I'm putting up $1,300 worth of capital. That's not really a lot of credit. You know, it doesn't really make a ton of sense to me from a capital allocation standpoint, especially when we're in an environment where volatility is high. It's not like it's slim pickings. It's not like I'm like, man, I got to search. I got to really kind of seek out an opportunity to sell high volatility. Like, no, like it's everywhere right now. You can do whatever you want, anywhere you want to do it. Like you can do it in MES, you can do it in AMGN, you can do it wherever you want to do it. And so for XLP, I would probably pass just because the premiums are not there. And so those are my thoughts. So let's delete that. And then, yeah. Oh, I got to put it on that MES trade. I was like, yeah, we never did an MES trade. So, all right, so let's go in here. This is going to be real quick. I'm just going to sell, I'm going to sell the 6,600 put. Let's just keep it super, super simple here. I'll sell this guy for like 90. Let's get something on with volatility so high. You know, today is the day to do it, obviously, with the VIX climbing. All right, so we're not getting filled. That's a little bit of a bummer. 89.50. Let's try 89.25. No 89. Okay, so there's the 89.25. All right, so the liquidity in MES, it's pretty good. It's usually better than what we just saw, actually. But every once in a while, you know, they're still gonna get you. And so, all right, hopefully that helps you though. There with the Preston. Let's see. Oh, N1C says Amazon. I class Amazon as a decent company. I don't disagree. I don't disagree with you at all. Origin Purse says he's more of a Tim guy because he's a bear, and so you're in good company there with Tim Knight, who follows me, by the way. And so you only have to wait another 7, 8, 9 minutes, and you guys will get to enjoy Tim Knight and trading the charts. Sam L in the house. What's going on there, Sam L? Classic Doc with a snap trade. Educational and emotionally damaging. Yes, it's educationally damaging and emotionally damaging. Like there was a lot of damage across the board, essentially. And so, yes, the snap trade. Man, that's really something. And you know what's a second stick in the mud? Like there's several sticks in the mud now. There's nothing we can do. There's nothing we can do. We can't sell premium against this. I'm not going to go in here and sell calls against my shares on a $5 stock with no premium in the options. That doesn't make any sense. Like I want to keep the unfiltered and unlimited upside potential in the stock. Now, of course, theoretically, it's unlimited. Snapchat at $5, it has a ceiling of about 6.5. Like we all know that, but still, it doesn't make sense to go in and sell calls at a 7 or 6.5 strike. I'm going to pick up, 30 cents, 50 cents. It doesn't really make a ton of sense, pun intended. Now, the corollary to that, though, to play devil's advocate to the devil's advocate at this point, it's only a $5 stock. And so if we sell premium, like if I go in here and I go to March, and I sell like a 6 call for 18 cents, right? I'm not going to do that because it doesn't make a lot of sense to me. But still, you also have to, you have to parse these things through the appropriate filter. And it's kind of like, 18 cents on a $5 stock is not that bad. Like that's actually reasonable because it's only a $5 stock. But if I was looking at Apple or Amazon or, Snowflake or what have you, then that obviously doesn't make any sense at all. I'm not going to do something like that. But this is just a low basis stock. You have to ratchet everything down. You have to ratchet down the expectations for the premium collection, pretty much across the board. Again, I want to keep the clean upside potential. So I'm not going to do anything here. But, there's a few minutes of just kind of thinking through, strike selection, premium collection, and things like that. So hopefully that helps a little bit. iPod Touch in the house. What's going on? Dr. Jimmy, we did it, man. Did we do it? I don't know. NASDAQ down 245 now. iPod Touch called it, guys. He nailed it. He 100% nailed this down move. Now, he's been saying it every day for the last 3.5 years, but he nailed it, man. He won. No, I'm kidding. He actually, iPod Touch, man, he told us about the event horizon, and I think he was only early by maybe a week or two. Like, I think you were pretty close. Like, and that's impressive, right? Because I'll make a call and it'll finally come home to roost 15 months later, and I'm chalking that up as a W, man. Like, that is a win in my books and for all accounts and records. And so for you, kind of being there only a week or two before, that's pretty good, man. That's pretty good indeed. Wolf Wolf is in the house. What's going on there, Wolf Wolf? Appreciate you, my friend. Ash Fan, Dr. Jim, let's go. What's going on there, Ash Fan? Appreciate you, my friend. Thank you so much for being here. JT says, nice to see that TK has fans. It seems like everyone is always hating on TK. TK is great, man. Tim Knight is solid, man. Like, he is very, very good at his craft. And so I really appreciate Tim and all the things that he does. And so Sam L, iPod Touch is on fire. 3 red days in a row. Respect. That's right. That's 100% right. But now we need to know, iPod Touch, what happens now, right? Are we finding a bottom? Like, is there more downside? Like, we need to know, and you're the guy for the job. Like, you're the guy that has to do it because we cannot do it alone. And so, yeah, Michael Anthony in the house. What's going on there, Michael Anthony? On Tiger, that city upgrade to 1750, 31,000 clients open an account that raised the outlook since all these new members can trade any assets is why the company did an upgrade back in May. Tiger, TIGR. It's up to $7. Oh, $7 stock. Okay, so you're saying the analyst upgrade is to 17. Okay. I don't typically trade too many. I mean, I just put on a Snapchat position, so you probably shouldn't believe anything I have to say. But I don't typically trade too many, like, under $10 stocks. I mean, I will from time to time, but I'll probably pass on TIGR there, Michael. But thanks for the update. Thanks for the info. And, there's plenty of people. Well, I got 500 people watching. And so, yeah, maybe somebody will hop on that. iPod Touch, still in a 3% drawdown. This is still a flesh wound. I don't disagree. I don't disagree at all. But if you get on the internet, right? I mean, you don't even have to get on the internet anymore. Have your AI agent get on the internet for you and report back to you when y'all have lunch the following day. Well, when your agent says to you, like, listen, it's not good, like, this is the end, that's the feeling in the whole internet. Not only because the AI agents are here themselves, but because the NASDAQ is 7% off of all-time highs, right? I mean, this is the definition of not good, guys. That's all I can say. Origin Per, not many like the Debbie Downer. That's true. I agree with that. Stan Lucian, best intro in the biz. Man, I appreciate you so much. The intro was cut short today. Yeah, maybe so. I kind of wanted to get to the Lamentations. I kind of wanted to get right into it. I know there's a whole book of Lamentations that we can all consult whenever we feel the need to, which we should be consulting on a regular basis. I wanted to get into the, the real-time Lamentations in the account as quickly as I could. So we did some AMD, we did some Google, right? We got to throw one out there for the P&L Open Bros. I mean, they've got a lot to work with now. I mean, look at AMD, right? I mean, look at that. You got that guy right there. That's not too great. I mean, look at Google. You got that guy right there. I mean, things are really heating up. Right? Like, we're back in business, baby. Like, look at all these P&L opens. Man, they're going to come for me. And that means they're coming for you too, because we are in this together. And so, yeah, but again, I'll say it again for the 19th time in the last couple of months, P&L opens don't mean anything. They don't mean anything, right? They literally are totally irrelevant. Now, you may think, nah, Jim, that's pretty relevant, what's happening in AMD. And that's a fair point in this context. But generally speaking, if you zoom out, they don't mean anything. Because I'm taking off my winners early. When you're rolling positions, sometimes they don't even accurately reflect, what's going on in the trade and what have you. Although if you group by the order change, it should be a pretty accurate reflection. But still, taking off all the winners quickly, we would need to get some Starbucks leaps back in the mix to kind of battle against these P&L opens. And I don't think I'm going to do that anytime soon. But, I see Arjun Purse's P&L Open Bros cracking a natty light. No, they're cracking some banana natties today. I can assure you of that. Because that is the drink that encapsulates the P&L Open Bro the best. I can assure you it's banana natties all around. And so let's see, Finn West is here. I see Dexter got back to the surprise and delight. Darren Munson, man, I appreciate you so much. Ramsey is here. Rodrigo's back. Man, I'm just scrolling the comments because I got to go. Brian Dowdy. Man, look at you guys. Alex is here. Man, Mr. Pillow showed up. Flower Power's here. Man, I appreciate you guys so much. I got to run, though. Guys, I appreciate you. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Golf putt, normal distribution, reduced speed, increased standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Hi, we're going to try to do a 15-minute show today. Sorry about yesterday. For those of you who missed it, well, you missed it. It's gone forever. It'll be the lost episode. Only those who saw it live got to enjoy it. And I was on fire too. I was having a ball. But things are calmer now. Hopefully, we'll make it to the very end. The markets are very red today. And as I've said, there are days which I hope we don't have for a long, long time, where I would have to say, blah, 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 lifetime highs, da-da-da, lifetime highs, da-da-da, lifetime highs. It got tiresome. And I basically just refrained from that and just said, just accept the fact of these lifetime highs. I'm going to pull the same thing with I told you so's, because I ain't going to do that over and over. But I'm telling you, I'll tell you once, the kinds of stuff I've been talking about, like crypto's demise, like crypto dragging equities down, like the AI bubble bursting, is all happening, which is a good feeling. Because, and this speaks to the culture we live in today, because back in the day, when you go to a movie, especially like in the 80s and 90s, a really formulaic type movie, part of the experience, an important part of the experience, is that the crowd sort of has its own collective emotional zeitgeist. You get to experience the movie together, and you get to gasp or laugh or be tense and so forth. And of course, in any good drama, there's going to be like bad guys and good guys, and collectively, we want to see the bad guy lose in the end, which eventually he does. But of course, in the three-act structure, this can be, especially near the end, it seems like the bad guy will win the day. But most movies, there's some twist so that things work out, and you leave the movie feeling good. And you get to experience it as an audience. And as a culture, I think we've sort of lost that now, because, there are bad guys out there that we don't seem to have a common opinion about. And it would be like being in a theater, and half the theater cheers and laughs when the bad guys are winning and killing people, and the other half is puzzled why that's going on. So it's like, it's confusing, because like, well, what happened here? Why am I different from these other people? It doesn't feel unified anymore. And I think that's going on politically. I think it's going on financially. Because my shtick has been, anti-crypto and anti-bubble. And there aren't many like me, probably two. And that to me, that's the bad guys there. Because, what do I value? I value logic. I value reason. I value honesty. Take Howard Lutnick and Pete Hegseth and Carolyn Levitt and blend them all together and invert it. That's your chartist. That's me. So you should know who you're dealing with here. And it's heartening to see on that big financial movie screen we're watching, the bad guys start to lose, because they are bad guys. And as I was saying yesterday, as the voice of reason in a world gone mad, I'm out there bashing crypto, and boy, they're nasty. These crypto creeps, they are mean, mean, mean. It's like being in an eighth grade locker room again. They're just nasty people. And they've gotten kind of quiet lately because things aren't going well, as I suspected they wouldn't with Bitcoin, with Ethereum, and with all the attendant equities that I've been talking about for all these many months. They've gotten a little on the quiet side, which is a nice change. Charts work, and I depend on charts to make my decisions. I talk about charts on this show. I try to predict the future based on charts and a little boola boss of like cultural notions and societal movements and just kind of history that we're all living through. And it's been working really well lately. Sometimes it works, sometimes it doesn't. I try to make it work more often than not, but sometimes the world has its own ideas for a little while. But eventually, the arc of history is long, but it bends toward technical analysis results. So it eventually works out to my way of thinking. So that's kind of a preface, I suppose. But I'll also say this, back to the whole honesty thing. The reason I get so flustered about, and I'm not dressing up anymore for you, by the way. You guys used to send me bourbon and thank you cards and nice email. I don't hear from you at all. So why should I put on a pretty shirt? I'm just going to wear what I'm wearing. Don't think I'm a sports guy. This is just, it's a bit of loyalty, but yeah, I'm slumming it today. You get casual Tim until I start getting bottles of bourbon again. So why does it bother me so much when like the Tom Lees and Michael Saylors of the world talk about, $1 million Bitcoin, $5 million Bitcoin, $10 million Bitcoin? Well, it's just, you can say whatever you want, but it's just odd to me that they still get airtime and people still listen to them. I try to do a good job on this little show for the 2 or 3 of you that watch me. And if day after day, week after week, month after month, I talked about, let's say the Dow's going to 10,000 in a month. And I just kept saying it. And I would, have affectatious voice, and I would play with my hair and all the rest. After a while you think, what a weirdo. And what's with the hair? And he's always wrong. What's the deal? Eventually, hopefully, they would just get me off this network because it's a ridiculous waste of your time, right? And yet, they still persist until lately. Because when things are just embarrassingly wrong, they will finally STF you, at long last for the moment. And interestingly, Strategy's earnings call is after the close today. That should be a hoot. But anyway, we're going to look at some charts together because the kinds of things I've been talking about are happening, and it's very exciting. And, there's going to be a bounce here and there, and, Trump will come out and try to reverse things with, as I've said, eventually like banning short selling and jailing bears and God knows what else. Maybe ICE will show up at my doorstep. But for now, I'm still here, still fighting the good fight. And let's look at some charts, right? So we're going to start off with Bitcoin. Now, Bitcoin, in this administration, he's a crypto president and so forth. I've done more for crypto than anybody else. Okay, thanks. Maybe they want you to stop doing so much because it's getting just plastered. I mean, is it down? I think it's down it's lost half its value. Half of its value. And like I said, the crypto lunatics out there still at it. But the $5 million and $10 million predictions, I really need 5 hours today, honestly. I mean, they actually are still out there saying, I just saw a tweet from a really, really well-read guy who said, $10 million is on sale for $70,000 now. He was referring to Bitcoin. The tweet's a few minutes old, as you can tell from the price, but that's insane. The idea that it's worth $1 million and it's only 70,000, you'd be a fool not to buy it. Okay, you first, But I had, I was right. Because when we were around here, I said it'll get to 98, and it got to 98. And then I said, it's going to lose $10,000 within a month. And it did so in 6 days. And now just, all holy hell is breaking loose. Like I said, I guess it'll bounce at some point. maybe we'll have ICE soldiers threatening that they'll shoot us if we don't buy Bitcoin or something. I don't know. We could get up to 81,000 again. Absolutely could happen. But I think it's in trouble. I definitely think it's in trouble. And this has happened before, as the crypto crowd will tell you endlessly. There have been major bear markets in Bitcoin before, and they've always come back. I'm not so sure this is going to be coming back to new highs. It could certainly get back up to 81,000 very easily, very easily. But this is a very big top, and I think it's in dreadful trouble. Ethereum is down almost 16% today alone. It's also had a huge break. And Tom Lee is being awfully quiet these days too. And the kinds of equities that I've been talking about related to crypto that are at the mercy of crypto have obviously been falling hard too. DeFi development, DFTV, that right triangle pattern I showed you. Look at that. Is that magnificent? Is that gorgeous? This is technical analysis at work. This is charting at work. Eric Trump had his American Bitcoin. Let's see how that's. Now this is full of old data because this was a SPAC, I guess. This is when Brainiac got involved. So American Bitcoin came out with American Energy. They're down in Texas, and you can see how well they're doing. So that's just a wipeout. The ironically named Bullish, which I have castigated from time to time, is also plunging. And the stable coin provider Circle Internet lifetime low. Lifetime lows all over the place. Lord, have mercy. Don't pull my power again and stop barking. Dreadfully sorry. Terribly sorry. But I love my dogs deeply, so they outrank you. Speaking of Tom Lee, Bitcoin, good heavens. I've got at least 2 people watching me now. All right, this is BitMine Immersion. And this company is Tom Lee's organization, or he's closely affiliated with it. I don't know if he's the CEO or a big investor or just a spokesmodel, but lifetime low for this one too. The point is the crypto hustle is really doing poorly. And what have I declared them? I declare them as gambling tokens. I still think that's a very accurate description. They are extremely useful as a gambling token. There's a wide variety of them. They're very easy to trade. They're very chart friendly. I'm a chartist. I love charts. I love analyzing charts. Crypto does great with charts. It's a much more organic market. I'm singing crypto's praises right now. It's a much more organic market than equities. And so God bless. I think crypto is going to be here for a long, long time. But I think just the arrogance of the supporters, added to which, the just shameless fraud and hucksterism will be fading for a while. Speaking of Michael Saylor, this is MSTR, Strategy Inc., plunging again. It's lost about 80% of its value from, I think, December 2024. And naturally, back in those times, because Trump wouldn't shut up about it, and brought in David Sachs and had his, all the apostles of crypto and so forth, and pardoned CZ, gave a presidential pardon to CZ for his, released him from prison and so forth, or relieved him of that obligation. People naturally thought, this is our guy. Crypto is going to do amazing because we have all this support from DC. Well, there you go. How's that worked out for you? Okay, enough of crypto. Alphabet reported yesterday. It's pretty much unchanged right now. And I forgot when the plug got pulled on my show, but I think I did get a chance to mention that it's like a utility company. It's boring, it's dull, it doesn't really do, I wasn't expecting anything. Well, got that one too, huh? It's barely moved, even with the NASDAQ plunging. So Google's very, very reliable. It's just kind of sitting there. I think it's going to get weaker tomorrow, I'm guessing, but yeah, it's just kind of hanging out. FNGS, the fangs, as God intended, plunging away from this beautiful topping pattern. FNGD, which I had an enormous position on, absolutely huge, and I dumped for like $100 profit instead of the tens of thousands I wanted. Yeah, that's doing great too. So shame on me. I'm so ashamed of that. that was the right call. Dreadful execution. Not even dreadful execution. It was just fear, I guess. But it's a beautiful chart, and it's doing wonderfully. The diamonds have been kind of hanging out near lifetime highs for weeks now, but it's starting to crack a little bit. Look at that. Look at that. We're starting to get some cooperation there too. So that's encouraging. Volatility, strangely, is not going too crazy. The VIX, the futures, the VIX itself, UVIX, all being relatively calm, even though UVIX is up. I did take some profits early today on a few positions that had just gotten mauled so badly I decided enough was enough. For example, ARM, CoreWeave. These were great trades, great profits, but I'm trying to not be too crazy. CoStar Group, GitLab, GTLB. It's still falling, so that wasn't too great. But I tried to take the most plungy of them off the table. But they're still plunging, so that probably was a mistake too, just like FNGD. But I did trim in some of those respects. By and large, I'm holding. I've got 35 short positions. Meta, I'm hanging on to. AMD, which reported a couple of days ago, still doing very nicely there, falling another 4.5%. Looking to hold it till we can close that gap. Remember Palantir? They had a phenomenal blowout Tuesday, and I shorted them up here. I covered on Monday, and I told you Tuesday it blasted higher. I re-shorted it, and as you can see, bang, down it goes, and that's a beautiful, beautiful pattern right there. Absolutely dynamite. Salesforce CRM maintaining shorts on this, so you get the idea. I'm short as Hervé Village. Let's see. I only have a few moments left. I'm going to skip the precious metals, even though they're bananas today too, and just go straight to Amazon. This is our last big earnings event of the quarter. And I have no position, but it does look, whereas with Google, I was like, it's probably not going to do anything. I think this could sink hard. It might. The reason I say that is because we have broken our Liberation Day trend line, and I think the market's disposition's pretty merciless right now. And unless they just knock everybody's socks off, I think people will be sour on it. So again, no position. And if we do rally, keep an eye on that gap between yesterday and today, which corresponds with a trend line break, because that would be an interesting place to short as well. Okay, I'm glad we made it to the end of the show. Oh, by the way, I'm gone. I'm not here tomorrow. It's not because I've lost power again. I'm traveling, but tomorrow should be interesting. It's kind of a shame I won't be here, but I'll see you again on Monday. So, see you later. Bye-bye.
We wanted to call in because recently, as some traders may have known, there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was awesome. Not a paid, you're not getting paid for this advertisement.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe $100 loss, $50 loss, A green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with Tasty Trade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
My friend, we are back for the last call, and boy, this has been what has felt like a bloodbath, but the market as a whole is basically back to prices we saw just a couple weeks ago. You got E-mini S&P 500 futures down 89. They're basically at the lows of the session here. 68.17, 6,800 was the low, the exact low earlier this morning. You've got the NASDAQ down 370. About 1.5%. The Dow down 592 and the Russell down 51. It's about a 1 to 2% move across the board. The Russell, the weakest of the group. You've got oil selling off a bit. /CL 63.38 down $1.76. About 2% move there. Big move in oil. Volatility futures picking up here as we get into the close. /VX 2080 up $1.56. About an 8% move in volatility. The VIX itself at 21.55, big move in volatility. Bonds up a full point here. Another huge move there after kind of languishing in the 114 handle. We're at 115.17. Gold and silver both had a wild ride today. Gold 48.41 down $108, about 2%. Silver down at 73.45, down almost 13%, $10.90. Massive move there. And then, of course, the biggest, most violent move I think we've seen in Bitcoin since the FTX days, down to 63,000, down 9,700 on the futures, spot down 7,000 and change. We're at 63,000 on Bitcoin. ETH at 1,800, down 200 and change here, about 11% move today. It's been an absolute bloodbath. I mean, even if you look at like the S&P 500, I know there are some stocks that are up today, but tons of, like your Coinbase, your SMCI, Robinhood down $7 and change. CrowdStrike taken out to the woodshed here. Qualcomm after earnings. Datadog, ServiceNow, Palantir. I mean, some of these tech stocks are down 30, 40, 50% in a couple sessions. It's been an absolute wild move with the E-minis basically nowhere. I mean, we've been between 68 and 7,000.
Yeah, it's a very concentrated sell-off here. Microsoft just dropped below 400. It's unbelievable. 20 points, which is nuts. Haven't seen this level since April of last year. Like you said,
which was the tariff tantrum.
Yeah.
I mean, that's a big move.
It's huge.
To be back there. I mean, that felt like the world was ending.
Yeah. Speaking of ending, to your Bitcoin point, MicroStrategy has earnings after the close today. I mean, they don't typically like say anything that relates to their company at all. Like, it doesn't really matter because the investment in this is basically a Bitcoin proxy or volatility proxy. But it'll be very interesting to see how the market reacts, if at all, to the earnings announcement. Like, if it's more downside move, you could see a sub 100 MicroStrategy. It was at 500 a year ago. Crazy.
Yeah, I'm not even thinking about MicroStrategy right now. I've got enough IBIT to give everybody a nice little Christmas present if they'd like some IBIT. I can share some of that around the office here, but yeah, that's been an absolutely violent move. I mean, the Microsoft move, obviously getting caught in that kind of service, kind of sector type sell-off. It has been super violent. I just did another call diagonal spread there. I'm loaded up long here. I hope we get a bounce at some point, but it's been, besides really Apple, which is basically unchanged today. It's had a nice little bounce off the lows since earnings. Apple has been super strong. Google also reversed pretty much all of its move from this morning. It's back to where it was at like 3:30-ish for the earnings yesterday. Those two have been the only thing, it seems, keeping up the market. Meta, I guess, is another one that, it's up $3 and change right now. It was a little bit higher. It opened lower, bounced a little bit. Tech has been myrtleized.
Yeah, it's been crazy. Google had a nice earnings trade yesterday with the double calendar. And I did the same thing for Amazon today after the close.
Amazon, another big one that has earnings today, down $10 at 222.
Yeah, I really like the way this trade sets up though, because I did the exact same thing. I bought the Feb 210-240 put and call, and then I sold the 1 day 210-240 put and call. But the raw value of the long options out in Feb is $1,000. I was able to collect $700 for the 1 day premium. So you reduce these long options that have 2 weeks to go by 70% in terms of cost basis. And the lower your cost basis is on those long options, the wider your profit range is after earnings, because you just need those long options to exceed the debit value that you were filled at. So for me, it's $300. There's a huge range where Amazon can move anywhere from 210 to 240 or even beyond that, and it'll still be a profitable trade as long as there's not a massive vol crush in Feb. But given the weakness in the market and given the increased implied volatility across the board, I priced in a 20% vol crush in Feb from 65 down to 45, and it still looks like a very nice trade if we stay range bound. So just can't have like a 40% vol crush, which I don't see happening in this environment, or a massive move in either direction. So we'll see.
Yeah, Amazon has looked like a little sick puppy here. Hopefully it has a little bit of a bounce on earnings here. I am long. Some other names that have earnings after the close today. Iron, which is kind of it's been caught in the meme cycle. I don't know if many people are trading that. You have Reddit, Roblox, BE, which is Bloom Energy. I've got a strangle on and some upside butterflies as well. You have a firm in there. You have like gold, which is Barrick Gold. Gold.com now. I think it was formerly Barrick Gold. And then tomorrow you have a couple names, not as tradable, but like the SIBO reports. You've got Under Armour, if you still have that bag that you've held on to, that reports tomorrow. Philip Morris, Biogen. It's really all about Amazon after the close today, I think. It'll be interesting to see where that goes. I've been playing it and thinking that it's kind of in the Meta realm, not in the Google realm of like full valued. I feel like it's kind of one that, hasn't really participated in the whole AI narrative. It's had a nice move higher from the April lows, but once it got to like this kind of 220-ish range, really hasn't gone anywhere. That is my thesis for the upside. But my God, on a day like today where it's been sell every rally and sell everything, it doesn't feel good to lean long.
No. And same thing with Google. Like I think Google was a very telling tale where you have the expectation of 110 billion. They announced a huge number over that. Same with EPS. They were forecasted to the gills. Stock dropped.
Yeah.
So I just think to your point, we're in this environment where like for any of these stocks to really rip higher, they have to just destroy earnings. And Google did, and it's still down.
Yeah.
So yeah, that's why I really like the neutral trade here for Amazon, where you're really just taking advantage of the 1 day implied volatility and you're inventorying some delta, or I should say implied volatility in the Feb monthly, and at the same time reducing cost basis by 70%. feels like it could be a nice trade. As long as we stay range bound, nothing insane happens, it'll be good.
Yeah. I think the other thing kind of keeping us buoyed in this market is the semiconductor space. Semiconductors, SMH, has fallen off from highs, but is relatively stable today. You got a little bit of a bounce back in some of the memory stocks like MU, SanDisk was relatively strong. It's had some two-sided action today. TSM was up on the day. You got AVGO kind of bouncing on the Google CapEx spend news. It was significantly higher in the after hours yesterday and has been relatively strong today. But that's kind of been the sector that has been holding it all together. It feels like hasn't been a good feeling. The ick continues. I did scalp from the long side today in the NASDAQ, which ended up working out after taking a pretty decent amount of heat, but it's still not looking good. And I don't like that vol is expanding here into the close. I was hoping to see a 19 print on the vol futures to give me okay, maybe we can nibble on some long side here, but that ain't happening right now, at least not right this second.
Yeah, VIX futures, the G, the H, and the J, all in the 20. Actually, all of these are in the 21 handle almost now. Flattening out completely. We had a point of contango between all these contracts a week ago. So things can change quickly. Yeah. But we are now we're approaching fear territory, like real fear territory.
Yeah.
And yes, we've already seen a big sell-off, but this could be just the beginning if things continue to be bleak and these earnings reports continue to sell off regardless of what the number is. That is a recipe for a big sell-off in the broader market, considering the concentration of these tech names in the NASDAQ.
Yeah, and one of the ways you can view volatility, like the curve, is you can put all the volatility futures into a watch list like I have here. I have this through the end of the year. Once these further out contracts become active, they're not actively traded really, but once they become active, you'll have them automatically update here. But you could see along the curve, you're very, very flat here, right at about 21. That's typically what you see into this sort of move. You usually see volatility flatten out along the curve. When volatility is lower in the front, it usually kind of tells you that it's all clear. When volatility goes into backwardation, where it's the front is higher than the back, that's when, the stuff is hitting the fan. In that situation, I would expect Microsoft to be back at 400, not in a flat vol surface, which spooks me.
Yeah. Some people asking in the chat, fear from whom? This is not real fear. Wait until we have internet or housing drops. Yeah, I saw something interesting with the housing market. There's like the difference between buyers and sellers has been at an all-time high.
Yeah.
More people selling, nobody's buying. When we say fear, we're really just talking about the VIX futures. Because if we're going to crash 20%, the VIX futures will go into backwardation, and we're knocking on the door of that backwardation right now. Yeah. That's all we're saying. But yeah, definitely ominous in the markets today.
Do you think Apple saves us?
No.
No? Or Amazon.
I don't think so.
You think
I think it'll be a inside move.
Yeah. That's usually my sentiment on a day like today. I feel like the upside is capped.
Yeah. I think they'll post good numbers, but the market, the stock will just not go anywhere.
Yeah, it's kind of ominous too. We're going into the weekend. Fridays have, kind of been a little bit of a no-go zone. You got all the weekend risk. You could be invading Iran by this time Monday morning.
Crazy.
So who knows with that? Have you been trading anything else? We have super high implied volatility. First, are there any things that you've gotten into today that you find interesting? And secondly, have you found yourself going over to like an oil, a natty gas, a wheat, corn, soybeans? Do you have any positions there? Are you messing around in any of those?
I was laughing this morning because wheat, corn, and soybeans were the three that were up today, the futures.
Yes.
But yes, I have an iron condor in crude. after our session with Thomas, we basically talked about how we could expect to see some more range-bound trading in crude, and we have an iron condor in the J cycle, or the J contract, with the 58.68 short options, 1 point wide wings. That is trading for $500, right where we were filled at.
Mm-hmm.
And then this morning, we put on the Amazon double calendar from Options Trading Concepts Live. That was the 210, 240 long options in Feb with the same options short in the 1 day. I paid $3 exactly for that. So as long as we stay around the range of 210 to 240, we'll be good there. And then did throw on some trades in SPX since we were broadcasting from the SIBO floor today.
What'd you do there? Do a Super Bowl?
I did do a Super Bowl. I did a Super Bowl in the March cycle.
Which one? The monthly? Like
Yes.
in the 43 day?
Yeah, the 42 day.
You don't go to the AM ones.
I did go to the AM.
You did?
I did. For this one, I did. It was the 6,700, 6,690 short put spread.
6,700. So you're right at the money.
Yeah, now. Yeah. 6,700, 6,690. And then I bought the 6,950, 6,955 call spread for a 40-cent credit. It's trading for 60 cents now. And then I also followed Jamal into a near-term iron condor, which I really like. It's the 6,600, 7,000 in the 8-day. Those are the short options, 6,600, 7,000, and then 10-point wide wings. And the reason why I like that so much is because that range for 8 days covers all of my strikes that I have now. I have a 100-point wide butterfly with the center strike at 6,700, and then I have 2 Super Bowls on with risk at 6,690 and 6,840. So the iron condor encompasses all of my strikes. And if we can, I don't know if we have the ability to show my platform, but
I can pull it up for you if you.
Yeah.
You want to give me the which one? The SPX trade?
Yeah, I just have all my strikes, and you can see on my platform.
You might have the bat switch if you have it in the special zone. There you go.
Haha.
Yeah.
Yeah. So this is all
Look
my
at
trades.
you.
Yeah. So this risk graph is actually
This is the analysis mode, by the way. We use this all the time. When you have multiple positions on, it puts them all together for you, and you can kind of mess around with all the metrics from days till expiration, volatility. You can change the spot price. It's a really cool, dynamic kind of look at your positions.
Yeah. So you can see I've got a ton of positions here. I've got 2 Super Bowls, which is just a short put spread to finance a long call spread. I've got 2 of those. I've got a 100-point wide butterfly. I've got a 400-point wide iron condor in a different cycle, but this encompasses all of them. I pushed the evaluate at date on February 20th, which is 7 days prior to my expiration of my 100-point wide butterfly. So this is kind of my range. I'm literally right in the middle of my sweet spot with all of these positions, and if everything goes well, we'll be looking good here. But just layering on new positions to complement the existing positions, and that's it.
I followed you into a stupid as well, which is a short put spread to buy a call spread. I did it in the March 20th expiration. I sold the 64.50, 64.25, so I'm 25 points wide. And then I bought the 7,100, 71.25 call spread on the upside. I did it for a $2 debit, so small debit relative to the size of the position. So you're playing for a bounce, obviously, but you know you've got about 300 points ish to the downside. We're going down with the ship, Mikey.
Apparently,
E-mini's down 96 at the moment, near the lows of the session. You got the Nasdaq down 400 and change here. It does not look good.
10K Bitcoin.
Yeah, down
10K.
Down 10K, not at 10K.
Yeah.
Down 10K, huge move. I mean, this feels this feels reminiscent of the FTX move in terms of the velocity.
Yeah. I mean, this is crazy.
This is huge.
14% in 1 day, 15% in ETH.
Yeah.
It is.
I traded the
crazy
ETH micro contracts just now again. So I'm long 2 ETH.
Yeah,
No
I have
short.
I have a 20 short put in ETH A that is in the money now, and then I still have the IBIT position, but I've got 100 shares, and then the short call, which is now just we're sitting right at my break even from the overall trade from last year. So that just goes to show how crazy this sell off is. That I now have a $100 and $170 profit on this sell off, relative to $1,500 at the end of the year, which is where we closed at 50.
Yeah.
So
your put's probably basically stock.
Well, no, I got assigned. So I literally have 100 shares.
Oh, so you're long shares. Are you going to sell calls or no? Not yet.
Not into the sell-off, no. I've been waiting for a rally.
It's hard. I'm holding long shares too. I don't feel good.
Yeah, I've been waiting for a rally and it hasn't happened. We've gone straight down from 56 down to 35 in 1 month. It's an absolute bloodbath out there.
Yeah.
But this is why you have to trade small. Like you might have seen this coming maybe, but you wouldn't have been long shares if you did. But I'm long shares here, but I have 100 shares. I can hold this all the way to zero if that's where it goes.
You'll be okay.
So that's the key of trading small is you have the ability to withstand all of this variance.
Yeah. E-minis down 97 here. You got the Russell down 54. It's the weakest of the group. Volatility futures at 21 and change here. You got the VIX itself at 21.96. Definitely seeing some vol expansion here going into the last 5 minutes of the session. That doesn't make me feel great. I wish I had held my long vol futures, which I closed this morning. I don't have any other than the MET position and then my option positions in like CL, Natty Gas. I got some short delta and Natty Gas. I'm not going into tomorrow with any static directional delta. Do you have a feel for tomorrow at all?
Not really.
To sway me away from that? I stayed away from being short NASDAQ into Google earnings. I was actually short the Dow, which was outperforming yesterday, which ended up being decent. I don't know if I'm feeling the vibe today. You know?
No. We have a 75-point implied move for tomorrow, which is pretty big.
For the E-minis?
For SPX.
SPX, yeah. Okay.
Normally we do this and it's like 20 points and we're yawning. But tomorrow, plenty of volatility implied and I'm sure realized. I don't really have a lean. And I actually feel good about, like, we're taking heat on a lot of these positions, but my biggest heat is just like long stock positions, like SMR, IBIT, silver. So it is what it is here, but traded small, we can hold this all the way through this variance here. Someone in the YouTube chat asking about the micro e-mini year-long trade, the MES trade I've got on. There's nothing to manage here. I already rolled into March, and I'm at 66.50 with my short put. So I still have another 200 points of wiggle room to the downside. And I don't want to roll out to April yet because that will bring me out of the H contract into the J. And yes, it'll be a lot of time. So, or the M contract, sorry. Which means you have to adjust your strikes 50 points higher with the 50-point higher contract price in the M cycle. So I'm just staying where I'm at. But if you didn't roll yet and you're still in Feb, today is a perfect day to roll from Feb to March and adjust your strikes, or at the very least, just roll out to March to pick up this premium because you could collect probably $100 more than what I collected into this sell-off here. And that would mean like $300 and change.
I'm glad you referenced gold and silver. Silver volatility, we were looking at this morning, was about 92% in the March expiration. It's down to 88 here. You have an IV rank of 84. GLD as well into a sizable downside move. I mean, not as big as silver. Has seen volatility contract. You got an IV rank of 68. Definitely seeing some of that short delta, short vol play out here. If you were selling calls, you had today to take them off. It was a nice little move there. I had a couple of those come into play, which was nice.
Yeah, I had for 44 days. I've had this 65-55 put diagonal spread in SLV, and I was laughing a couple of weeks ago because it was 50 points out of the money, and now it's almost in the money. that just goes to show, like,
yes,
the volatility to the downside has been crazy. And that's the nice thing about debit trades is if they're losers, you can just hold them and see what happens. And this is a crazy move that's bringing some value back to that trade at least.
Yeah, and volatility is still very, very high there. I know it's come in a little bit, but it's still very, very high. Even if you look at like the option chain here, you know, like we were trading at, let's say, just under 80 yesterday. The 80 straddle, I guess not as much, but like even like the 75 strike, you know, you're seeing these puts only increase, you know, a couple dollars, and these calls, these out of the money calls, basically going to zero.
Yeah.
And that's just, you know, that vol coming in a little bit.
Yeah. When we place this strangle, I have an 87 150 strangle in SLV, but it started with the 210 short call that was trading for like $2.
Yeah.
The very next day, I got like 75% out of it. I rolled it down to the 150. Now the 150 that I rolled into for $2 net value or raw value is now trading for 30 cents. So I'm sitting on an 87 150 strangle with $1,000 in credit, and you could roll down
to like the 90 strike.
Yeah, you could roll it down further and pick up another $1 or $2, but you'll also, if you get a reversal of any kind of like $5-6 rally to the upside,
you probably get vol.
You get a big spike to the upside. So I'll wait and see what happens there. But yeah, the vol is coming out of silver in a big way.
As we go into the close here, I don't think we're limping, but we've been limping pretty much all session. E-minis down 88. They bounce about 10 points here. The NASDAQ down 352. You got the Dow down 600 and the Russell down 46. Oil down $1.87. Volatility futures at 20.85, down $1.56. Bonds up a full point. Gold and silver both down. Gold's down 116. Silver down $11. Bitcoin languishing at 73,000. Amazon, I believe, comes out right at the bell. So as we get into our next segment with the overtime boys, they'll definitely be looking at that and looking at the rest of the futures. And I'm sure my man Ilya is going to be excited about this. Real quick, we got the refer a friend here as we go into the bell. Send this to your friend. Get a couple dollars cash from us for you and your friend. So send that over to friends and family. Please help support the show. Mikey, that was a crazy day. Hopefully we get a little bit of a bounce tomorrow. That's what I need. I think you need it. Everybody needs it a little bit after this move. We're going to take a quick little 90-second break, come back with more Tasty Live. You got the overtime boys coming up next. You're listening to Tasty Live. We'll see you tomorrow.
See ya.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back.
Okay, you want to go big?
Let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 million.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
The software sell-off continues. AI names getting punched in the face. It's a bad day for the NASDAQ. We're here on Thursday, February 5th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, here to take you through the next 25 minutes or so as we wind down the trading day. Ilya, it was a pretty bad trading day, perhaps for a reason that we haven't needed to discuss in some time, although perhaps it's a maturation of fears you raised attention to last week. Fed rate cut odds are going up for a wrong reason. Job openings in the U.S. crater last month. Jobless claims on a weekly basis jump surprisingly. All of a sudden, we see Fed cut odds for the year end here up about 7 basis points now from where we were yesterday, which not for nothing is a little bit more than a quarter of one rate cut now being added to the table through the end of this year. So from 7% to 23% and change, those June cut odds go. And stock market's not having it today because we already have enough problems to deal with. We don't need to reiterate them right now, but we have new economic concerns to deal with, Ilya, because rate cuts for bad reasons. That is, of course, the prism with which the Fed gave us the lens to view this market last week when they told us, don't expect anything anytime soon. We all were of the opinion here, you and me, folks around the office, I think consensus in broad financial markets that if the Fed is cutting rates before June, it could not be for a good reason whatsoever. So bonds have a nice day. Stocks have a really tough day. Bonds have a nice day. Metals have a crazy session. We'll talk about the Chinese futures traders that are making news. We do have Amazon here out after hours. I believe my producer Josh said that we had them coming out already. If you're looking at your chart, that's a $22.69 close. They missed on their EPS at 195 versus 197 expected. Likewise, we see their revs at 213.39 at 211, so a little bit of a beat there. Their operating income is up too, but that's a miss. 200 here after hours, so another quick 10%. Stocks taking a new leg lower here. S&P testing 6,800. The low from January looking like it's getting testy here and potentially breaking. And the NASDAQ, Ilya, finding close to fresh lows as the session goes on. So Google couldn't save the market yesterday. Amazon couldn't either today. And now we have a fresh batch of, is the Fed running late? Worries. Mind you, the Fed doesn't meet in the month of February. So strap in.
I mean, there's a number of interesting things here. It's tough to say the U.S. economy is in bad shape, and and it's more likely, and the Fed has been talking about this at length, that the labor market isn't the economy. That what's going on in the labor market is soggier than sort of overall mint money capacity, if you will. So the economy is growing. It's just it's not really making its way into jobs growth. Actual output is growing. We just saw these ISM numbers earlier this week, and they were very strong indeed. So the issue here seems to be that there's a rejiggling of the labor market, and the Fed's talked about this, how it's not so much that people are firing, it's that they're not hiring.
Yes.
And that's really the issue. The collapse in job openings doesn't say anything about people losing their jobs. It's just
and
not.
ADP showed that yesterday, right? We had 22,000 against a 48 expectation. It's a low hiring, a low firing market. But really, all of a sudden, looking like rate cuts for, hey, we maybe need to be entertaining rate cuts. And no, it's not going to be for the reasons that the markets really do want and care about. The Russell is
Right.
your worst performer today, which is a little bit of a change of pace because the Russell has not been the one that's been leading to the downside. In fact, it's been leading to the upside throughout all of this, and it's been holding its head above water far better than the NASDAQ, far better than the S&P 500, still well clear of the lows that it established in January, whereas the S&P and the NASDAQ are breaking those. You would argue that momentum to the downside in the domestic economy, which was not looking like it was the case 48 hours ago. Transports, logistics were the best performing sector subclass this week going into yesterday's open. We may have a bit of a problem here, and we're working our way now through the first part of February, which is supposed to be the bullish part of the month. Time's running down on that. Volatility is already expanding. The VVIX has jumped up above 110. Second half of February.
5-week high on jobless on initial
Not
jobless
great.
claims average. So at least that part is telling you you're losing some jobs. To your point, the trend is still down in initial jobless claims if you look at the 4-week average, but this was a meaningful increase. And I think tomorrow we're going to get a really interesting indicator in this whole thing because, to your point, the Fed calculus has moved around, and now we're still getting the first cut this year in June. That hasn't changed, but the second cut is now better than even odds for September. That's the earliest we'd seen it. It had jumped around between October, November, December. We're in September now. So the markets are clearly today seeing a sense of urgency. So there is something to be said for this. Now, U.S. economic data still has tended to outperform recently relative to expectations, looking at the City Surprise Index, and relatively healthily so. Of course, the ISM numbers tell that story. But that's overall growth still, and not the labor market. So what the reaction function here might be could get surmised in tomorrow's release of the University of Michigan Consumer Confidence data. Because without consumption, there is no growth, and without jobs, there is no consumption. So this is a thing that could be a mirage, this U.S. economic strength, and maybe the markets are waking up to the idea that the bond markets and rate markets certainly have been screaming about for some time. The big conundrum was, why do they want 2 cuts this year when the economy looked fine? Well, maybe they're looking further ahead, and maybe the data is catching up.
Yeah, Fox Business had a poll that came out today. 72% of Americans say that the economy is in fair or poor condition, and more of that K-shaped economic theme. You could Amazon here. Why are we potentially seeing this weakness? The revenues were, in line with the consensus forecast. Their operating income was above guidance for Q1. The problem is that another big CapEx surprise here, guiding for $200 billion in 2026 versus consensus forecast of 146. I'm surprised the market didn't sniff that out ahead of time after Google's earnings yesterday, which, when the dust settles, we find ourselves looking at a market that is kind of in the same spot. It's only 0.44% off where we closed yesterday, Ilya, prior to the earnings coming out. So all things considered, I mean, this stayed above water better than most other things today. I find it interesting that on the other side of that huge not typo for 4Q, and
whatever that was.
Whatever that was. The market isn't scared away from Google. Google absorbed that big CapEx spending number pretty well today. And the market seems to have somewhat of a tolerance for it under the right circumstances, not an Oracle circumstance, perhaps, but a Google circumstance here. So just keeping an eye on the winners and the losers right now. What's lagging on the way down probably are going to be the things that are leading on the way up, given their relative strength. But I think we can't have much more of a conversation today without touching on 2 things in particular. I'm just going to go to the watch list side of our platform here and give a little click over to the top performers by change percent today. And in fact, we're going to start with the underperformers because there are a few things that are double digits, which always pique our interest.
Yeah.
And you can't say that on the upside. So let's just start with the losers here. We have our micro XRP futures down 23.6%. We have our Ethereum futures down 13.59%. We have our silver futures off 13.4%, and our crypto off 13.5%.
Yeah.
Crypto makes up the predominant majority of this list. You're short Bitcoin. I'm no longer involved in a trade following the continuation lower that we saw coming into today's session. So I took my loss on the chin. I moved on. What's the plan here? As someone who's short, I'm sure you're feeling the feeling that I felt when gold and silver were rallying in the fourth quarter. I wish I was long more. So I'm sure you wish you were short more, but chasing is not an option. Chasing is not something we do around here.
No.
At least we try not to.
No.
So you're going to be staying short, it seems like.
I am.
What is this all about? Why crypto winter, crypto ice age? Why is this happening today on all days that end in Y?
I don't think it's happening today. I think it's been happening. And I think the thing that's been happening seems to sort of get extra legs today, because today is really about that kind of thing. I think the more I kind of try to contextualize the slide in crypto going all the way back to October, where is the peak in crypto? It's at the same time, roughly speaking, the most recent peak. It's at the same time, roughly speaking, as the Fed tells markets you are over extrapolating rate cuts. It's about the same top as the S&P. It's about the same top as NASDAQ. But when you look at the way that the top looks sort of across all of these, obviously it would be weird to look and say, oh, well, this is some sort of long dollar narrative. This is some sort of narrative about the Fed being more hawkish. Well, markets didn't necessarily believe the Fed. And crypto topped a little bit earlier than the Fed meeting. And so you could start to get into these granular conversations. But the bottom line is that sentiment positive assets topped in October. And they topped in October around the Fed telling them, you're over extrapolating how many rate cuts you think are going to happen. You think we're on autopilot, and we're not. And I think this goes to the heart of why the markets wanted those extra rate cuts and why they wanted them faster and why they still want them faster than the Fed wants to deliver them. And it's because of policy uncertainty. I mean, we went to 59 basis points on the tally for this year today. And for next year, there's actually now 15 basis points in hikes baked in.
Glorious.
So the markets are looking at this and going, yeah, we see the inflation, but this is too rocky. We need rate cuts, and we need them up front. And it's not that we need them because the economy is doing poorly in aggregate. It's because there are too many weird things buffeting markets. Too much can go wrong. And in an environment where too much can go wrong, your anti-fiat alternative isn't digital tulips. It's gold, as we've seen. And Bitcoin isn't that. So when you get the kind of a thing that you get today, which seems to be a pretty broadly risk-off day, you end up with Bitcoin doing this. Because this kind of risk aversion speaks directly to why somebody might not be comfortable in anything experimental at the moment. Of any stripe, not just Bitcoin. I mean, stocks are seeming to fall within that same conversation, but the NASDAQ is underperforming because the market is saying, you know what, anything where I have to have faith in anything, where the argument goes, this is the future, trust me, I don't want any of that.
Yeah, I'm thinking about the quantum computing space today. IonQ down 13.94%.
Same exact thing.
Qubits down 14.45%.
Same exact thing.
Quantum computing, 14.51%. Rigetti computing,
take a look at Dow.
What's Dow Jones?
Not so bad.
Not so bad.
Not so
Relatively
bad.
speaking, only 1.3%. Yeah, it's all, the software names are continuing to get killed. If you're in CRM, Adobe, Intuit, Oracle, SAP, it's all bad.
It's all in the areas where you have to have a belief in the great and glorious technological future, the super glide, as it were.
Well, we talked about this a few days ago. I've seen a lot of people talking bottom picking in, the software ETFs. And first off, the momentum here is terrible. We haven't yet touched the April low, and it seems like it's gunning for it. But if you're looking at valuation metrics now, one of the more difficult things to do, trading is a different thing than investing. So this is more of like an investing thing. There's going to be a point where it bounces and traders are going to do well getting long for a very short window of time. But for those longer term bottom pickers, you have to run the thought exercise here. If you're looking at historical valuation metrics, the late 90s through the 2010s is, peak software, so to speak. Software eats the world, as folks, I think it was Mark Andreessen said that. And if we have now moved beyond peak software, the 10, 20, 30, maybe even 40-year PE ratios that this industry has been built around and has revolved around, maybe they're inappropriate to base history upon, right? Maybe it's not the right way to model out how things will be moving forward. We've seen industries go from having historical PEs in the 20s and 25s down to the low teens, through various windows because they just mature and they get boring and new technologies come out. Imagine being a stock analyst in the late 1800s or 1900s, Ilya, when you see that cars are coming out and you're thinking like, well, horses aren't going to die. We're not going to kill all the horses. So like people are still going to use horses and buggies. The valuations on these things have got to be good at a certain price level, right? But trying to value the horse and buggy industry when the automobile's out using historical data would have been worthless. Yes. Because the automobile consumed everything else. And so for trading is a different story than investors. I just see so many traders in my feed, and I follow a lot of folks who are ostensibly tasty viewers. And I even see some of them talking about like, I'll take a long-term position in this, that, or the other thing. I don't know. We mentioned everything coming off the board right now. It's things that are being punished by AI. It's things that are telling too good of an AI story that the market doesn't believe anymore. It's the things that are telling stories that are clouds in the sky, like launching, cloud computers and nuclear reactors in space and having the data centers in space. Just the feasibility of doing that. I was talking to my cousin about this recently, who works for Raytheon. They're pretty good at designing things that rockets, for example. And he works in their space division. And he pointed out to me that it's not simply just launching the computer into space. It's going to have to survive all additional radiation, the stress of the rocket launch. I mean, like it's not like having this on the ground on Earth. It's not a 1-for-1. Let's put these servers up in the atmosphere. It's a totally different ballgame. So, do you want to take a chance at calling the bottom here? I think the narrative aside, and I really want to get away from the narrative here, let's talk about the structure of the markets. If people, and we know they're out there, because I think there are two of them on the screen here right now who are thinking about what's the best way to make a lot of money in this market. Because right now it's been to the downside. But the characteristic of the downtrend is what, as a technical trader, I think you care most about. Yeah. And while we have typically the 1 week, the 1 month, the 50-day on this chart that we share here on Overtime, I would posit that it's not so much those moving averages we want to watch, but we want to identify a moving average on a lower term time frame that momentum has been respecting. And so for now, right, as I tinker with this, I can't help but notice if we were to do something that's kind of equivalent to a little bit more than a little bit more than a 2-day moving average or a 1-day moving average, but a little bit less than a 2-day. That's kind of the sweet spot here. If we're looking at the 4-hour time frame multiplied by the 5 EMA, that's 20 hours, or 4 by the 21, that's 84 hours. Somewhere in here lies our 2-day moving average. right? 24 hours. And we've been riding this lower the entire time. It feels like until this particular technical structure is broken, you could use the 4-hour, you could use the 8-hour. It has not given up just yet. So until you see that in a Bitcoin and an Ethereum, there's no reason to think that the selling pressure is finished here. Now, why that selling pressure exists, I don't know. We don't need to pick a reason right now. But in Bitcoin, volatility is going up. That's going to be very tempting for a lot of folks, particularly in Tasty Nation with the 170 IVR. Until we see a reason for this. Is it Warsh that did this, Ilya? Bitcoin's down 27% now.
Warsh. No.
Excuse. All right.
Yeah.
Oh, we sound like Tom right now. The Fed did this. No, it didn't. It was an excuse to do it. Oh, God.
Well, I mean, sometimes the Fed really does announce something different, and sometimes the markets are just waiting for the event risk to get on the other side and do what they want to do. This is why you follow the macro narrative. This is why the macro narrative is not irrelevant or an afterthought and already priced in. Because you couldn't know what's already priced in until you got on the other side of a big enough event risk. It's the reaction to the event risk that illustrates. So you get a rate cut, let's say, but the relevant currency rallies instead of falls. Well, you know the rate cut was priced in. And now you can use that insight from the price action to look at what you think might happen next. But you need both pieces.
Not going to try to pick up the pieces again until I see a turn of momentum. Had I followed that rule here recently, Ilya, even at the end of last week, right? We never saw a break over some of these short-term momentum levels. Every step down we've been following. Here on the 8-hour chart, we can call that the 5 EMA. So roughly speaking, a 40-hour moving average.
The latest re-up on my short here, I'm doing it through IBIT puts, was 7 days ago.
Good on you. Maybe we don't have enough, but where do we keep falling to, I guess? Like, where would a real source of demand come into play for crypto? You know, the thing about these markets, and I've had
it's a tough call now.
It's a very tough call now. In part,
it's a tough call now. I mean, we're looking maybe like 49,000.
Yeah, and that's the scary thing here, because Bitcoin itself, right? They don't have true fundamentals. You can do all sorts of on-chain analysis and look at transactions and
blah blah
Glassnode, blah, right? These are just things that people have invented. The only reason why anyone believes in anything is because enough people believe in said thing. So
right.
Why does the
53K maybe? Let's be generous.
But like, why do any of these levels
54.
matter? Consensus. So when we have our run up in 2024, resistance, immediate support on the way down in April.
Yeah.
We just sliced like through that like a knife through butter.
Yeah, I mean, looking at all those metrics you just mentioned is a bit like people who look at a fundamental view of stocks and go, here's my thesis based on valuation and financials and blah, blah, blah. And it's like, well, that's great for a 4 or 5 year thesis, maybe even a 1 year thesis. But from a trading perspective, month and a half in type of thinking, you know, average, let's call it 6 weeks in a trade kind of a thing. Classic Tasty methodology, which actually lines up pretty well with how long I usually hold my winners, give or take. And then I'm out of a loser within, let's say, 2 weeks' time, give or take. That kind of thinking isn't really relevant. It's the price action. And the markets know this, and this is why you see them respecting key levels like this, because everybody's looking at the same thing. This is the holy grail of technical analysis. When everybody sees the same line, and it doesn't matter if the line has any empirical validity at all. What matters is that everybody's going to look at the break and go, oh, it broke, and sell on the other side.
Yeah, and where are you finding support if you're a technical person here? You can make an argument, start of 2024, swing high 49,000, mid 2024.
Yeah,
49,000. That's ugly. Hey, you know, for the sake of conversation, maybe this is something we should have taken a little bit more seriously, but that 4-year halving cycle, Ilya, April 24 is when it comes to an end. And we've noted here on Overtime before how you take 12 to 18 months and you slap that onto April 24, and that brings you to October 25. And October 25 is when this peaks. So for those believers now, and it seems to be self-fulfilling more so than ever this time, if you are following crypto winter stats, how long have the previous, 4-year cycle sell-offs lasted? Well, the bear market from the November 21 high to the November 22 low, that's about a year. It's 376 days. What about 2018? Well, it bottomed in 2018 after 363 days. So this could be a rough 7 or 8 more months here, Ilya, if we're following the typical cycle. So let's follow the charts and the technicals. There may be another historic buying opportunity around the corner. Before we get there, though, there was something that I saw, and I'm curious about your take on this. Maybe it's going to have to wait until next week for overtime. But someone on Twitter I follow, this guy Bob Kendall, who goes by @PortfolioX with an expert, he pointed out that the original premise of Bitcoin, that there's scarcity in the asset class, no longer exists. The finite supply of 21 million and the inability to be rehypothecated is the substantiation of the entire valuation logic. That died when we had cash-settled futures, perpetual swaps, options, ETFs, prime broker lending, wrapped BTC, and total return swaps. All that's layered on top of the chain. And so because of that, the supply of Bitcoin becomes theoretically infinite, on paper at least. One Bitcoin now supports an ETF unit, a futures contract, a perpetual swap, an options delta, a broker loan, and a structured note all at the same time. Do you think that Bitcoins, and I know we only have a minute here, so it warrants more than a minute, and we'll continue this conversation next week. Do you think that the value proposition of Bitcoin, finite supply, is broken thanks to over-financialization?
Yes, in a word, but we've talked about, not necessarily in those dramatic kinds of terms, but yes, because as we've said, the entire premise of Bitcoin, anonymity, non-sovereign status, all of these things basically go out the window the moment you make it a regulated, like all the others, type of asset, and that's exactly what's happened. But the majority of people that own Bitcoin don't own the coins. They own some derivative, or at least are moving volumes through some derivative, and that derivative is regulated and on exchange in a lot of cases.
It's funny we say that, because when you tell a Bitcoin person, like, oh yeah, I own Bitcoin. Oh, really? Where do you keep it? Well, it's technically IBIT. It's the same reaction you get when you tell
it's
a gold person.
It's an ETF.
You're like, oh yeah, I own gold. Like, oh yeah, how do you store it? It's like, well, it's GLD. And they're like, oh no, you're not a real.
Yeah.
Ilya, we're out of time here in overtime for today. Tomorrow, I've had a really rough week trading. And for that, it's as good of a day as ever to not trade. I'm out tomorrow, Monday, Tuesday, taking a brief vacation, getting away from the market, which, quite frankly, folks, I know that they don't want us to tell you this on air. If you're having a bad run, step away, reset, take a break. And so I've had a bad run here, and it's a good excuse as ever because it dovetails with the vacation. So I'll see everyone next Wednesday when I'm back in the country. Ilya, good luck trading. Everyone else, good luck trading. But stick around here because Macro Money with Ilya is coming up next. You're watching Tasty Live.
See you there, everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It is a bloodbath across the financial markets today, seemingly everything in the red. We're going to try to figure out what's going on and what it means going forward. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. We've had an interesting shuffle as far as economic data is concerned this week and news in general. But we do have a couple of things to take a look at here and consider. And then, of course, the price action first and foremost. So let's jump right in. No time like the present, as it were, for this sea of red, which, of course, is dominated by Bitcoin. It's off an absolutely eye-watering amount here, in excess of 13% in a day. It's not much better if you look at the likes of, let's say, silver. But for Bitcoin, this is a story that's been ongoing for some time. It's been particularly beaten down against the other major assets. And if that were, in retrospect, some sort of a sense of where risk appetite is heading, that is attempting, again, in retrospect, thing to conclude that this was some sort of a leading indicator, because what we're looking at here is clearly a broad-based level of pain. And that now comes for pretty much the entire spectrum. S&P down 1.5, NASDAQ down almost 2, 1.85. Yields are off across the board as more rate cut expectations enter the picture. Crude oil down in what looks like sort of general sympathy with the risk off theme, although the broader rally established here in crude oil over the recent weeks around the geopolitical headlines, that is still very much intact. So if we take a look at what's going on here with crude today, then yeah, it's kind of within the broader story, but it's also hovering near some of the highest levels since back in August of last year. So the up move from right around the beginning of this month in crude, that continues to be in place. And we've talked at length here as to why that's there. It seems to be mostly about disrupting Chinese access to sanctions busting pennies on the dollar crude from the Russian shadow tanker fleet, which the U.S. and now France are hunting, and simultaneously the teeters in Iran, as well as, of course, the decapitation in Venezuela. Now, the dollar is a little bit stronger here, although not in a panicky sort of way where you get the sense that there is a wave of liquidation in front of us. Euro off about 0.3%, yen off about 0.2%, gold a little bit lower, but again, holding the broader outlines of its upswing from the lows that we saw at the beginning of this week. Of course, gold had quite the meltdown on Friday last week. It tried for continuation Monday and then bounced on Tuesday this week. We're now basically holding those Tuesday bounce levels. So we're a little bit lower today. This sort of jives with the idea that gold has become a speculative narrative onto itself, an asset that brings into it sort of the collective concern about deglobalization, and in that represents a non-sovereign way to move value. If, for example, the US or China or both or some other actors were to weaponize their currencies, weaponize their financial systems in this environment any more than they've been kind of on and off used that way in recent years already. Of course, Russia provoked a response with its invasion of Ukraine. Iran has provoked a response with its various international adventures, be it support for Hamas and Hezbollah, both now almost thoroughly defunct, or support for the Houthis, or sort of various other endeavors in South America. So the situation seems to be that the story in gold kind of looks speculative, but is holding up through this test of appetite in that narrative. Crude oil is off, but is holding up generally where that narrative is concerned. But the situation in Bitcoin is looking much more dire, and the situation in stocks, and in particular in tech stocks, looks much more soft-footed, in the sense that the NASDAQ, with this decline of almost 2%, has now taken out the range that sort of crystallized between the beginning and the middle of December of last year, where NASDAQ kind of found a middle ground just above the 26,000 mark at the top side, and just below the 25,000, maybe about 24,900 on the downside. Those are the lows from mid-December. And we've broken through that now. And so the next kind of touch point on the NASDAQ starts being sort of the mid 24,000, low 24,000 area if we get to the lows from November of last year. November the 21st is that day that we hit those lows, and that gives us on the March contract a low of 24,153. So not too far from that now. And of course, a break of that would basically challenge all of the up move for the past, let's call it, 4 months, or at least all of the uptrend that existed into the run up to October's high, where everything kind of stalled, be it Bitcoin or the S&P or NASDAQ for that matter. As far as the economic data today is concerned, it really wasn't where the story was until we got into the U.S. session. Things were a little bit feisty in Europe. The Bank of England policy announcement was a little bit more dovish than expected. We can see here the expectation was that there would be a greater consensus in favor of no change. So the bet was 7 out of 9 would vote for unchanged and only 2 would vote for a cut. It ended up being a much narrower 5-4 split on the committee, even though rates were held unchanged. And so we can see here the markets now expect a more dovish Bank of England going forward, 45 basis points on the menu for this year. So we moved from being maybe about 50-50 on a second rate cut this year, maybe just one and a 50-50 shot of 2. Now we're overwhelmingly pointed in the direction of 2 cuts. And we can see here that the British pound took it on the nose as a consequence. We're at an interesting inflection point now for the pound, where this pullback might well be the place where the trend higher here catches. Maybe there's a dollar selling opportunity that emerges here in the coming days, but of course we'll have to wait and see. For the euro, no big changes expected, no big changes had. The ECB basically saying a bunch of familiar things, but not ultimately taking policy expectations very far. We had a 2% deposit rate. It looks like we're going to have one through the rest of this year. No changes expected here from the futures. We can see a whole big 1 basis point of change on the menu. So markets think that the ECB isn't going anywhere this year. And not surprisingly, the euro is steady, unlike the pound, after that policy announcement, and sort of in a similar way seems to be digesting a pullback. And maybe this ends up being a similar sort of platform for advancement. The larger issue really comes when we get into U.S. economic data. And this is really where things start to get dicey. The first thing that, of course, we get today, government shutdown notwithstanding, is jobless claims data. And here is where kind of the bloodbath starts to hit. So we get the highest reading for the 4-week average for initial jobless claims in 5 weeks. So we're back to over here. And of course, the trend still remains. It still points broadly lower for initial jobless claims, but it does mark an important increase and an important change of pace. And needless to say, that raises some questions about just how much of the easing that the markets want here are contingent, if you will, on wanting cheaper liquidity, relatively benign ask that the markets have had for a while, versus a desire for backstopping the economy. Now, the markets already worry, not surprisingly, that we have a situation where the rate cuts are insufficient. We'll take a look in a moment as to why they think that. But they've thought this for a while, and that's while the economy looked relatively strong. In fact, after these most recent cuts late last year, the Fed has kind of backed off and said, okay, we can hold for now. The economy has surprised us with its strength. Well, if the weak labor market was the reason to cut in the fourth quarter, this seems to be one step in the direction of maybe we need to keep cutting because maybe the economy is not as strong as it seems. Similar thing for job openings data, belated job openings data out of the US. Here we have a drop down to some of the lowest levels since about the middle of 2020, maybe the second half. And that, of course, raises another important question because we have a situation, again, where we get these rate cuts for ostensibly job-supporting reasons, but even the Fed has loudly said it's not like people are getting fired. It's not like the economy is weak and that's creating layoffs, and if only we created cheap credit, businesses would hire those people back. They're not firing them. Job openings are not up, they're down. It's just they're not hiring them. And so that really seems to be the issue here, is that the growth picture looks relatively good. The sort of capacity for the economy to mint money, to create growth, that's looking good. It's not looking good for jobs. In fact, just earlier this week, we got the ADP data. This is from Automatic Data Processing, an HR data firm. And we can see here at 22K, first of all, lower than expected for private sector job creation. And second of all, a 3-month low. Now, this is the other side of it. This is that economy that's booming. We can see manufacturing back to growth for the first time since 2022. The overall economy really singing here, but in a jobless kind of way, in a way that is not creating job creation in excess of what's already there. Again, there's not a whole lot of firing. That's despite the increase in jobless claims. But perhaps that's really what animated the markets today. Those jobless claims numbers suggested maybe the firings have commenced, or perhaps maybe it's just not good enough. And so what we ended up with then today is an upshift in Fed rate cut expectations. Here we have that on display. Now the markets have 59 basis points on the menu for this year, and they've thrown in 15 basis points for next year on the plus side. That is to say, we're almost at a 50-50 shot for a rate hike next year. The median path we can still is basically unchanged here at 44 basis points, but the markets clearly want more urgency with stimulus this year. In fact, they've moved up their logic. The first rate cut still around June, which is where it's been for a while now. But the second one now in September, which is up from October yesterday and was around December for much of the few weeks here in the recent past. So this is looking like a situation where the markets have meaningfully dialed up expectations for stimulus, expecting something to be perhaps coming unglued. That starts to explain what's going on with yields here. And of course, this comes on top of what the markets were already concerned with. As we see here, the markets have wanted these two rate cuts, here's minus 50 basis points right here, since basically the middle of last year. That's where these things kind of anchored. And then we've oscillated between maybe 2 cuts, maybe 3 cuts. But that's really where the markets are. Whereas the Fed, as we've pointed out a lot before, since June has been at 1 cut for this year, 1 cut for next year. And while together that looks very similar to what the markets are calling for in aggregate, they want the easing now. And if that means there has to be give back later, fine, for all manner of inflationary reasons, such as the strong economy, such as rising oil prices since the beginning of the year, which have about a month's lag into CPI. So perhaps February's CPI numbers should start to show the jump in oil that we've seen in January. But at this point, before you get into all of that, the markets want the easing up front. And it isn't growth so much as it is, as we've talked about, uncertainty. And not surprisingly, we can see since the beginning of the year, trade policy uncertainty has gone up again because we've threatened China again. We, of course, threatened Europe again. We've introduced all of these fissures into the oil market with our actions in Venezuela coming on top of the fissures that appeared in the oil market all by themselves around the situation in Iran. You could, of course, argue that what's happening in Iran now is the culmination of weakening persistently, basically over the past 3 years or so, through collective action by the U.S. and also by Israel in dismantling many of Iran's terror group proxies. But nevertheless, it is the rise in crude oil now that seems to be capturing the imagination as all of these pieces come together. And so you get this pickup in uncertainty again. We've said before, that uncertainty is bad news for global trade already. In 2025, it already gave us the first decline in global trade volumes since 2020, and the largest one since the 2008 financial crisis in year-on-year terms. And of course, we already pointed out at length that all of this is very dangerous for the very narrative that the market most clearly relies on, AI, which is a very global supply chain. And the more that you get in trade policy uncertainty, and policy uncertainty in general even, the more you get of a threat to this very thing, which represents the majority of market cap in global equity markets, not just even the US markets, and which has been responsible for the melt-up in U.S. equities for the better part of 3 years. And you can see here that if you have disaggregation in global supply chains, well, then this becomes very difficult to work. Because if you have tensions with Europe, if you have tensions in Asia, if you have the U.S. putting moats around itself, well, then this doesn't work. Because it's a very split up supply chain, lots of dependencies on each node, especially the big three, North America, Europe, and APAC. You need seamless trade. Most of these are single points of failure. Just think about lithography in the Netherlands, say. And so when you look at all of this, you start to see why trade policy uncertainty inspires the markets to want rate cuts, not so much because something is per se wrong, but because something might go wrong and there's no safety net. And so the markets say, well, you know what, the economy might be doing fine, but the rubber band has been stretched really far. We want these rate cuts so that if we wipe out in the markets, it'll be cheap to borrow back and go again. Well, if the growth story is starting to come around here, then perhaps we're looking at a situation where the market is that much more inspired to want protection. Because if this is now what's going on, if we're starting to see layoffs become a thing, well, then we're going to have an issue, because 68% of the economy is consumption. And you might have the capacity to grow fast without meaningful labor growth for a while, but when it hits consumption, then growth is out the window. And in that sense, we're going to be very focused on the University of Michigan consumer confidence numbers that are going to wrap up the week in data flow this week. We are going to be looking at what happens with inflation expectations here. But we can see, despite the slide in inflation expectations, sentiment has really had a hard time it crumbled, of course, in early 20 to 25 as we got these inflation from tariffs scare right here and fell back to essentially post-COVID bottoms. It's still holding around that area, and it's having a hard time recovering. Now, the third quarter was relatively decent for consumption. It came back in a good way versus being very soggy in the second or in the first half rather of 2025. But now, if all of this volatility gives us a crunch in consumer sentiment, we can see the expectation is for a little bit of a cool off. But if this starts looking more dire, then we're going to be looking at a situation where the markets are ever more concerned about the business cycle. Scarier still, if this dynamic holds up and U.S. economic data actually beats relative to forecasts, not unlike the ISM data that we saw this week, and the sentiment data ends up rosier, well, then what rate cuts is it that we're talking about, really? And maybe we put to bed the cyclical concern in the immediate moment, but the markets still want those cuts. And if something comes out that appears to say, oh, well, now the data is not uniformly good, but mixed, and the cuts look still no likelier, that's no good for sentiment. And so positioning-wise here, I am looking still at the long side here in the euro. I got out of the pound position. I would like to reopen it. It ended up being a trade that actually made a little bit of money because I bought it lower than where it fell to after the BOE today, but only a very little bit. And so I'll be looking to reestablish if it holds around here. Still on the short premium side of gold, which appears to be holding for now. And as long as it continues to shed volatility, this should be okay. I covered my silver short, though, because we fell back to the lows there and tried to anchor. So maybe this is some kind of a bottom, or at least a place to hold for now. So having shorted silver a couple of days before it crashed last week, I decided better to leave well enough alone and take the money there. So took that off the board. Still short Bitcoin, though. Plenty of time left in here. And of course, down 13% is what you want to see if you're short. So far, so good. I re-upped on my NASDAQ shorts. These were expiring in 22 days. So I covered that position, took those profits and put on some new puts here, 50 days out to give myself a little bit more time. Still sitting on these S&P puts. I haven't re-upped those yet, but that'll be something to do if this momentum continues. Still long crude oil, which is a little bit soggier, as we said, for all the risk aversion today, but ultimately holding the larger story. And so I'm going to be looking for that to continue. I think there's still quite a lot of supply glut expectation to work off here. And although yields fell today, it's not obvious that we've crossed a Rubicon of some sort. And so I'm still short a little bit at the belly of the curve and at the long end because it's possible here that this U.S. economic data continues to hold up and rate cuts go out the window, and so yields come back up. So not all the way out the window, of course, but that the markets will diminish their rate cut expectations. So still holding that, but reluctantly and with a close eye to what happens next. And that is Macro Money. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go there from. I am also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money will return next week. In the meantime, happy trading.